of breaking up large shipments into small, under $800 bundles, dodging all the tariffs entirely, and that's what got the attention of the administration. 70% of the value of things brought in under the de minimis rule were from China. These are low-cost retailers, and Americans liked the prices.
Today I am doing another huge Temu haul. This one is massive.
2 leggings for like $9.
Let's see if we can make it rain. 3, 2, 1.
President Trump may have taken away a strategic advantage for Shein and Temu, but small business owners like Harriet DeWinton say they're also paying the price. A price that began simply with confusion about how it would all work and what it would mean. What has that done to your business?
It's had a really sizable impact on the business, starting with the beginning of hearing about the news and, in all honesty, being in disbelief that it was about to happen. About 60% of DeWinton's online sales came from the U.S. After a transition period when the U.S. imposes flat duties on all shipments, ultimately everything she ships to the United States, apart from books, will be subject to tariffs, calculated as a percentage of the item's declared value, depending on what it is and where it's from. Confused? So is Harriet. It felt quite uncertain and unclear as to what the actual facts of the exemption ending were going to be. So we very quickly started just trying to research as much as possible. That's the best thing you can do, isn't it, when change comes. We're used to change, and we act nimbly on our feet, but this one was just a little bit difficult to get a true sense of what it was going to mean for us. We realized that we needed to shut our shop entirely towards the end of August, just so we could see what it actually meant. Rathna Sharad built her company, Flavor Cloud, to help businesses like DeWinton's navigate this shifting trade environment.
So really, most consumer purchases are under the $800. So we didn't need to have formal customs declarations, didn't need to have additional data around, what exactly is coming into the country. So typically trade requires harmonized commodity codes. It basically allows for the customs official at the border to say, what are you bringing into the country? What is the value of those goods? Where was it made? What that allows the customs official to do is then assess duties, taxes, and fees. Typically, that also includes tariffs in this case. And that's being assessed now on goods of any value. So regardless of where you source and bring the goods from, you are seeing a massive implication with de minimis.
For small businesses like DeWinton's, the end of de minimis came as a surprise, but insiders say it was a long time coming, with the U.S. standing out for years with one of the world's most generous thresholds at $800, far higher than in Europe, Canada, or Japan.
Ultimately, all governments want a piece of the tax revenue. So as global e-commerce has grown, cross-border e-commerce has grown, and it is a continuously growing pie, everyone wants a piece of that pie. So we've seen that happen around the world.
But economists warn the real shift will be felt in the pocketbooks of American consumers.
This is the hard truth that the administration really doesn't like to face. Tariffs are taxes on imports, and they are paid by Americans, either businesses or consumers. It is their hope that foreign producers will cut their prices so that the net cost to the consumer doesn't go up. There's no evidence that that's going to be the case on a large scale, and so if you put the tariffs in place, and we have a lot of tariffs in place now, about $380 billion a year, that's a $380 billion a year tax increase on Americans. This is a highly distortionary tax. It's going to force all these small businesses to change the way they run their operations and impose a lot of costs on them. You look at whether it's a fair tax. These are regressive taxes paid more by small businesses and low-income individuals. And it's an incredibly complicated, expensive thing to comply with and to administer. It isn't the way you want to raise a lot of revenue.
Head to Etsy to get both of these. We are selling to the USA again. hallelujah. So we've been looking at all the options, and my main focus is to remove the hassle for the US customer because they're so important to us. So we've decided to pay at the source with Royal Mail for the time being, and they do a service where we cover the cost of the tariff, and then it's down to me as a shop owner to decide where I make that difference up. So we've looked at just increasing our shipping costs a little bit, and in one or two examples we've just slightly raised the price of the product itself to be able to stay in business. If you haven't already had this land on your doormat today, then no worries, because I'm going to show you how to do this tutorial.
Viewed through the broad brush of the economy, it's all pretty simple. Costs have gone up, and so too must the price. But for Harriet de Winton, who has now reopened her online shop back in Devon, it's not that easy. Do you have a sense of the long-term effect on your business?
Well, I do think just returning to people's consciousness as the seller they want to buy from is going to take a bit of time. And my hope is that we sell a number of products that are unique to my business, and I'm a trusted voice on the internet when it comes to art supplies and watercolor in particular. The American audience have been a really, really important part of De Winton Paper Co., taking it from just working down in Devon in a lovely little cottage and reaching out to the world. I've just found that the culture of watercolor painting in particular has just been embraced so much by the American audience as well as the rest of the world.
For her, it all goes back to the passion and people who have turned her art into a global community and a global business. She hopes that both will endure, no matter the costs. Coming up, AI is coming to a schoolroom near you, if it isn't already there.
People come to me all the time now and say, oh, if you bought a sports team, maybe you'll buy this team or that team.
You need to have faith in something that you believe in when no one else is believing in it, and that's the time to go in, as opposed to when everyone else says this is the greatest thing since sliced bread.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
This is the second story in our series on artificial intelligence. This is the second story in our series on artificial intelligence. This is the second story in our series on artificial intelligence. This is the second story in our series on artificial intelligence. This is the second story in our series on artificial intelligence. This is of workers, the one that we all remember from our own childhood.
Whenever I talk to people about their experiences in education, they always name this one teacher who was so influential, and they got into this discipline because this teacher was amazing and they inspired them. Where students said, what?
Professor Shamya Kurambaya now teaches those teachers as a professor at the University of Wisconsin. She lives at the intersection of education and tech, focusing on the application of artificial intelligence in America's classrooms.
We know that teacher in the front of the classroom and students in front of their laptops is not a model that works. It's broken. Last couple of years especially has been very exciting, and I would say the big change is the ability for teachers to customize what's happening with AI.
So what I want you to look for on your Kira dashboard.
Lance Key is one of those classroom teachers adopting and adapting AI as he teaches computer science in the Putnam County school system just east of Nashville, Tennessee.
Computer science curriculum, they've really gamified it, and they made it colorful and engaging and exciting for the students. And also, you know, inside of there, if they try to do things that they can't, it again will redirect them. It'll give them, oh, there's an error here, and then they can go to the chat bot and try to work through what the error is, and then it'll redirect them to where they need to go.
I think the big opportunity that stems from AI in the classroom is the ability to personalize instruction to individual students.
Andrea Passanetti is co-founder and CEO of the company Kira. It provides the education software platform to Lance Key's classroom, as well as to many of the largest school districts across the United States.
With AI, a teacher has an unlimited number of teaching assistants to support that process. And the teacher can provide guidance, guardrails, and guidelines on how to provide that support to students. That looks like students working on a terminal and having an AI tutor that they can query either in written text by typing on a keyboard or in spoken word by speaking directly to the terminal on the computer.
The AI chatbot.
That personalization is something that Key is experiencing every day in his Tennessee classroom.
It allows me to have a more personalized relationship with my students in the classroom. Before, there was one of me, and for every question that came up, I was like bouncing around the room, just answering questions all the time. But now we've got, you know, a tutor that can help them along the way, and I can build personalized tutors for them too. So if it's on a specific content area, I can say, okay, today we are working on solving two-step equations. Here's a two-step tutor that my students can work with alone, and they can ask it questions. So then I can walk around and then one-on-one check with students. I've also got a dashboard on the backside that will alert me if there's a student that's having problems. So then I know real time that I need to go check on Johnny or Susie.
Over and above that personalization, AI can also provide teachers like Lance Key with some much needed relief.
My wife previously was an English teacher, and I recall grading essays being very daunting for her, because she would have to score 150 essays every time that they wrote an essay in the classroom. So using a rubric, being able to upload our district rubrics into Kira, and being able to use their grader off of that rubric, but also their AI detection, their plagiarism detection, and their feedback writer has been amazing. So we can load all the papers up into that. It will score it all for us. It will give us all the feedback, and the teachers can then just review it. And I think that's the big thing that we can focus on with AI, is the time that it gives teachers back in the day. By 2030, we're going to need to hire 30 million teachers, because we got teachers retiring and people not going into the field. So we're going to have a teacher shortage that's coming, along with a high burnout rate. So I think AI can help us with some of the repetitive processes that we do over and over and over again.
For all its promise today, it turns out that the use of AI for education isn't all that new. While large language models are only just making their debut in schools, other forms of AI have a long history. How long has either artificial intelligence or maybe we should call it machine learning going back. How long has it been used in the classroom?
You'd be surprised how AI and education, uses of it in education, have a lot of common sort of origins. And so I come from an academic background where my advisor's advisor back in 1980s was creating what we now call as cognitive tutors that were being used in Pittsburgh classrooms. And people have studied, there's work done in the 1990s on ethnography, basically, of how teachers are using AI in the classroom. What does introduction of AI in the classroom change in the social structures, student-student interaction or student-teacher interaction?
It's only in the last few years that AI has developed to the point where companies like Kira can put it to use in the classroom. According to surveys by RAND, as of the 2023-24 school year, a quarter of all U.S. teachers were already using AI to teach students. And Passanetti says the key is the conversation.
We use AI as a catch-all term for a lot of different technologies. In reality, what's happened with the most recent wave of AI, with LLMs in particular, is a more discursive medium. So AI now, unlike even 3-4 years ago, is able to have real conversations with students. It's able to engage with students on a level that feels more human in some respect. We founded Kira 4 years ago, before AI was popular. AI wasn't cool. It seemed premature. And in many cases, it was entirely verboten. There were a lot of districts that said we can't really be talking about AI with parents because it gives them a lot of anxiety, or there's a lack of understanding about what AI can do. And so the whole conversation would die at the very beginning. So I would say there's been a radical shift where that anxiety and resistance has given way to curiosity.
And some of that curiosity has turned into plain necessity as school districts across the country struggle to deal with teaching students in a multitude of languages.
It's important to bring students' home language into their classrooms. A very promising benefit or opportunity for AI here is to bridge the gap between the language that the teacher speaks and the different languages that the students in the classroom speak. 32 states in the United States reported that their students speak over 200 languages, and these 32 states have a deficit of bilingual resource teachers. So there are all these opportunities out there in terms of what's already working in the classroom, but there is limited human resources.
The number of districts that can now teach languages like Mandarin or Arabic or French and Spanish, where historically it would have required teaching or hiring a native speaker of that language, and as a result been much more difficult to achieve for a district. The ability to do that now is immediate. Districts can leverage AI tools to teach a new foreign subject or a foreign language as a subject in a way that they couldn't have in the past.
For all its advantages, the widespread use of AI in the classroom is not without its risks. Risks we've all heard about with other applications of AI, things like hallucinations and bias, but also risks that are unique to education. A Pew study from last year showed that a quarter of teachers think AI tools do more harm than good in the classroom. Only 6% say AI is beneficial.
Any piece of AI that is generating text, anywhere where it is student-facing, you have to be careful about the implications hallucinations have in this specific context of education. The goal in the classroom is for us to help students learn. Hallucination is absolutely detrimental to students learning. Any sort of misinformation, I would also talk about potential biases, potential, toxic content, the kinds of any kind of text that the AI is generating that is harmful for students' learning and well-being.
But perhaps a greater risk with AI applied to the classroom is the risk of expecting too much of it.
AI is a tool like anything else. It has very, very real limitations. The fact that it's discursive and it resembles an interaction with a human in some isolated cases makes it feel a lot more advanced than technologies we've interacted with in the past. But as of today, AI's boundaries are still limited, and it's very easy to overstate. There's a lot of hype. It's very easy to feed into a narrative of fear. But the reality is AI is still answering fairly discrete questions being asked by students and supporting teachers with the answering of those questions. I think students interacting with computers one-on-one is definitely something that schools, district teachers, parents, students themselves need to be careful of. It can take students out of interpersonal relationships. It can dull students' abilities to interact with their peers. So AI is by no means a panacea.
Over 90% of innovation in AI for education fails. I believe that it is because they do not consider what's the kind of practices that's happening in the classroom, and it's built in this black box. Second is also, often in computer science, I have a background in computer science, often we make oversimplifying assumptions about real world context. So we are sort of assuming that these factors do not play a role, and we build a system for this ideal context. But real world classrooms are far from ideal. Students have very different needs. There is a lot of learner variability. They come in with a lot of preconceptions that often is hard for us to catch right away.
So, with all the hype and a fair amount of failure, how can an investor sort out which AI education applications have the most promise?
The AI hype certainly has led to a lot of funding for what I would call as systems that are generated to put a lipstick on a pig. Is that the phrase? If you haven't thought about fundamentally how are you going to improve education, and you're only coming from the point of view of we have this AI tool and we're going to find something to apply to, it's not going to work. It's yet another fancy tool, but the underlying things that has been broken in education continues to be broken.
Whether it's investing or teaching or learning, everyone agrees that in the end it all comes back to the teachers themselves.
I think that's the real promise of AI. It allows teachers to do what they do best. When you think of your favorite teacher, you don't think of, the teacher who taught derivatives the best. You think of the teacher who encouraged you, who made you feel smart, who made you feel capable, who made you feel like you could learn anything and accomplish anything. And I think that's where teachers really shine. That's where AI is really a democratizing power, I would say, in education.
There is something about that human intent. There is something about a human being caring about a child, about a student, which I don't think AI is able to do that.
My dad, just a few years ago, he changed a headlight in the car, and I'm like, why don't you take it somewhere and get it done? He said, well, I watched a YouTube video and it taught me how to do it. So I think that we have some dispensations that are happening in education right now where some shifts are happening. Teachers are not being minimized, but our roles are changing a little bit to where we're guiding students to learning, and we're able to personalize the learning more because we have the time to be able to do that.
That does it for us here at Wall Street Week. I'm David Weston. See you next week for more stories of capitalism.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times it's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
This is The Age of Trade. I'm Paul Allen in Sydney.
And I'm Annabelle Drawlers in Hong Kong. The top stories this hour. US futures jump along with copper as the US appears to take a softer tone on renewed trade tensions with China, opening the door to talks. President Trump saying the November 1st deadline remains for higher duties while praising Xi Jinping, even as Beijing threatens retaliation. The president now on his way to Israel for the planned release of Hamas hostages, saying the war in Gaza is over and he believes the truce will hold. Plus, Japan's Naya Takaichi facing a major political crisis as her governing coalition collapses before she's even secured the role of Prime Minister.
Yeah, what a way to start the week, Belle. But let's start on that latest US-China tension, and perhaps the US striking a more conciliatory tone now than we heard, a few hours earlier. J.D. Vance, the Vice President, now urging China to choose the path of reason, says the US holds more cards here, but if China responds in an aggressive manner, so will the United States. President Trump there also been active on Truth Social, essentially saying, don't worry about China, it will also be fine. He's also been praising Chinese President Xi Jinping, and he had a few words to say about that earlier as well. Let's take a quick listen.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader, and I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened, and I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
So you see that softer tone, Paul, really being felt in markets because that taco trade Trump always chickens out is very much being priced in. But at the same time, it is important to reflect on what we heard from China over the weekend. And this was really them being quite clear. They want the US to be backing off. They're warning of retaliation as well. So essentially saying that they will threaten, or that the US rather should stop threatening with higher tariffs. It is interesting, I think, two things to note as well. Firstly, the fragility of the trade truce. I think that's very much been underscored over the past 72 hours. But secondly as well, and this part is important as well, that the Trump administration essentially needs to come to terms with the fact that China this time around is a lot more confident and certainly calling the shots as well, very much on a par with what we saw with Washington in Trump 1.0.
Yeah, you mentioned the taco trade there, Bell, and we're seeing that reflected to some degree in some of the moves in currency markets as well. We've seen the yen soften a little. Risk currency, the Australian dollar, has been strengthening, in fact. So perhaps an expectation among forex traders that this could play out fairly quickly. We have just opened for trade here in Australia as well. We've got the ASX off by about 0.5% at the moment. The worst performing stock on that index, Treasury Wine, off by more than 11%. Reason being, it's just scrapped guidance for 2026, saying it's also paused its share buyback due to US-China tension, just saying it can't have any confidence in that earlier guidance that it gave, Bell.
Yeah, and also taking a look at what's happening in broader assets. We've got US bond futures very much the focus for us today. We have actually seen futures falling. Japan's going to be shut today as well, so we won't have live pricing. But essentially, futures are going to be one of the key assets to track, especially because it could be sort of the default asset to try and find support. It's a lot of fragility still being reflected across equities, other bonds, FX as well. What else we're tracking in the session? Certainly continuing to keep a watch on gold there, hovering or still staying above that $4,000 an ounce mark as well. VIX futures as well to track above the 20 line.
Right, well, joining us now is Garfield Reynolds, who leads our Markets Live coverage here in Asia. And Garfield, a lot of major markets closed. Japan, of course, the US going to be closed later for Columbus Day as well. So in this environment, I guess you're watching Treasury futures pretty closely. And are we going to see a move like we saw for Liberation Day back in April?
Well, no, that's one of the interesting things that's going on, Paul, is that, if Liberation Day, Treasury sold off with other assets. This time round, they rallied strongly. And also this time round, yes, they've declined a bit this morning, but it wasn't a large move lower, and since then it's even paired that move. So Treasuries are acting like a haven again, and part of that is because we've had one rate cut, the Fed signaled more are coming. It's made it clear it's much more worried about the state of the US economy, its fragility, than it is about inflation concerns. And again, tariffs have not fed through into a dramatic increase in inflation. Yes, there's been some pressures, but not dramatically feeding through. So with all that, and with the fresh volatility in Trump's announcements about his response, China rolled out a series of extra restrictions on rare earths and on the port fees for the US, did it in quite a deliberate manner. Trump then on Friday night turned around and sort of really blew up at them, made some very aggressive statements. Now he's already walked those back, but he's still trying to keep it all on the table. So the US side of things is looking extremely volatile, and as Bell earlier flagged, China is looking like it's more confident now than it was before, that it's to some extent running things more than President Trump is. So that means it's also going to be interesting to see how Chinese markets open, but more than anything else, it puts the pressure once more on US assets, including Treasuries in particular.
Yeah, Garfield, you mentioned how China's going to come online. I think we saw ETFs, for instance, linked to Chinese stocks dropping quite considerably in the US on Friday. But is it going to be the same story, do you think, for Asia today? And also what happens for other trade-sensitive markets, Korea and also Taiwan?
Yeah, well, Korea and Taiwan look likely to have a poor day. TSMC's US traded ADRs, TSM, they dropped a lot on Friday, which was a holiday for Taiwan. So Taiwan had not been open. That's likely to do some damage to not just TSMC, but to Taiwan equities more broadly, at a time when we have had the AI bubble fears going on. So there's been some frenetic trading in all of that. And even if you think that ultimately you will get a taco situation, you don't get those tariffs coming in on November 1, the ongoing concerns about NVIDIA and its capacity to earn revenue from China amid all of this, that's going to continue to weigh on the AI space and especially on Korea, on Taiwan. With China, China had a very bad Friday for the equity market, driven by some internal concerns about its own AI boom. Definitely a theme going on here. But we'll see, what's going to happen with the broader Chinese market, especially too if it does drop. China does have one arrow in its quiver, which the US doesn't. The so-called national team could readily come in and put a stop to any major sell-offs, even if those are coming there, even if we don't get a rebound because of that more conciliatory tone from President Trump.
Yeah, we'll certainly be watching those national team-linked ETFs throughout the session. That was Garfield Reynolds there, who leads our Markets Live coverage for Asia. Let's get more on those trade tensions now and bring in Alicia Garcia-Herrero, Natix's chief Asia-Pacific economist. And Alicia, we were just talking there with Garfield and at the top as well about how China this time around looks a little bit different to China during Trump's first administration. That extra confidence we see perhaps from Beijing, do you think it's warranted given the economic backdrop facing the country?
It is warranted in as far as Trump is basically struggling with a strategy to contain China. But at the same time, that extra confidence could be quite detrimental down the road if China really thinks it can dare increase export controls to the level that has been announced. Not so much because the U.S. may retaliate with 100% tariffs, maybe not, but because it would create havoc to the global economy. Also to China in a way, because there's no way China can avoid these huge disruptions in supply chains having an impact on its own economy. So in a way, China could be a little bit of a, dine of success, if you ask me, in terms of how it is approaching the U.S.
The fact that China's been also able to reroute a lot of its trade that would have maybe once gone to the US over the past few months, does that also, lead it to be more confident as well?
Yes, well, this is something that China started doing under Trump 1.0. I think China knows that there is a limit to that because we're still pending these tariffs. Basically, Vietnam does have 40% tariffs already on transshipping, but others could, because that was Trump's basically original idea with the reciprocal tariffs. They have not been fully implemented, except for Vietnam, but they could come. So in that regard, again, China's excessive confidence could be a problem if they continue to reroute their exports through other markets.
What's your outlook for the yuan? To what degree has a weak yuan been helping China? And do you think we're going to see that trend continued? Is there going to be more devaluation for the RMB?
Yeah. Well, I think the RMB needs to trade very carefully because it's already very weak against other currencies, especially euro, all of the kind of European currencies, UK, etc., British pound. All of those currencies have actually taken the brunt of a weaker dollar, but the RMB hasn't. I think the RMB will probably continue to trade close to the dollar trend and still depreciating against a lot of other currencies in the world, which happen to be China's largest competitors. This is Europe. So that's already good enough for China. They don't need to go beyond because that could create all of a sudden capital outflow. And that's not something China wants to see at the current juncture.
And of course, China in the grip of a deflationary issue as well. And we're going to get CPI data later on this week. How is this going to help or hinder policymakers? What's the next move here? Because China's got a few more levers to pull in this regard than perhaps the US.
Yeah, I mean, China's deflationary problems are truly domestic. If anything, U.S. policies would, in any event, help China reduce that deflation in as far as China could find other markets. That's not really the problem. The problem is China's kind of obsessive quest for additional industrial production. We saw a little bit of a dip there in the latest data, but we're waiting for more for September. So we should be seeing, hopefully, that trend, which started in August of of a slightly weaker industrial production, that will help really abate these deflationary pressures. But of course, still I tend to believe that China still wants to reach this 45% market share in global industrial production, which goes exactly against the idea of easing basically this pressure, the downward pressure on inflation. So it's kind of having two objectives at the same time, which cannot be achieved.
Alicia, I want to ask you as well, because we're really seeing some quite significant moves this morning in rare earth stocks that are trading so far in Sydney, and we saw China, again, ratcheting up the tensions on this front. How do you think that they're going to use rare earths in the bargaining process as well?
Well, that's surely the biggest bargaining leverage that China has at the moment. I think what they announced on the 9th, this massive increase in export controls, both in terms of the number of rare earths that were covered, but most importantly on its extraterritoriality, very much in line with what the U.S. has for its own export controls, will probably make it very appealing to find producers and certainly refiners of rare earths elsewhere. That is where the U.S. is heading. Australia is clearly an important market for that. And I think anywhere else where these rare earth metals can be found will be doing well in terms of market valuations, etc., because the U.S. will be chasing those markets. So China will continue pushing, but the U.S. will diversify. This is what's going to happen. And this is basically bifurcation of supply chains down the road.
All right, Alicia Garcia Herrero, Chief Asia-Pacific Economist for Natixis there. Now, Alicia mentioned their rare earths, and they are on a tear in Australia this morning. We've got Luca Resources, Lynas, both up by about 5%. Not on that board is a much smaller company, Arafura, which is up more than 18% now. Few factors driving this, of course, not just the trade tension between the US and China, but also the Australian government is considering a $780 million mineral reserve investment around rare earths as part of a deal with the United States. And in a week's time, the Prime Minister, Anthony Albanese, is scheduled to meet with President Trump. Gold stocks also doing well. Among the best performers here, we've got Evolution up by more than 3%. Also, Newmont Gold and Northern Star performing pretty strongly. The gold price initially dipped below 4,000 an ounce on Friday on the news of the Gaza deal. Well, it's back above that now, 4,051 at the moment. Now, I want to talk about Treasury wine as well, another casualty of the US-China tension reigniting. Treasury wine estate scrapping its earnings guidance for 2026 financial year due to uncertain outlooks in two of its major markets, those major markets being the US and China. It's also going to pause a planned share buyback that was just 15% completed. So Treasury wine off more than 10% on that news, Bell.
Yeah, and just a quick check on what's happening with ANZ as well, because we've got the investor day that's underway this morning. So we've got the CEO and the CFO of the bank on a call with analysts and investors outlining what is a plan to overhaul, essentially, of the Australian lenders. So some of the key headlines so far, that ANZ is planning to halt its stock buyback. It's also looking to add more bankers as part of its push to lift performance, looking to as well reduce duplication across the bank. So far, we're not seeing too much reaction, but the stock is a little weaker. We'll get more details on that just ahead. This is the Asia Trade.
Up to the minute news news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
You're watching the Asia Trade this morning and taking a look at what's happening with the Japanese yen. Also, Nikkei futures trading in Chicago this morning. We do actually have Japanese equity markets that are shut today for a public holiday, but it's going to be very interesting to track the trading dynamics when we do get trading resuming tomorrow. Given there's two factors. Firstly, you've got the US-China trade tensions and the impact that that's going to be having across global markets, or has been having across global markets. But you've also got a very long-standing coalition collapsing between the LDP and Komeito as well, Paul.
Yeah, for more on that, let's get to our next guest, Amy Katalinak, Associate Professor of Politics at New York University. Amy, a real political mess in Japan at the moment. Can you give us a sense of the significance of that breakdown between those coalition partners of 26 years, the LDP and Komeito? How long can the government now survive? And if it does survive, how effective can it be?
Yeah, so this is really a political earthquake in Japan. So the Komeito's announcement on Friday that they're not going to be supporting, the coalition is done and they're not going to support the current leader, Takaichi Sanae, to become prime minister, means that in 2 weeks' time, it's no longer certain that she's going to be able to win that vote and become prime minister, which means we could have a completely different coalition of parties at the helm of the Japanese government. And that is really significant because for the last 70 years, there's only been 4 years in which the LDP has not actually been at the helm of government. So the LDP has been in a coalition with the Komeito for 26 years. That coalition survived a period in which they were both in opposition for 3 years. But now the Komeito's announcement means it's just very uncertain. We don't know, it could be her, she could get together a group of parties or at least one party to support her and become prime minister, or it could be different parties. It's very uncertain at this point.
And in that environment of uncertainty, where would you place the chances of fresh elections for the LDP to say, you know what, we're just going to seek a fresh mandate?
Yeah, I don't think that's very likely, especially without the Komeito's support. So the LDP right now is not in good shape. It's just had two national elections, one last year in the lower house and one recently in the upper house. And they lost their majority in both houses. This just doesn't happen. But you might think that the leader could just dissolve the house and call for a new election. But the LDP has actually been very dependent on the Komeito since the beginning of the coalition 26 years ago. So the coalition, the parties are really tied together closely in elections. So the Komeito contributes a certain number of seats to the government. At the moment it's 24, it used to be 32. But even more significant, the Komeito and their supporters underpin the victories of many LDP politicians. So Japan has 289 single-seat districts, and it runs candidates in many of those districts. And many of those candidates they're made much more competitive by an extra 10 to 20,000 votes that the Komeito supplies. So my guess is those politicians right now are really not going to want a new election. I think that's sort of an unlikely part.
Amy, then how likely is it then that the Komeito and LDP come back together?
Yeah, so I think it's possible that, so my interpretation of one interpretation of what's going on right now is that the Komeito have sent a pretty clear signal of they don't have confidence in the current LDP leader. So they've said that they like many people in the LDP, they don't like this particular leader, and so they're withdrawing support for her. They don't want to be in a coalition with her. So one interpretation of what's going on is that they're sending a very strong signal that they're unhappy with the leadership. And there are reasons. Why they will point to they don't think their concerns and their interests are as front and centre in the current leadership than they would like them to be. And if that's the case, we may observe her, if she were able to become Prime Minister, we may observe that being relatively short-lived and the two parties coming back together. I think that's not unlikely that would happen. Not soon, though. I think it would take a while for that to be worked out.
So is there a path for Takaichi to retain power and stay at the head of the LDP party?
Yes. So she could win the prime ministerial vote. It's going to be held in about 2 weeks. Actually, we don't know exactly when it's going to be held. It's been changed. But if she peels off one party in the opposition, she gets that party to support her, she could become Prime Minister with the support of that party. She also has to prevent the opposition parties from joining forces and getting the votes together to elect their own leader as Prime Minister. But we're observing a lot, like every day the news, it's only been 2 days since the announcement, but every few hours there's different pieces of news that suggest it's very murky as to what's going to happen. So sometimes I think the opposition may get its act together and put a candidate forward for Prime Minister. Other times I think, maybe she's going to be able to make it work. But I don't think I think it's likely that her administration might not be very long in power.
Mm-hmm. Amy, really fascinating insights there. That was Amy Katalinak, Associate Professor of Politics at New York University. And we'll have more ahead on the Asia trade. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Taking a look at cross assets this morning, and you can see here really what's being priced in is that the trade spat may extend. Now, you see that being most reflected in gold prices today because they're continuing to climb. Otherwise, you have some sense of relief coming across other assets. The VIX, for instance, those futures are steadying here. And we're seeing as well U.S. equity futures, little change, keeping a very close watch on treasuries as well, given that you did see really that path for U.S. bonds looking to go higher in the weeks ahead.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Let's take a look at how commodities are tracking. We're seeing a rebound for both oil and copper prices as the US looks to soften its tone a little on the fresh China tariffs. President Trump saying not to worry. He indicates a willingness to reach a deal with China while also heaping praise on President Xi. So some hope that maybe this latest round of trade tension could be short-lived. We've got Brent at 63.33, copper staging a rally on that news as well. But interestingly, gold still pretty strong. It's closing in just below that record price, $4,047 an ounce right now. We did see a drop below that level on Friday on the news that a tentative ceasefire had been reached in Gaza. Now, on that point, President Trump has repeated that the war in Gaza is over, and he expects the truce to hold as he travels to Israel to seal the biggest diplomatic achievement of his second term. Trump will speak to Israel's parliament, the Knesset, later on Monday.
It's the first time everybody is amazed and they're thrilled, and it's an honor to be involved, and we're going to have an amazing time, and it's going to be something that's never happened before.
Right, Bloomberg's Michael Heath is following developments for us. So, Michael, what's the plan when President Trump arrives in Gaza?
Well, Paul, he's basically his arrival sort of timing with all things being well, the release of the 20 living hostages. The Wall Street Journal sort of put an actual number on that. We'd heard that for many months that Israel understood that there were about 20 alive, and that seems to be the case. So they're due to be released in the morning, and then, as you mentioned, that President Trump will speak at the Knesset, and then after that he's going to Egypt to Sharm el-Sheikh, where there will be a peace conference and presumably some sort of signing ceremony. So it's a bit of a whistle-stop tour, but as he said, it's very, very significant. Just the fact that these hostages who've been trapped for 2 years, and obviously the population of Gaza who've just been in a very, very severe war zone. It's good news for everyone there.
This is obviously the first step, and the challenge is going to be going beyond that. What are some of the key details that are still up in the air, Michael?
Yeah, Annabelle, I mean, what you say is right. It's very, very significant. Obviously, it's significant this first stage that they've got, as I mentioned, but, there's a lot up in the air. And one of the pressing ones is just to, for President Trump to ensure that once Israel gets hold of these, gets its hostages back, that it doesn't resume the fight. Now, that was put to President Trump, and he was very confident that that wasn't going to happen. But the other ones are, Hamas is supposed to disarm. Hamas isn't supposed to be part of an administrative, a Palestinian sort of administrative group that will oversee Gaza. And yet what we've seen is once Israel sort of stopped its attacks, that Hamas gunmen and officials are out patrolling the territory, and that it's sort of not clear how that's going to work. Also, how far Israel pulls back. Just how those details are going to be formed is going to be interesting to see, and it's very classic President Trump in that he's here for this whistle-stop tour, but a lot of these very, very significant details beyond the initial one still remain unsettled.
Yeah, at the moment, it seems the main thing that Hamas and Israel have in common is exhaustion, war weariness, but all the drivers that got this conflict going in the first place are still there. How long can this stick?
Yeah, I mean, I don't want to make any predictions, Paul. I mean, it's a pretty joyous moment that we have, that the war will come to an end. But look, you've seen Israel, in a sense, moving further and further to the right, and just, the settler groups who are now part of the government, with Hamas as well. If it is demilitarised, whether a new radical group arrives, everyone sort of seems to be moving toward the extremes. So you sort of want them to be going the other way to find some sort of solution. So, I mean, the portents aren't great there, but, perhaps, as you say, the exhaustion has set in. And then, if there is some sort of reconstruction in Gaza, if there's some sort of hope for people, I mean, perhaps there is an opportunity there. But you're right, the general direction doesn't look hugely positive.
That was Bloomberg's Michael Heath there. And shifting to Malaysia now, because the second Minister of Finance says the country's economy is being supported by strong private consumption. Speaking to Bloomberg, Amir Hamzah Azizan also said that the resilience of the Malaysian ringgit reflects the economy's solid fundamentals, and he expects foreign inflows to continue.
If you look at it, we are first half year, 190 billion of FDIs coming in and approved investments. We're seeing domestic investments also growing well. We've seen, if I use as a proxy, and I look back at EPF as a proxy of formal employment, EPF's contribution rates have gone up. It's growing at 9% compared to the previous year. So that's a sign that employment is still good. My money is still being pumped into the system. And the interventions that we're doing to lift the flow so that the citizenry has money in its hands are also helping drive private consumption. So I think those elements have actually created resilience in the Malaysian economy. And therefore, people look at Malaysia in a slightly different form. And then with the slowing down of the growth of interest rates in other countries, particularly the US where they have been cutting, that's allowed the differential to get smaller, so the ringgit has equally strengthened.
Do you expect the inflows to pick up speed and further boost the currency in the next 12, 24 months?
I think it was important for us to make sure that 2026 is a year that we have enough built in to sustain the domestic economy. So I think that resilience will actually show value to investors going outside. The government fiscal reform is showing value to it. So we started off with a fiscal deficit to GDP of 6.4%. This year we'll end up at 3.8. Next year we're down at 3.5. So there is resolve. And if you see at all the reforms that we've been doing, it's about putting in fiscal discipline is coming in. And those are good signs to investors that are coming in. We've had a stable government, clarity of policy, and that's helped to attract investments.
So supporting the currency, the thing is, the ringgit's performance is also contingent on the dollar, which also depends on what the Fed does. Right now, expectations are perhaps for 2 cuts, but that may not happen. How do you see that playing out into your currency?
Well, even if you look at this year, there were expectations of further cuts, and further cuts didn't come in, right? But the ringgit still stayed resilient, because the fundamentals are still strong, and the differentials have remained quite reasonable along that line. So I think even if the Fed slows down its process, the ringgit still has a lot of wind behind it to be able to push ahead along the way.
Tariffs are a big uncertainty. You saw how, President Trump is imposing additional 100% tariffs on China, taking it to 130%. This is your largest trading partner, contributing to about 17% of overall trade. And some say 130% tariffs would mean stagflation, supply chain disruptions. How might that impact the Malaysian economy?
I think we've seen what's transpiring with the changing tariffs in the first half of the year. When we started the journey early on in the year, the signals were tariff is going to come in, it's going to rattle the markets quite dramatically. Countries will have to do dramatic shifts in order to manage it. But over time, practicality started to come in because it's a very much more integrated supply chain that we're having on a global scale. So I think this recent shifts will probably also find a better landing in the not-so-distant future, and we'll come back to what is probably a practicable solution. And I think both sides are figuring that one out. So from a Malaysian point of view, the key is to actually understand what is the components of our trade. And our trade are E&E and semiconductors, but we also have still the commodities and so on anchoring the trade. So if we continue to do those well, semiconductors, which is a very narrow supply chain, continues to tick on a better note, I think we'll be able to ride it out.
That's Amir Hamzah Azizan, second Malaysian Minister of Finance and Economy, speaking exclusively there with Inside anchor Haslinda Amin. Let's check in on some of the big movers here in Australia. It's really a who's who of gold miners and minerals miners this morning. The gold rally perhaps needs no further explanation against this tense geopolitical backdrop and the reignition of trade tensions between the US and China. Spot gold closing in on that record again right now, 4,041 an ounce. There's a bit more to the rare earth story, however. Not just the tension between the US and China, but also the Australian government now considering a $780 million minerals reserve investment as part of a deal with the United States. That according to media reports in Australia as on the weekend. So a few factors driving rare earth stocks higher. You've got Lynas there better by 5.5%. Bell.
Yeah, and we saw a very late-day sell-off as well in tech stocks and very much bearing the brunt of these US-China tensions on Friday in the session. But we can also see that being reflected in pre-market activity. This is Samsung, SK Hynix. You can see both of these that are under pressure. So, well, that's the last trade for them, but they're also under pressure in pre-market trading this morning, continuing to extend their drop. So we'll get more details as those markets start to come online at the top of the next hour. But certainly tech is going to be one of the key sectors to watch today as well. So we'll have more ahead on the Asia trade. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Let's take a look at how some of these key currencies are tracking at the moment. We saw a little bit of strengthening in the Japanese yen now, 151.95. I use that word relatively speaking, though, but the moves in the Aussie dollar have been interesting as well, because, of course, the Aussie is somewhat of a risk currency, now closing in on 65 cents against the greenback, which sort of suggests, well, maybe this taco trade gaining a little bit of momentum, and we have heard some conciliatory words from President Trump and Vice President Vance after this tit-for-tat cycle of tariffs between the US and China. We'll be closely watching the fix on the yuan today as well. Just look for any indications that China might be devaluing its currency. Right, let's get to our next guest, Ray Attrell, Global Head of FX Strategy at National Australia Bank, joining me here in Sydney. Great to see you, Ray.
Morning, Paul.
I just want to start on that idea of the taco trade, and we do have a chart here on the Bloomberg that illustrates that, a little bit of yen weakness, a little bit of Aussie dollar strength there, Bitcoin also selling off. What do you make of these moves? Is the FX market just taking all of this latest tension in its stride?
Well, I don't think it's taking it in stride, certainly compared to where we were when we went home on Friday. There's still some pretty pronounced moves there, not least, of course, in equities and the rally that we've seen in US Treasury bonds. But obviously the market's still got the April events fresh in its memory, and those that wanted to sell the family silver, after the various reciprocal tariff announcements, quickly, came to regret that in terms of the vigour of the rallies and reversals of the moves that we saw basically within a couple of weeks as we had that kind of China-US trade détente. And as you noted there, we've clearly heard some words from President Trump, since his pronouncements on Friday that do perhaps give some reason for optimism that between now and the end of October, when President Trump was scheduled to meet with President Xi, that maybe things can be smoothed over. Although, China, you have to say, has, seems to have the whip hand here, certainly in terms of that US dependence on the whole rare earth and permanent magnet supply chains, basically. So, I think the US is going to have to, do the running, if you like, to get some sort of a détente in place before the end of the month.
Well, in the case of the yen, obviously, as well, political factors heavily at play here. Did that news from Japan in terms of the breakup of the coalition catch you at all off guard? And do you think FX markets more broadly are still unpacking this?
Well, I think so. I mean, I think the election of Sanae Takaishi last weekend caught people very much off guard, given that all the speculation lead up to there was that she wasn't going to be victorious because of the depth of LDP party member support for Koizumi. So the markets were still coming to grips with that, but I think the working assumption was that she would be able to form a working coalition with the partner Komeiti that they've been in power with since 1999. So Komeiti's withdrawal basically from that pact, I think, was a big shock. And if you look at the way that the Nikkei futures market behaved on Friday, we ended up with a 5% decline from start to finish, which was appreciably more than we saw from the Nasdaq, for example, which was the next worst impact. So we've clearly got some questioning of the so-called Takaishi-nomics, should I call it, basically. But obviously that uncertainty certainly plays in the direction of BOJ inertia, which was obviously the way that markets were travelling before Friday. So, that obviously plays to the yen negative side of the equation. But what we also saw amply demonstrated on Friday was that in risk-off markets now, it's the yen followed by the Swiss franc that are enjoying the benefits of safe haven flows. And interesting that the US dollar was weaker overall, even with those relatively violent moves in stock markets. So for the time being, whatever we think of the US dollar, safe haven status isn't one of those characteristics.
Yeah, so there's sort of arguments in favour of either direction, strengthening on the haven play, weakening on BOJ inertia. But What does that leave then for the Japanese currency? Range-bound, perhaps?
But, well, I mean, it was certainly, based on the view that we were going to have to revise our thinking about the rate and the speed or the timing of BOJ policy normalisation, which was one of the key tenets of forecasts that we've had for an appreciably weaker dollar yen between now and the end of the year and travelling through next year. That's still, that force is still present there. But if, we're very much dependent now on the so-called taco trade, if you like, having the veracity that says that the world is going to be in a much better risk place by the end of the month than it is at the moment. Because if that's not the case, then it could be the case that, in terms of forecasts for a lower dollar yen rate, we're simply having to switch horses and move from the Bank of Japan policy outlook to saying that the yen is demonstrating its characteristics as the preeminent safe haven trade. So I think those competing influences are going to be at play for a little while yet. And as I say, to answer your question, I think yes, it probably does play to a little bit of inertia, at least for the next sort of week or two.
What do you make then of the yen versus other currencies? Because we've also been tracking, for instance, the euro-yen dynamic quite closely.
No, absolutely. And down here, obviously, we've been very locked on to Aussie yen, which had actually spent time back above that 100 level, which is psychologically was a really important level. And we went from 101 to 98 on Friday. So, again, just when I think we were all getting a little bit comfortable with the idea that that revised Japan interest rate outlook played to, Aussie yen strength, and potentially, yen weakness relative to the likes of the euro, which, had been in some sort of a reversal. So, again, I think it leaves us very much sort of in limbo at the moment. I think one of the problems is that, the markets bought the rumour as far as the euro is concerned earlier in the year in terms of, what structural reforms and what significant expansion of fiscal policies, particularly in Germany, but in other countries, directed at infrastructure and defence. Obviously, to date, those reforms have been noticeable by their absence. And I think that's left the market with a pretty jaundiced view of wanting to continue to pile into long euro bets. So I think that is a completely separate sort of issue that is going to keep the euro very much on the back foot at the moment. So I think as far as yen and yen crosses are concerned, markets will probably look elsewhere for direction.
What's the threshold for intervention for the yen? And the age-old question, is there any point?
Mm-hmm. Is there any point? Well, I think you've answered the question in the affirmative or the negative, in the sense that I think at this stage, if it is the case that we're going to see, let's assuming that we get through this sort of current risk-off episode, and we do see the Bank of Japan potentially being, parked on hold for longer than we otherwise anticipated, then, I certainly think it's going to play, to further yen weakness in terms of levels. I mean, the levels where the Bank of Japan intervened or MOF ordered the Bank of Japan in a couple of years ago was around a 160. So between now and then, I think the prospects of intervention are pretty limited. But, to your point, I think, while that fundamental backdrop is not conducive to yen appreciation, then I think it gives speculators and particularly retail investors an opportunity to reload on the short side of the yen.
All right. Ray Attrell, Global Head of FX Strategy at National Australia Bank. Thanks, as always, for joining us. And we do have more ahead on the Age of Trade. Stay with us. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a four-part journey as I explore the great quest for longevity.
But you can't be
only
any
on
geek off the
Bloomberg.
street.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Let's get the latest now from the corporate front. First Brand says its CEO, Patrick James, is considering stepping down as scrutiny grows over the auto parts maker's sudden collapse. A source says his brother Ed has already left a senior role. The Justice Department is examining how Wall Street lenders missed red flags before First Brands filed for bankruptcy, owing more than $10 billion. Bloomberg sources say Warner Brothers Discovery has rejected Paramount Skydance's initial takeover offer for being too low. Told Warner's rejected Paramount's offer of about $20 per share in recent weeks. Warner CEO David Zaslav has said to believe the company's streaming and studios arm will command a premium next year once split from its cable assets. Now, Qantas shares fell in Sydney after it confirmed data stolen in a July cyber attack has surfaced online. Almost 6 million records were exposed via a third-party platform, mostly names, emails and frequent flyer details. The airline says no credit card or passport data was accessed. Australia's government says it will never negotiate with cyber criminals or pay ransoms. Right, so let's take a look at how markets are tracking ahead of what promises to be a pretty interesting day. Here in Australia, we're off by about 0.2% at the moment. I'll check some of the movers there shortly. Market's going to be closed in Japan today, which is interesting timing because not only is Japan exposed to the trade story, there's political turmoil as well, with the 2060 coalition between the ruling LDP and its coalition partner Komieto fracturing over the weekend. Now, a question mark over whether Sanae Takaichi can even become Prime Minister, so a very uncertain political backdrop in Japan. That notwithstanding, futures better by 1.3%. We're seeing a bit of optimism for S&P futures as well, up by more than 1% at the moment. The reason for this is despite the tense trade backdrop, we have heard some conciliatory remarks from both Vice President J.D. Vance and President Trump. President Trump lavishing praise on Xi Jinping, telling pretty much everybody to relax. November 1, the deadline for new tariffs, he describes as an eternity for him, and the trade situation with China will be worked out. Now, I mentioned we'd take a look at some of the movers here in Australia. No surprises here. We've got gold miners performing very, very strongly. Gold close to a record again. Once you price it in Aussie dollars as well, it's very impressive, about 6,200 Australian an ounce. So no surprise to see Evolution and Northern Star among the top performers there. Lynas Rare Earths also better by more than 5%, not only due to the tension between US and China over rare earths, but also news reports over the weekend that the Australian government is considering a $780 million minerals reserve investment as part of a deal with the US. Bell.
Yeah, Paul, also taking a look at what's happening in the tech space this morning, because we're going to be watching Samsung, SK Hynix very closely. That's the last trade there. But on Friday, you saw President Trump looking to expand export controls to critical software. We're also just really questioning if this AI enthusiasm perhaps is becoming a bubble. So something else that certainly plays into the dynamics as well. But let's also take a look at the crypto space, because we saw a huge sell-off, billions being liquidated in positions on Friday. We have seen a slight recovery of crypto prices through the weekend, but certainly Korea is a very big market for retail trading as well for crypto, so those could be some of the stocks to see some downward pressure as well. You can see Bitcoin hovering around that 115,000 mark. We'll have more ahead with the open in Seoul next. This is Bloomberg.
key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens this morning. Well, South Korea is, of course, about to come online. Japan is shut today, but China is also going to be the major market to track when it starts in the next hour, Paul. I mean, it's really fireworks for the session today. We're expecting quite a bit of downward pressure, even as you saw that sort of trade detente maybe shattered on Friday, and it seems to have been maybe softened a little bit, the rhetoric over the weekend as well.
Yeah, absolutely. And what a day for Japan to be closed as well, not only not able to react to all the developments on the trade front, but also the shock fracturing of that 26-year-old coalition agreement between the ruling LDP and its partner Komieto, really making the future uncertain for Sanae Takaichi and even whether she can become Japan's first female prime minister. So markets won't have a chance to react to that, though.
Yeah, that's right. But what we are watching in the session today is how much that risk is sort of being priced in. So you're seeing gold, for instance, continuing to rally here a little bit above that 4,000 mark. But, Paul, I mean, we're watching US futures, Bitcoin as well.
Yeah, let's take a look at how futures are tracking. We've seen a slight improvement there, well, a dramatic improvement, actually, better by 1.1% now. This is after we heard some somewhat soothing words from President Trump regards the trade tensions with China, saying that, praising President Xi, saying everybody should relax, something will be worked out, and the November 1 deadline for those 100% tariffs, the President describing that as an eternity for him. So the taco trade, as it's become known, gaining a little bit of momentum there. The gold price not really completely convinced, though. We're seeing gold continuing to rise, just hovering below that record now, $4,035 per ounce. Bitcoin, though, got hit pretty hard over the weekend, but now recovering somewhat, 114,000, just below 115, Bell.
Yeah, we'll watch crypto quite closely, especially with a lot of crypto-linked names in Korea in the session. But we do have the Kospi just coming online today and watching Samsung, SK Hynix in particular here, because you can see both of those slumping. It's not just the question marks over what export restrictions look like. We saw on Friday Trump very much focused on software, but it's also the AI trade and whether we're continuing to see that bubble. It's a pivotal time for the US earnings season to be kicking off, because that narrative or that thesis figures is very much going to be tested. The Kospi here down by 2% at the start of trade, and we're also keeping an eye on earnings as well, because we just saw LG Energy third quarter operating profit beating estimates for the session today. What else we are watching is the trade figures, because we just got export figures coming in for the first 10 days of October. We have seen those pulling back more than 15% on the year. So again, something else that plays into dynamics, because Korea really seen as a barometer for that market. Nikkei futures, just let's take a look at what's happening with those this morning, because we do see the Singapore contract continuing to show declines essentially on a two-day basis. Also, when you take a look at contracts that are trading in Japan, you do see, again, further losses perhaps being expected. But it is really a very uncertain political future ahead for Sanae Takaichi of the LDP. But let's get more on the market outlook and bring in Port Shelter Investment Management CEO Richard Harris, who says markets are essentially debating how serious Presidents Trump and Xi are about their trade threat. So it's really that taco trade. How much do we need to price that in, do you think?
Well, I think both sides have been doing an enormous amount of posturing. Of course, the US has been slightly increasing its trade terms with China over the time. China's come in with the rare earth issue, which looks to me to be a complete negotiating ploy. You know, you tighten things up and then you relax them during negotiations and everyone's a winner. And then Trump, I think, has maybe reacted a little bit more than China thought. But clearly, we're all aware of the taco trade, and over the weekend, things seem to ease down a little bit. So I think there's a pretty strong chance that when they do come to negotiations, you know, before November 1st, they will have some sort of agreement between the two. Now, of course, trade deals aren't done in 5 minutes. You know, they often take 2 or 3 years to do. The amount of detail is enormous. But I think, once again, they will come to some sort of agreement that won't be too bad for everybody, and they'll carry on. But that may not happen. Maybe a 25% chance that may not happen.
Yeah, it's really, I guess, you just want to get that headline sentiment, and we're still kind of trying to understand that, whether there's going to be any sort of detente. I mean, you do see, I guess, some reversal being priced in, but then we were just reflecting there on gold prices, for instance, and you're continuing to see those slightly bid today, so it's still very fragile. What happens then in the near term, and how important does earnings become as well, the earnings season with the US kicking off?
Well, I think on gold, first of all, that's moving because people really aren't too sure about the future of fiat money. You've got debt issues there, and you've got issues with, you know, what currency are people going to go in? Are they going to go in the dollar? No, it's coming off. But do you want to go into euros? Do you want to go into Swiss francs? You know, there's the uncertainty there. Going back more to the micro level, to earnings, of course, I mean, earnings have held up not badly. You know, we've been forecasting falling earnings now for quarter after quarter after quarter. They haven't really happened. The market's kept itself up. The early earnings tend to be from the banks, which will probably still be okay. But I think investors will be looking really carefully at how earnings do in the other parts of the market. What's happening to the smaller company? What's happening to US importers? These kind of things. So earnings is a really big indicator, just as unemployment is a big indicator, for which we don't have any numbers.
Few difficulties.
Richard, I'm just wondering what you might anticipate at the Open in China today, because the index tracking large-cap Chinese stocks in the US took a bit of a beating late Friday. We have a chart here on the Bloomberg that illustrates that. However, since then, we've heard some conciliatory language, as we were describing, from President Trump. So what do you think the reaction's going to be when we get the Open later?
Well, I wouldn't be surprised if the market's down a little bit. Maybe we'll see some sort of recovery. Clearly, the markets are going to be concerned about this sort of on-off kind of negotiation for a while. So it'll probably hold things back. And let's not forget, in April, we had some very, very sharp moves downwards on this whole tariff talk. I think markets generally are really pretty fragile. They've moved up almost too far, too fast. They moved up on the AI bubble. Valuations are high. They are fragile to some kind of external shock. Now, we've seen First Brands and one or two other companies go bust. The irony at the moment is we're talking about a Paramount Time Warner link-up. And don't forget, in 2000, we had a link-up between AOL and Time Warner. Sorry, it's Time Warner in 2000. It's just Warner now. So, you get to the stage where you start seeing some really irrational things in the market, some irrational M&A deals in high valuations. So it only needs a small shock to get things going. Is this Trump-Xi element a shock? I don't think so. I think maybe 75-25% probability that this is all going to blow over by November 1st. But we're still in an environment where people have to keep an eye out for that unknown that's maybe going to shake the market out of its optimism.
So when markets are, as you describe, fragile and pockets of things are looking overvalued, when you see a pullback like this, what do you think? Buying opportunity or omen?
Well, let's face it, we're sort of down 2 or 3% from the top. And generally, markets don't crash instantly unless there's a major shock that people really don't know about. They tend to come off for a little while, and then there's maybe a shock which pushes the market down. And you see this quite consistent. So I don't think that investors really are in a position to sell, then buy just at the moment. If we're talking 2 or 3%, what's the point? If you feel it's going to be 20-25%, then maybe you've got some hope there. But the chance of being whiplashed at this stage of the market is still quite high, because very often markets will have a false rally in the middle of a bull market and everybody gets caught. So, no, it's too, oddly enough, it's too, the volatility is too low really to trade at the moment. You can only really make money if you're looking at some big moves.
And how do you want to position then in that sort of environment? What's your posture looking like?
Well, I've been over the year, I've been switching out of very heavy overweight in the US, where everybody was, mainly through performance, taking those profits out and putting some into China, been putting some into specific sectors like defense, oddly enough pharmaceuticals, which haven't done too well. But let's face it, when markets fall sharply, the farmers won't fall quite as much. So it's really a case of being more defensive and also raising some cash, because I think cash is likely to be your friend further on. The big question is, where do you keep the cash? You don't want to keep it in bonds. You don't necessarily want to have it all in dollars. So really you need to have a diversification. I always used to think that, you've got a third in 3 major currencies. That way you can only be 2/3 wrong. Or is it 1/3 wrong? One of the two, anyway.
Okay.
All right.
Thanks, sir.
Mostly right. Port Shelter Investment Management CEO Richard Harris there. Thanks, as always. As we mentioned, the Trump administration signalling openness to deal with China. Speaking aboard Air Force One a short time ago, President Trump called Chinese President Xi Jinping a smart man and a great leader. Let's bring in China correspondent Min Min Lo now. So, Min Min, what might we anticipate today in terms of China's response?
Well, already China has responded over the weekend, but we'll see what else they say. But so far, China has said that the U.S. threatening China with tariffs at every turn, that is not the right way to deal with China. And China will not hesitate to retaliate to protect their legitimate rights and interests. And so far, China has already opened up, an antitrust investigation into the U.S. chips company Qualcomm. There are the rare earths export controls that were tightened the past week that led to the spiraling of this trade conflict. But look, it all started, when the Chinese view here, from what I've been hearing from analysts, is because they view the U.S. as acting in bad faith after the agreement that was reached by both sides after the Madrid talks, because there was an implicit understanding at the time that both sides would refrain from any unilateral measures ahead of this potential summit between President Trump and Xi. That was clearly stated during Xi's call to President Trump, where he said any unilateral measures would undo the multiple rounds of trade talk results so far. And what happens after that call? 10 days later, the U.S. expanded the rules of the U.S. entity list, and that kicked off this whole spiral that took place over the weekend. So we have seen, for example, Hu Xijin, a Chinese state media commentator, the former editor-in-chief of Global Times, he says that this could mark a turning point in U.S.-China relations, especially if China sees the U.S. as acting in bad faith. with its credibility at stake, then they may not be willing to negotiate further, and we could see a very escalatory spiral of this tit-for-tat retaliation, potentially China also matching some of the latest tariffs from President Trump as well. But we still have some time because November 1st is when those tariffs kick in, so that gives us a couple of weeks for both sides to dial things down from the edge.
So Min, we were just speaking with Richard Harris there from Port Shoulder Investment Management about the China markets reopening today. What are you going to be watching?
I mean, there are a lot of speculation about what's going to happen. Obviously, undoubtedly, we're going to see a sell-off today. Judging from what happened overnight, we're seeing upwards of 6% sell-off in the US ETFs, in the China ETFs that are traded in the US. And if you look at the iShares, it smashed through the 50-day moving average last Friday and just holding on to the support level of the 100-day moving average. We are likely to see a sell-off today. The question is whether it's going to be a knee-jerk reaction with some sort of cautious rebound later on. Some analysts believe that could be the case. JP Morgan saying if there is an outside sell-off today, it is a window to buy because they expect that both US and China would work towards another trade truce before 2026. Other analysts are saying that this is an all-in moment, posturing ahead of that Xi-Trump summit, which means that this could be the bottom of everything and everything else would point upwards from here on out. So we'll have to see what happens. There are two very powerful men who can really move markets with just a few words, and we really have to see how the negotiations play out.
That was Bloomberg's China correspondent Min Lo there for us in Shanghai, and taking a look as well at some of the movers because we are just about under 15 minutes into the session so far for Seoul today, and you can see here crypto-linked stocks are declining. We did see some very volatile action in crypto with a lot of positions being liquidated starting Friday. We have seen prices somewhat recovering over the weekend, but trading around $115,000 per token for Bitcoin. We'll have more ahead on the Asia trade. This is Bloomberg.
Crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Well, we have political uncertainty and instability in two key countries, Japan and France. But taking a look at Europe futures this morning coming online because we have been really tracking what's happening over in France. Sébastien Lecornu returning as France's Prime Minister on Friday. He had abruptly ended his term on Monday when he resigned just hours after his cabinet was announced. But he did return as Prime Minister on Friday, now racing to form a government, betting on policy concessions and certainly lawmakers fear as well as snap elections as he prepares to file a budget. So we are just looking there. You can see here Euro Stoxx futures just fractionally in the green so far. But another political drama we're following is the collapse of Japan's decades-old ruling coalition. Talks between the Liberal Democratic Party and junior partner Komeito fell apart on Friday, casting doubt on Sanae Takaichi's chances of becoming Japan's first female premier. Our economy and government reporter Erika Yokoyama joins us now. So, Erika, just walk us through this latest situation regarding the LDP and the Komeito coalition and exactly how the market is perceiving this as well.
Sure. So there was a little bit surprise movement on Friday. Japan, as you said, Komeito decided to leave from the coalition and saying that they are not satisfied with the LDP's response to political fund scandal. This marks the first breakup in 26 years of their long-standing partnership. And of course, the LDP's newly elected leader, Takaichi, now faces the uncertainty over whether she can become a prime minister, creating a major political instability here. And amid the series of developments, market volatility has increased sharply. The yen had been weakening since the Takaichi's surprise victory in the LDP leadership race. But there are some rewind after the Komeito announced its departure. And also the uncertainty has also stalled the momentum in Japan's stock market as well. And there is also now growing speculation that the opposition party could unite behind a single candidate, possibly Democratic Party of the People chief Tamaki. In any case, who becomes the new prime minister, that person needs to cooperate closely with opposition parties, keeping fiscal concerns lingering and adding upward pressures on the bond yields as well. So I think all currency, bonds and stock market continue to see the volatility towards the premier election this week.
Yes, so what's the implication here against this backdrop of political turmoil for the Bank of Japan and its tightening journey?
Indeed, I actually think there is a mixed implication with two opposing impacts. So as I've just mentioned, the yen is weakening, so which could push the BOJ towards the near-term rate hike to counter the import-driven inflation. But on the other hand, I think the political instability will likely make the BOJ more cautious about moving soon as well. Takaichi, known for pro-stimulus stance, said before the LDP race that she prefers to maintain the current rates for now in one of the candidate surveys. So the BOJ may probably wait for political clarity and the new leadership stance before making any major decision. Actually, market is now more betting on the wait-and-see approach. The overnight swap index shows only 20% now sees a chance of rate hike in October, down from roughly 70% a few weeks ago. And, we still have a chance to hear from the BOJ board members before the October meeting, including Governor Ueda, likely to speak during the IMF and World Bank annual meetings to be held in Washington, D.C. this week. So markets should be closely watch any sign from him.
All right, economy and government reporter Erika Yokoyama there. Well, President Trump has repeated that the war in Gaza is over and he expects the truce to hold as he travels to Israel to seal the biggest diplomatic achievement of his second term. Trump will speak to Israel's parliament, the Knesset, later on Monday.
The war is over, okay? Do you understand that? I think people are a lot of reasons why it's going to hold, but I think people are tired of it. It's been centuries, okay? Not just recent, it's been centuries. I think people are tired of it. Yeah, the ceasefire is going to hold.
Bloomberg's Michael Heath is following developments for us, so it's going to be a quick trip around the Middle East for President Trump. What's on the agenda?
Yeah, Paul. I mean, a whistle-stop tour sort of thing, but as you mentioned, I mean, he flies in and then he's going to address the Knesset. Presumably that happens in fairly close coordination with the release of the 20 living hostages. And then from Israel, he's going to Egypt, to Sharm el-Sheikh, the resort town, where there's a gathering of various countries that have been involved in the process, as well as European nations. Presumably it's a peace signing deal. They're calling it a peace conference, so I expect that would be part of it. And perhaps they start to talk about the stabilisation force that's due to come in and take control in terms of security in Gaza. Not sure whether that's happening, but that would obviously be a fairly high priority on the agenda, because that's sort of one of the next steps that needs to go on.
Yeah, just talk us through the next steps. There's still quite a lot of different areas that need to be ironed out, but what's most pressing?
Yeah, Annabelle. Well, obviously, you have the release of the hostages, and Hamas is also supposed to release the bodies of it's understood to be about 28 hostages. The problem is they don't know where all of these bodies are too. So even Israel's intelligence agencies are saying their understanding is that Hamas doesn't actually know that either. So that may be delayed a bit. Then on the Israeli side, obviously they're withdrawing their forces, and the hostilities have basically ceased. But they're then due to release almost 2,000 Palestinian prisoners, 250 of them being life sentence people who've been sentenced to life. So, the names of those people who are released are going to be quite interesting as well, because some of the ones that Hamas has wanted to get out have been involved in some pretty horrific crimes. So that'll be interesting to watch too. So that's where we're fairly confident that'll all go ahead. The question then is about disarmament of Hamas. I mean, the reports are that Hamas is already on the street with armed men there. So they're supposed to be disarmed. A stabilisation force is supposed to come in. The US is already sending in 200 soldiers to be part of that. And so presumably there's going to be Arab states that contribute there as well. And then, how far Israel pulls back within Gaza or to the borders of Gaza. And also there's supposed to be a Palestinian technocratic administration that is meant to exclude Hamas, but at this stage it's not looking like that'll be the case. And then you've got this oversight committee that Tony Blair and President Trump are supposed to be in charge of. So there's a lot to get through, and there's a lot of fudging that's been going on in getting those sort of agreements going. So there's a lot of work to be done. So this is sort of a whistle-stop tour, but the hard work is probably yet to come.
Yeah, definitely. And we heard President Trump in those remarks earlier saying this has been going on for centuries. And it really depends on how you measure this conflict. But all the drivers that were there before October 7 are still there. So how lasting can this agreement be? Yeah, well, look, I think you've made this point before as well, and he did then, is that there's a degree of exhaustion, obviously, on both parts. I mean, this is the longest war Israel's basically fought. The people in Gaza have been under relentless bombardment and attack as well. So there is a degree of exhaustion which probably suggests that we're in for a period of quiet and peace, particularly if reconstruction can get going. But yeah, look, on both sides, whether it's Israel sort of moving more to the right and with Hamas in charge and whoever comes after them if they do leave, there's just a degree of radicalisation on both sides, and you need them pushing towards the centre to have any hope of a lasting peace, and there's just no signs of that. So, you hope for the best, but the portents aren't great there. All right, Bloomberg's Michael Heath there. We have more ahead on the Age of Trade. Stay with us. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Let's take a look at how some key commodities are tracking at the moment. We're seeing a recovery in prices following some encouraging news that President Trump looking to settle down this trade dispute with China. Oil rallying. We've got copper prices higher as well, but gold perhaps not completely buying the story because it's up too, hovering just below a record 4,038 an ounce at the moment. And in terms of precious metals, take a look at the silver price as well, now closing in on an all-time record. That record is $52.50 for an ounce, set way back in 1980 on a now-defunct contract for the Chicago Board of Exchange. We've even got word of some traders booking slots and cargo holds to London for silver bars. Pretty expensive way to transport that metal. More ahead on the Asia Trade. This is Bloomberg.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Bersetchi in Vienna, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Let's take a look at risk assets, very much in focus as trade tensions escalated and then appeared to dial back again between the US and China. President Trump signaling openness to a deal with China, saying November 1, the deadline for those 100% tariffs, is an eternity away. Also praising the leadership of President Xi. So we're seeing a modest rally in risk assets there. S&P futures up by more than 1%. They've been hovering around that level for most of the morning. Take a look at the yuan on the end end of that board there. We will be closely watching, of course, the fix today to see how Chinese policy makers react to this latest round of tension. Well, let's get to our next guest now, Wendy Cutler, Vice President at the Asia Society Policy Institute. She's also a former acting Deputy U.S. Trade Representative. Wendy, thanks so much for joining us. In terms of what we're seeing here, we do have something of a roadmap. We've been here before, back in April with Liberation Day, and already we've got President Trump and Vice President Vance making a conciliatory sound. So where do you see this latest dispute heading?
Yeah, so I feel like we're on a roller coaster again, where tensions were very high just about 24 hours ago. But now it seems that both sides want to de-escalate. Conciliatory words from Trump today in his Truth Social post, along with comments from the vice president. But China also, even after it explained why it took the measures that it has, it also seemed to be urging both sides to get back to the table. So tensions high, but some de-escalation, and we'll have to see how China responds today.
In terms of China's response, I mean, to what degree do you feel China's holding a better hand now than it was during its earlier trade dispute with China back in President Trump's first term?
Look, I think Washington is dealing with a much more assertive Beijing. China is prepared this time around. It has put tools in place to respond to U.S. measures. It has reduced its dependence on U.S. imports and has reduced dependence on its exports to the United States by forging relations with other countries, particularly increasing its trade flows with Southeast Asia. And it's increased its self-sufficiency, as well as it's identified its choke points where it can hurt the United States in the area of critical minerals and magnets and soybeans. So this is a new China we're dealing with, and I think this is coming as a bit of a surprise to Washington, not used to seeing such quick and assertive responses from China to every measure that Washington is taking.
Do you think, though, that Beijing may have overplayed its hand slightly in recent days?
Absolutely. And I think that was evident by China's response yesterday. 2 days ago, it announced sweeping extraterritorial measures with respect to critical minerals and magnets, which, if implemented fully, could mean that basically almost every transaction would need some kind of Chinese export license if it used just the smallest amount of critical minerals from China. It seems to have walked back from that a bit. Again, it seems like it wants to get back to the table with the United States and de-escalate. But again, that's easier said than done when tensions are high, misunderstandings are great, and trust is low.
Where does that leave us then for the supposed meeting between President Xi and Trump in a few weeks' time from now? Do we still see it happening, or what's the tone that's going to be struck if it does take place?
Well, if you asked me 24 hours ago, I would have been a lot more negative. But it seems now that the president has said he's going to Korea, and I think the odds for holding this meeting are strong. But I think that more communication needs to happen before that meeting between Secretary Bessent and Vice Premier He to make sure that things are on track for this meeting.
How long does it take to work these things out? Because traditionally trade deals can take years to settle, and even in the first Trump administration, we only got to phase one. So do you see any meaningful agreement being reached for the duration of President Trump's term?
Not during this meeting, for sure. I think they're going to have to focus on de-escalating the critical issues at hand right now. In addition, just to mention, on Tuesday, the United States is going to be putting very steep fees on Chinese ships making port calls in the United States, and China has pledged to respond in kind. So that's going to be very important to watch to see if those measures go into place. And again, if they do, then any meeting between the two leaders is going to have to talk more about how to delay or unwind these measures versus, embarking on other areas in the relationship.
So Wendy, on that note, though, what do you think we see around the sort of actions we've seen so far? The US sort of continuing to flip-flop on its assessment of China, or its tone toward China, China continuing to try and assert its dominance on the global stage, deepen those relationships with other key trading partners. Does that sort of dynamic continue, that sort of divergence, I guess, that we see?
Absolutely. I think both sides clearly understand that they need to diversify and reduce their dependence on each other, particularly with respect to strategic goods. So that is going to continue regardless of any meeting or mini trade deal or substantive trade deal between the two sides. That said, I think it's in both sides' interest to continue a tariff truce and not to raise tariffs more, or for China now to get in the export control game. I think those are very dangerous paths forward.
Wendy, thanks very much for joining us. Really great insights this morning. That was Wendy Cutler there, Vice President at the Asia Society Policy Institute and former acting Deputy U.S. Trade Representative. Just some breaking lines that have crossed the terminal in the last few minutes relating to China Vanke. This is the embattled Chinese property developer. We have got an update on leadership of the firm as well, because we have the chairman, Xin Jie, resigning effective of 12th October 2025. So yesterday, Sunday, he has only been in the chairman role amid an abrupt management overhaul in January of this year, so just several months into the position. But we did get a filing, and essentially in it says that he has resigned, Mr. Xin, as chairman of the company effective from Sunday, so yesterday. He is someone who no longer will hold any position in the company after that date. So we'll get more details on those or that as it comes to hand. You are just taking a look at China Vanke shares trading off year to date. More ahead on the Asia trade. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
We're taking a look at crypto this morning. Bitcoin prices are really quite far off the levels that they were just a few sessions ago. We saw a massive liquidation on Friday in the session, a record $19 billion in bets evaporating, crypto prices tumbling across the board, being sort of sparked by the tensions, the trade tensions between the US and China. Lots of question marks, the biggest one-day sell-off, but who exactly was left getting wiped out? But let's get more on the outlook as well and bring in Yat Su. He's co-founder and executive chairman at Animoca Brands, joining us from New York. So Yat, thanks very much for your time this evening. Talk us through exactly why we saw this trading activity and as well why we've seen sort of prices looking to stabilize a little bit over the weekend.
Yeah, I mean, I think what happened over the weekend was a little bit of a shock, as mentioned earlier. This is the biggest sell-off, the biggest liquidation in the history of crypto. I think the slightly positive thing to take on is that actually, when you look at the majors like Bitcoin, Ethereum, Solana, and so on, actually it's held relatively well given everything else. And we've seen a recovery really over the last really 24 hours. It's been quite strong. Ethereum went back over $4,000, for instance, whereas it had gone down to like, I think, 3,300, 3,400 for sort of a bit of a moment. But I think there's some interesting thing here to look at, which isn't only specifically around just what happened with the tariffs and a bit of that, but also that there's been a dislocation in the pricing that you see between centralized exchanges and actually the DEXs like Hyperliquid. So what we see here, for instance, while there's been a lot of opposed liquidations, the prices have collapsed, momentarily in some cases going down to sort of like literally sort of 70 or 80% drops, but for a moment. And of course, that forced liquidations across the board. And a lot of people, even who thought they were relatively safe with their sort of, positions, basically got auto-liquidated. And so the auto liquidations is actually what forced this. And it also happened overnight for most people. So they didn't even realize what happened. And then when they woke up, they're like, oh my goodness, they've lost a lot of their positions. So that's the tragic part. But I think the other part of the story is that there's a question mark around where all that liquidity dislocation was, because market makers might not have been in place. For instance, there's been some inefficiencies in some of the exchanges. You even had some exchanges commenting around them possibly reimbursing users based on certain things that they've discovered. It's not clear. There's also the concern that some people have, which is that, okay, when there's such a large amount of liquidations, there might be certain trading firms or other companies that could be in trouble, a little bit like sort of, let's call it, Terra Luna vibes, right? When Terra Luna happened, actually, Terra Luna itself didn't create sort of the big shock. It was bad, but it was what happened after, because then a lot of positions essentially got hurt, and then weeks after or a month after, stuff happened there. But you can see, for instance, when you think about the activity in decentralized exchanges like DEXs, you can see everything happening very transparently. And so in that sense, you could see clarity around what's happening. So, on Hyperliquid, you had something like $9 billion basically liquidated. And now basically open interest is reduced down from, I think, a peak of like 14 to like 1.5 billion. And you can see that, and a lot more people are looking at that as a more trusting venue of trading, because they can see all the numbers transparently. Centralized exchanges, it's been harder to know, and the prices have been dropping much more precipitously at the centralized exchanges as well. So there's a lot of question marks around that. However, if you look at the bounce back today, it's been very positive. And if you look at the majors again, Bitcoin about 115. We should look at the zoom out perspective. 6 months ago, all of these sort of crypto prices were significantly lower. And so I think we can see generally sort of a positive momentum. I see it as sort of strength and resilience building up over time. But certainly, it is. The weekend was very concerning.
So what does it tell you then about the market maturity, the trading action, and the fact that you saw some dislocations?
Well, I think it's definitely one where a lot more sort of development needs to happen. And I think the area that's encouraging is that decentralized exchanges, which are actually the open venue with a lot more sort of transparency, are turning out to perhaps in many cases be the more resilient. Perhaps also the one that we should be looking at and where we should be trading a lot more, because we can see everything openly and transparently in a way, right? So I think there's a little bit of that. I think with the centralized exchanges, the difference is that there's so many of them as well. And so they trade at different prices around, and really the liquidity is often sort of managed by, the market makers across the space. And the problem is that you might have price dislocations across different territories, different areas. And when you have sort of, for instance, APIs or sort of, liquidity not being able to move, like during this sort of heavy load, a lot of the sort of, balances weren't able to be transferred from one exchange to the other, for instance, because there was delays. And in moments like these, delays, even of a few seconds can be deadly, right? Which is the difference. Whereas in the DEX, it's transparently sort of traded there. And I think we can sort of see where the future is. Like, this to us indicates more clearly that the future in crypto is much more decentralized over time, which when you think about the majors like Bitcoin and Ethereum and Solana, it is very much operating in a decentralized manner. And I think actually we'll see a lot more trading activity moving towards that as well, which will give people more confidence as well.
Just curious, do you think we've got the floor in for Bitcoin today? What's the next move?
Well, I mean, I think when you think about sort of the institutional demand, one of the things that's interesting is that people aren't saying, oh my goodness, I should get out of Bitcoin. Basically, people are saying that this is a buying opportunity as we see it. What I also think is interesting is that the recovery of the altcoins was very marked. So while Bitcoin sort of staged a little bit of recovery, relatively speaking, forward was, I mean, over the weekend, it hit 103,000, I think. So, and again, when you look at it from a few years ago, of course, significantly up. But when you look at, for instance, the recovery of Ethereum and all the other altcoins, we're seeing literally sort of 8%, 10%, in some cases, 20% gains on some of the sort of majors or like majorly listed sort of tokens. So basically, you can see that recovery happening very, very quickly. So I think it's a general sort of positive sign. Bitcoin to us is like digital gold. It's sort of the safe index and the laggard as well. So it's not necessarily going to accelerate as quickly, but it's an indicator of the whole space, right? And now I think 6%, 7% up for sort of the macro of the market right now for crypto. Close to touching 4 trillion again. So again, it's been a very, very fast and swift recovery. And I think in traditional. You can't trade, for instance, or you have 10 to 5 trading hours or 10 to 4 or whatever, right? So there's sort
check 1 2 check 1 2.
In crypto, it's 24/7. So the momentum and the durations are something that I think a lot of people aren't used to, but in crypto it happens very frequently because you can see it literally 24/7. And imagine what the stock market would look like if you could actually trade 24/7. It probably would be having similar sort of swings because the markets react basically to news very, very quickly, which you see much more pronounced in crypto than you would see in other areas, precisely because of the fact that you can't trade regular sort of shares in the same sort of speed as you could with crypto.
Has the market activity affected your thinking around a planned IPO? And given the tensions as well between the US and China, would you still be looking to stick with the US as a possible venue, or would you be looking to shift back to Hong Kong, for instance?
Well, just to clarify, we never actually publicly stated whether it was going to be US, Hong Kong, or anywhere else. However, that said, we have made it very clear that Animoca is looking to eventually become a publicly listed company. The reality is, of course, that America is aiming to become the crypto capital of the world, if not already. So it would be sensible of us to look at it very seriously. In any regard, a listing plan for Animoca is not necessarily determined based on purely sort of market gyrations in crypto, because it's based on sort of, I guess, more fundamentals. We are a company that is operating, quite profitably. And for us, it doesn't really matter so much in terms of sort of, the sentiment per se. Of course, it's the right timing, but it really matters that sort of, we get institutional interest in the company. And part of it also is letting people know that, there's companies like us that actually are not an exchange, but actually operating in crypto in a very significant and profitable way. So it's part of telling the story. But yes, I think all markets are open, but of course the major ones like US and Hong Kong are obviously clearly of high interest for us.
Yeah.
All right, Yatsu, co-founder and executive chairman at Animoca Brands. Thanks so much for joining us today.
Because I'm playing around with you guys being able to get into
region
Discord.
At the moment, benchmarks are tracking at the moment. Weakness across the board against this backdrop.
In order for me to hear everyone, I have
we've
to
just
have a headset
heard from Citi as well, analysis suggesting that renewed trade tensions.
So I'm just trying to make sure I can hear myself.
Could cause volatility in major China-related indexes this month. That's
all right. I'm going to turn the volume to daytime.
That's certainly what we're seeing. We're off by 0.5% here in Australia. That has been.
All right. So how's the mix there? Is that the normal daytime level?
Rare earths miners as well, which are both having an excellent day. The Kospi, however, off by 1.25%. And we're seeing some weakness in some of those big names: Samsung Electronics, SK Hynix, Samsung among the biggest contributors to that loss. We have more ahead on the Asia trade.
Okay, so that sounds good. It's a little low. How's that? Is that the normal daytime level? See, I just can't hear myself in the headset. I gotta turn the headset up. Check 1 2. Now I can hear myself better. That's good. Okay, I can kind of hear myself now. So you can hear me normal voice when I'm calling out the chart daytime, right, over Bloomberg. Okay. It's kind of weird wearing the headset.
Asia is at the forefront of
It's like I wish I could turn my voice up in the headset.
In Tokyo.
And I'm Heidi Stradwatts here in Sydney with a trading day begins.
Because if I got the other guys talking in there, it's going to be weird.
The action to get you set up with the numbers, news, and knowledge you need for the day ahead.
Check 1, 2. Yeah, I can barely hear myself.
We've been waiting for this moment.
The opportunity of a century.
I don't know. We'll play with it. I'll figure it out. All right, I'm going to leave it like this for now. So, can you hear volume change, or is that just in my headset?
Making money isn't
I'm moving
about
the
drowning
volume
in
up and down.
emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do.
Can you hear the
every
volume
morning.
going up and down, or is it
This
steady?
Bloomberg
No, it's
Surveillance.
just in my headset. Okay, that's good. So I can turn this part down. Check 1, 2. All right.
You're watching the Asia trade and taking a look at how futures are setting up in Hong Kong.
Yeah, you see the volume doesn't
China, you can
affect
see
my
here
headset.
expecting sharp losses across the board. The question is how long, though, if we
All right,
do
let
see
me
that
ask-
sort of trading activity, will it be
If I did this, oh no,
out
that's
from,
off.
from Citi, for instance, saying that, again, stock market volatility is likely, but we've also
Yeah.
heard from Pantheon's chief or senior China economist, Kelvin Lam, who's saying
So that's
we will
normal
see that
daytime
initial
volume.
drop, but they should start to pare the losses as well. Still on China, because the NBA has returned to China with preseason games in Macau. That's 6 years after fallout over the protests in Hong Kong put the relationship on ice. Our chief North Asia correspondent,
Check 1,
Stephen
2,
Engel,
check
sent
1,
this
2.
report.
Check, check, check. All right. We'll see how it goes. I'll play with it.
Six-time NBA All-Star and Hall of Famer Mitch
I don't know
Richmond
how to
is
turn the
part
mic
of
up
the NBA's,
louder.
dare I say, full-court press to win back fans in China.
Or maybe
after a
if I
six-year
can just
freeze
make
of
sure
its annual
they can
China
hear me.
Games.
Well, I got to be able to hear that. All right. I don't know how loud Discord. Maybe I can adjust the Discord. No, I have no idea. All right. I'm going to turn it back up to nighttime volume hazard map. And I'm done playing with it for tonight. So it's to where we can try it out. We can try it out tomorrow and see if it works, and then I can figure out how to fix it. All right, brother. I'll see you at 8 o'clock tomorrow, man. I'm going to turn up nighttime volume now.
Now in the Chinese gambling hub of Macau through a multi-year deal with Las Vegas Sands.
There's a lot going on with basketball in terms of its future potential, but I think it's going to be investment-led. And I think there's a huge opportunity here in China.
Simply put, China is a market that's too big for the NBA to ignore. And for China, the NBA is too popular for it to ignore. S&P's staggering half of China's adult netizens watch NBA games online, including one NBA player who's from China.
I feel blessed, be a part of this family. Since I was a kid, I was watching on the TV. Right now, it's like a dream come true for me.
From my perspective, it's always been an extreme amount of love. I have, a tremendous amount of respect for, the country of China, and they have the same for us.
A sentiment echoed by former football great David Beckham, who was on hand as a multiple brand ambassador in China and told me he believes sports has the ability to break down barriers. Soft power, if you will.
My connection started a long time ago with China. And every time that I go into a new country, a new city, I jump into the culture straight away. So it's about the food, it's about the people, it's about the fans.
This year's NBA China Games in Macau feature two teams that, while they've come close, have actually never won the NBA title. But there may be another prize at hand, and that is winning over fans for their teams in the Greater China region, especially now that the former Houston Rockets center Yao Ming has been out of the league for more than a decade now. The two teams are the Phoenix Suns at the far basket and also the Brooklyn Nets. Oh, by the way, the Nets are owned by Alibaba co-founder Joe Tsai.
Yao Ming is no longer with the Houston Rockets, and I'd rather spend more time in New York than in Houston, and I'm going to make the Nets China's team.
Call it a draw on China bragging rights as the Nets and Suns split their two games here at the Venetian Arena. Stephen Engel, Bloomberg News, Macau.
Well, staying with the push for sports in China, Adidas sees Washington's fresh tariff threats against Beijing having little impact on the company's global strategy. CEO Bjorn Gulden says while uncertainty remains a concern, 80% of its business is outside the US. Gulden also says the company is reallocating products to minimize costs.
We used to design a lot of products, especially in Europe, and then produce them in China. What is new is that we design a lot of the products now in China. We have a lot of talented designers and product people here. So the models have changed. I would say that more than 60% of the product we sell in China are now designed in China. And of course, we also try to produce it in China.
Well, trade tensions are going to be the focus across markets. We've got Taiwan opening next in just under 5 minutes from now. You can see a huge sell-off. That's the ADRs for TSMC over the past few sessions, but certainly really reflecting President Trump's latest trade rhetoric toward China. Also concern around rare earths, export controls and what that means as well. So we will be watching that stock very closely as we see tech stocks already selling off in Korea. More ahead.
A cidade estava sitiada.
Isso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Mann with David Ingles.
Good morning. Let's get to your top stories today. Asian stocks dropping with Chinese assets facing pressure as we approach the open. You have fresh trade tensions between the U.S. and China butts a bounce in U.S. futures suggests investors are pulling back from worst-case scenarios, with President Trump opening the door to a deal.
China warning of retaliation and urging further talks after Trump announces plans on double tariffs on Chinese goods, along with sweeping curbs on critical software. Stay tuned for top insights on the trade war and markets throughout the program.
Plus, the NBA returns to China, working to rebuild its brand even as geopolitical tensions continue to rise. From the Asia Pacific, welcome to the show. Hope you're all well. Looking at the approach to the Open is a bad one. It could have been worse given the latest lines coming through and the opening of that door, of course, to perhaps a path towards a deal. But all that being said is just to say that we are expecting Chinese markets, as you can see on your screens, to play some massive catch down given where markets traded into the weekend. Flip the page, please, if you want to get an indication, of course, of some of these ETFs in the U.S. or the big names. So you have ASX, you have the CSI 300 tracker on your screens. We were down 4.5%. This is as of Friday. Just again, take note. Crane shares maybe at the play on tech, and we were down closer to 8-9% in some of the big tech names. This is on Friday. Right now, the good news is, and us pulling back from the edge, is really some of the rhetoric coming through out of Donald Trump before he got on Air Force One. About 3 hours or so back, he says the November 1 is still going to happen, but he is confident that he could hammer out something. Asia Pacific stocks coming up on your screens. Take note, Japan is shut, although the poll we're getting today is as of this opening in Taiwan. We're down 3%, 0.6%. But the good news, as you can see, is the yen is on the weaker side of things, and of course, S&P futures are catching a bid Monday morning. Very quickly, gold, oil, copper, and crypto hit massively, of course, and we are seeing some green on your screen, which I guess is indicative of this slash détente we're getting as far as this risk sell-off is concerned. Just very quickly, so we're looking at 2-3%, right, going into the open today decline. So the 50-day moving average is going to be very much in focus today. That's coming up very, very shortly, because currently we closed above, just about 3% above that level. We'll see whether we test this and whether or not we bounce across this support.
Yeah, you got to wonder, right? Is this just political noise? Is just posturing ahead of this APEC meeting, and whether, does it put in doubt now whether these presidents could actually meet in Korea? Certainly that is a big question, but you mentioned about, there is a bit of buffer given what we heard from those Trump comments overnight. And it seems like in some ways, markets are taking this, at least in some cases, stride. You do see a bit of cash down, as you mentioned, but there are nuances where people are looking past this here right now in terms of what to watch in the agenda. So we talk about where things stand in the U.S.-China trade talks here right now, the national team ETFs, whether we do see any sort of buying from that end, gold mining stocks, of course, and basically anything that's really risk-related here this morning. Trade data, we're still expected coming through for September, so interesting to see how those numbers feel and how strong really the export side of things continues to be. That renminbi fix could be quite telling today, given some of the FX moves we've seen, and of course, offshore HIBOR as well.
Yeah, lots to watch going into the open today. Also, in the last 30 minutes, just to mention, of course, we're looking at shares of China Vanke following the resignation of the chairman. Right, now back to the top story. So on Friday, had President Trump upping the rhetoric as far as trade tensions go. You had a statement coming out of China on Sunday, Ministry of Commerce, and then a few hours back, President Trump, as we were just alluding to there, pulling back ever so slightly from the edge. Let's bring in Min Lo, of course, a China correspondent. She's with us out of Shanghai this morning to help us understand where we are. Min, can I just bring you in here, then we'll talk about some of what we've heard so far. So get us up to speed here.
Yeah, well, this morning, President Trump appears to be offering an off-ramp to China, right? He praised President Xi on Truth Social. He said, don't worry about China. Highly respected President Xi just had a bad moment. He doesn't want depression for his country. Neither do I. The USA wants to help China. We're hearing similar tones from J.D. Vance on Fox News as well. He's calling on China to take the reasonable path here, saying the U.S. will also be reasonable if China is as well. But so far, I've been in Shanghai over the weekend, and I've been speaking to people here from the private sector, from official circles, and also from what we're seeing on Chinese state media as well. It seems like the sense I'm getting here is that China feels the U.S. is acting on bad faith, and the U.S. credibility is at stake because there appears to be this implicit understanding after the Madrid talks that both sides are going to keep things calm until Trump and Xi meets. And there was a clear warning from President Xi in his phone call to Trump that any unilateral actions could undo the multiple rounds of trade talks so far. But look what happened over the weekend. The Chinese Commerce Ministry officially defending its actions, saying the U.S. was the one that took new restrictive measures. The first big one came just about 10 days after that Xi-Trump phone call, when the U.S. expanded the rules around the entity list. And that really kickstarted this whole spiral of China tightening the noose on rare earths, both sides imposing those shipping levies on each other's vessels docking in each other's ports. And that's where we are today.
Yeah, it seems it brings us back, almost a throwback to what happened back in April, right? Markets in some parts of it at least are feeling it. I want to bring up that soundbite from the president who just spoke about opening the door still to a trade deal. Let's listen in.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened. And I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
You mentioned tariffs, so we're talking about 100% tariffs now, once again. What are the implications, Min, for the Chinese economy, and what other options does China have at this point?
Well, obviously, the biggest implication is on trade, right? It has the potential to just rupture all trade between U.S. and China, and U.S. importers will have to find other sources of supplies. So that's the big implication here. But I want to point out, so far, China's actions, the rare earths control especially, is the strongest attempt by China yet at long-arm jurisdiction, because it applies to overseas exporters of goods that contains even trace elements of Chinese rare earths. Now, if that sounds familiar, it's because it's similar to the FDPR rule that the U.S. has, Foreign Direct Product Rule, which the U.S. used to apply on China to restrict its access to U.S. technology when it comes to semiconductor equipment that are made outside of the U.S. So it's China's first attempt, or the strongest attempt yet at this extraterritorial rule, and that's a big leverage that China has. And the Chinese Commerce Ministry over the weekend clarified that this is an export control. It's not a ban. There is a clear signal here that there is a space to dial down tension, because they're saying they're willing to work with countries to smooth things over, to allow stable flows of those rare earths if they work together with one another. So we have until November 1st, about a couple of weeks from now, for both sides to dial down tension. But of course, China also has other tools in its toolbox. It is able to disrupt other economic engines of the U.S. You think about Apple trying to diversify its supply chain out of China, but so far that's been stalled by Beijing, restricting Apple's ability to work with the likes of Foxconn and other Chinese contractors that are key to Apple. And here's what one businessman that was here in Shanghai over the weekend had to say about the impact of tariffs. Have a listen.
We have to see how tariffs sort of come out at the end of the day. We'll see what happens, particularly with the negotiation between the U.S. and China. Having said that, all that does is delay things. I mean, people, when there's an uncertainty, they don't make decisions. I'm talking about the advertising industry now. They don't make decisions as quickly as they should do, or they postpone making a decision because they're uncertain about the results. So it's not good news.
That was Martin Sorrell, who is the head of a global advertising agency, and he tells me he's still bullish on China because he's confident that Chinese companies are agile enough to shift with the global trade flows. As you can see from the trade data today, expectations are we're going to see an increase in trade year on year in September.
All right, Min, thank you, Min Lo, there, our China correspondent joining us out of Shanghai here this morning. Let's bring our next guest, Jikai Chen, head of Asian and Global EM Equities at BNP Paribas Asset Management. Jikai, it's great to have you here in our studios. Does it feel like it's almost like brings us back to 6 months ago and really this back and forth and tit for tat that we're seeing between U.S. and China? And what do you do in terms of investments now?
I don't think it's avoidable, right? I think we've been in this particular type of watching for news flow, watching for any tariff news overnight since pretty much November of last year. I think this is a new phase, shall we say. I think a lot of the large economies have reached tariff deals with the U.S. administration. I think this is the biggest one that's still outstanding. And I think about a week or two before this latest warning from President Trump, we saw that there was probably some signs of deterioration. You saw that both countries were looking to ratchet up further controls about exports to each other or sensitive technology. And obviously China had a new regulations on the rare earths. As mentioned earlier, like even trace amounts will now be controlled. I think that probably rattled a little bit of the US administration in terms of what they wanted to do, and hence the warning on Friday. Marcus really sold off. We probably will follow a little bit today. But earlier today, before he left for the Middle East, we obviously saw a little bit of a de-escalation with the possibility of a deal or meetings.
Yeah.
I think it's also important to note that why he chose November 1st. I think we forgot that the APEC meeting is in Seoul at the end of this month. And I believe the last day is November 1st. For the leaders' meeting. So perhaps this lays the groundwork for some negotiations behind the ground and perhaps a personal meeting face-to-face between two leaders. And we just have to wait and see. Unfortunately, we are held to these type of events, if you will, investing right now.
Right. That we're likely going to get a gap lower at the open, to your point. So would you buy today's dip? Would you wait 2 weeks? What's the short-term view from an asset manager?
We do not make a lot of short-term trades, if you will. I think this is something that we've been watching for since, beginning of the year. Yeah. I think one of the, as I mentioned earlier, this is one of the big ones that's still missing in terms of tariffs. Initially, thought that we have until like mid-November to decide, but I think this is something that is coming to fore now. I think the markets will adjust. We are relatively well positioned, I think, in terms of where we are right now. We're not looking to making any knee-jerk moves ahead of this news. Yeah.
It's coming at a time when China markets are, this slow bull run has been doing very well in some ways. Do you think there's any risk of this being upended now in the China market, especially when it comes to these big beta plays that people have been really kind of piling into?
Hard to say. I think from where we are here, from beginning of year, obviously has been a great run in Chinese equities. A lot of the large caps have gone up a lot. I think this is reflection of the fact that at the very beginning of the year, a lot of investors were really underweight Chinese equities, if you will. Then with the DeepSeek moment, seems so long ago, it raised a new fervor of investment into Chinese equities to see if there's any alternative investment destination, if you will, for AI exposures. I think this will probably continue, if you will. I think most investors now are probably neutral, but I wouldn't say that a lot of people are very overweight Chinese equities. And obviously what has happened in the last quarter or so has also caught the eyes of domestic investors. They're also piling in. So we just have to see today's correction and see what the markets react to it, and wait for further news between the two administrations in terms of where the tariffs will end up.
Kai Chen, of course, we'll have more with him in a couple of minutes. Get into, of course, some of his other conviction calls. Head of Asian and also global EM equities at BNP Paribas Asset Management. Also ahead here on shows, much more on these renewed U.S.-China trade tensions, and really what a reminder from Friday. As you can see, we have a great lineup of speakers coming up out of Goldman Sachs, HSBC, Lotus Asset, and also the head of China practice at Eurasia Group joins us at those times, throughout the course of this morning, counting down to the open of trade. Shanghai, Shenzhen, and here in Hong Kong, futures are pointing substantially lower this Monday morning. This is the China Show.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Welcome back. Right, so the renminbi fix of the day is out. This is important because this does give the PBOC maybe an opportunity to backstop some risk appetite today. As you can see, we're now stronger in the Chinese currency. We still have a trading at about 713 handle, though. 710 is the midpoint of the day coming through out of the Chinese central bank.
Yeah, Jikai Chen is still with us here at Asian and Global EM Equities at BNP Paribas Asset Management. We're just talking about some parts of this kind of China rally that still remain quite strong. I mean, you've made some adjustments, though, when it comes to the consumption space and the like. Tell us a bit more what you've done.
So, since the beginning of the year, we've taken some of the consumer discretionary space, particularly on the concern that there's more competitions going through. As you know, one of the big companies decided to enter several lines of competition. And that's led to quite a bit of concern about how the margins are going to look for some of the e-commerce companies. So we've dialed some of those exposure back in discretionary and put them into some of the IT hardware space to take advantage of the fact that post the DeepSeek moment, we have seen the hyperscalers in the US continue to ramp up their CapEx. CapEx going into AI continues to exceed people's expectations, and that's obviously quite positive for Asia, because at the end of the day, we are the AI supply chain for the rest of the world. So that has been helpful so far this year.
That's interesting, given, to your point, people have been trying to figure out how to best play AI in China, and I think for the last, let's call it 4 weeks or so, some of the platform companies became those proxies.
Yes.
So you think hardware is the best way to play that as far as China goes?
I think hardware is one area we are confident that when we do the numbers and look into the structural flows, we can at least hang on to the fact that the CapEx are coming through and the CapEx will need to be spent, and some of these companies in our economies, particularly in North Asia, will be the one to benefit from this increased order flows, the likes that we've seen in South Korea as well in Taiwan as economy basis. In China, it's a bit more tricky. I think there's still quite a bit of advancement, definitely in terms of AI models that are put up by the large platform companies. But at the same time, it's not easy to basically identify a stream of revenue that's going to come through from some of these companies at this point in time, directly related to AI. So we are positioned in there, and we are benefiting from some of those appreciation on prices that we've seen so far. But right now, it's not easy still to find, like, say, tie the AI team to the AI revenues flow in some of these Chinese companies right now.
And tell us about what the pool of investments. I mean, does it look like it's just quite limited to names that we don't really know at this point? I mean, you talk about this kind of scarcity premium.
Yeah, there's definitely a big scarcity premium in some of the local AI chip companies, right? So we've taken a look at a couple of them, and the multiples are really quite breathtaking. Some of those names are trading at 300 times PE. When you look at the world leaders in terms of AI chip design, they're nowhere close to that, right? And some of these companies are probably still barely profitable, breaking even, if you will, next year. So it's very difficult for us to basically take the leap of faith and basically go into some of these more domestic-oriented AI names at this point in time.
Do you have enough quality information on those companies? I think Yvonne and I were joking about this. I think about 1 or 2 months back. A name like Cambricon, for example, no one had really talked about it to this extent, and then here we are trying to understand what the company does, what they do, and to what extent. As someone on the buy side, do you think you have enough sell side support as it pertains to that cohort of that ecosystem?
Still very new, I would say. I think the sales are also busy doing their work on companies like this.
Yeah.
But as you can see, this is something that's quite new. Again, it seems so long ago, but this basically took off after the DeepSeek moment in terms of like perhaps a Chinese alternative stream in terms of AI design, AI models. They've already proven themselves in AI models. Then this question mark is their ability to leapfrog or have a breakthrough on the chip design part. So far, I think the jury is still out on that at this particular point.
Yeah, and it's interesting too. I mean, what's different this time around? I'm looking broadly speaking in terms of EM. Is that it seems like the Fed's resumed this rate cut cycle, and which is something that is quite interesting in the face of all these geopolitical risks. Is that still a very supportive sort of narrative to kind of continue to lean into risk at the moment?
I think it is to a certain extent, right? If you look back in November of last year, there was a lot of complicated issues that's going on. One, the labor market was starting to soften, but inflation numbers are still quite strong, so the Fed basically paused. And we've been on pause until the last meeting where they resumed the rate reduction process. And this is helpful, generally speaking, for emerging economies, because for emerging economies, a weaker dollar in a resilient U.S. economy tends to be quite okay setup, because the overall demand is still all right from the U.S. consumer, which is the largest consumer base in the world still. And it also allows a lot of the emerging markets, central banks, to have a little bit more flexibility in terms of managing their domestic interest rate to mitigate any potential economic slowdown, because they don't have to worry as much on their currency compared to the US dollar. So I think this setup is still pretty good for emerging markets right now.
Jerkai Chen, fantastic. Thank you so much. And yeah, I guess you guys are going to sit this one out for today as far as the gap lower. Yeah, there you go.
Thank you.
Yeah, could control one's emotions given a day like today. Jerkai Chen, fantastic. Thank you so much, Head of Asian and Global EM Equities at BNP Paribas. Asset Management, yep, Hang Seng Index 2.5% lower, 650 points to the downside. In terms of market breadth, that should be also quite negative as far as that is concerned. So we are going into a risk-off session. How long that lasts, who knows? We'll find out. A full preview is coming up next. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
As expected, equity markets are somewhat falling out of bed. Let's see to what extent and whether or not we'll get buying coming through to support these markets. But yes, this catch-down trade, not just in Hong Kong, but we're seeing that in the likes of Korea and also in Taiwan today. really on the back of this re-escalation of trade tensions.
And what is falling the most is the winners of this rally, right? They take a look at the beta stocks like the big tech. That certainly is the one where we're seeing the biggest blow when it comes to HS Tech here this morning. There you go. Alibaba's down close to 4% here right now, 3% losses for Tencent and JD.com. We're also focusing on the domestic chip space, given that this is kind of where that leveraging sort of options or tactics really are, rare earths versus really chips at this point. And there you go. You are seeing the likes of SMIC, Hua Hong Semi, also who have been darlings in this whole market as well, are also down by 2 to 3% here right now. We're focusing on some of the rare earth stocks. You saw some of the Aussie ones already react to some of these news here, but there you go. You are seeing the likes of Ganfeng Lithium down some 5%. CATL8 shares also seeing drops of similar measure. We're down 28 bucks there right now. So there you go. And gold miners, right? Oh, let's talk about Ivanka first. So there was actually some news on the corporate side of that one. Chairman resigning. We're taking a look at the stock in particular. There you go.
Down 5.
Down some 5% as well. So still, there is some news to kind of look into this, all of this, in the face of all of these kind of geopolitical noise. Gold miners, though, also we're focusing on here today.
Yeah, because most of the indicators of risk appetite today actually started to pick up, but obviously gold has been dancing to its own tune, and it's actually seeing more upside as we speak. So we're down trading back above 4,000. It's mixed across some of the gold plays. It's hard to sort of split up what we're seeing as far as the actual miners are concerned, given how far some of these names have actually rallied. The same can be said about Vanco, which actually also did see some downside, as Yvonne is pointing out, down to maybe that news and now to maybe the risk aversion that's out there across these markets. Hang Seng Index down about 2.5% as we approach the opening bell. All but 2 stocks are actually down going into the open today. The opening bell coming up next. This is the China Show. Good morning.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Welcome back. You're watching the China Show, and yeah, we're down about 2% on A50 futures. We're down 2.5% on the Hang Seng Index. In your pre-markets, this massive catch-down trade we're seeing just about across the region. Japan is shut, although similar move in futures there on the Nikkei. U.S. futures, though, are pointing to some stability going into the rest of the session. But all that said, we are expecting to see a gap lower at the open, this adjustment coming through out of this renewed flare up in trade conversations here.
And we're watching all the proxies, right? Whether it is the chip space, rare earth space, soybeans, all the like of really kind of what to measure how to look at these latest escalation, which was sudden. We weren't expecting this, given that we've been in this whole kind of trade truce for months now, and all of a sudden it feels like it's April all over again, at least sentiment-wise. But then again, we talked about President Trump, J.D. Vance, the Vice President, also speaking over the weekend, just trying to dial down the temperature just a little bit before his trip to the Middle East. President Trump did mention that they are still leaving the door open when it comes to some sort of trade deal as well, and we still have a couple more days until, of course, APEC. There you go. We're still seeing, though, a massive sort of gap lower when it comes to the onshore market. CSI 300, we're down close to 2.5% here right now. You are seeing that kind of rush into some of the CGB space, so bonds are catching a bid here this morning. The 30-year yield is down some 4 basis points as well. You take a look at the commodities are also kind of falling out of bed. Shanghai crude is down some 3%. Copper is also down 2.5%. And you are seeing some of these big cap names like CATL. A shares are down some 3% here right now. And we're focusing a little bit more when it comes to Hong Kong. It is that sort of tech exuberance is now at risk, possibly, just given that these were kind of the leaders of this rally. And there you go. HS Tech is down some 2%, given the fact that we are seeing these fresh threats when it comes to export curbs in AI, in chips and the like from the U.S. That's the first time that we are reacting to this here in China, right? So there you go. You are seeing when it comes to the big names like Alibaba is down close to 4%. Tencent, Meituan are down 1.5% or more. Domestic chips, though, you are seeing some nuances, right? So SMIC Huahong actually now that things have opened up are doing a little bit better. On the flip side, Capricorn Tech is going down about 0.75%, and OmniVision is going down 3%. So there you go. There's a bit of mixed reaction there when it comes to some of these national sort of champions. And the national team ETFs, we're watching very closely whether we do see any sort of buying from some of these sort of support E-fund and the like here. Not seeing too much here right now. We're still seeing a bit of a negative reaction so far in some of these ETFs.
Yeah, it would be a good indication if there is some market support that's coming through as well. It certainly goes into the A and H share conversation that maybe the onshore markets might fare slightly better compared to the offshore markets, given, of course, that they do have that there onshore. Just to also mention, we've sort of parsed through a lot of the commentary that's come through, given the latest developments. And here is just a quick glance at what so far we've gathered from analysts talking about the escalating trade tensions between the U.S. and China. Let's start things off here with the note coming out of Andrew Tilton, Hui Shan, and their team there at Goldman on the eco front. This re-escalation suggests a wider range of outcomes than was the case ahead of the last round of talks. There is a possibility of greater concessions and possibly lower tariffs, but also the risk of substantial new export restrictions and higher tariffs. Nomura, flip the page, please. Also coming out with there, this is Ting Lu and his team. This escalation of trade tensions is more about posturing for upcoming negotiations, including possible, and hopefully for everyone here, re-engagement, of course, in that meeting between the two presidents at APEC. And JP Morgan, very quickly, Wendy Liu, as far as strategy goes, should the Chinese stock market experience an outsized decline, which is perhaps arguably what we're seeing today, this is a window. This is a buy-the-dip opportunity that could emerge before the year end. Now, despite all of that, you have a look at the consumption sector, right? So you have our folks at Bloomberg Intelligence, because we also just happen to be wrapping up, of course, Golden Week, and we now have data on this as well. Marvin Chen and his team effectively saying here that the consumption sector could be an overall bright spot. There are nuances, of course, within the categories, but some analysts noting that positive figures during the Golden Week. Our team here at Bloomberg Intelligence notes that tourist trips hit a record high 888 million, while spending, or general spending, exceeded 800 billion. They say strong travel, leisure activity suggests households may finally be moving past these pandemic-era caution. Momentum was evident across dining, entertainment, and travel. The sectors most affected, of course, from events during and lockdowns during the pandemic.
Yeah. Meanwhile, Goldman Sachs is chiming in, right? So they've been talking a little bit more and crunching the numbers, and maybe not as optimistic as what Marvin and his team has been talking about, right? So they said goods consumption remains soft, with downside in pricing, despite you're starting to see strong bright spots like tourism. Traffic remaining solid. The demand softness we observed in the second quarter, the third quarter, continued into the National Day holiday, with sales growth of key retail and restaurant enterprises at just under 3%, which is lower than previous holidays this year. Joining us now is Michelle Chang, co-head of Asia Consumer Research at Goldman Sachs. Seems like depending on what metric you look at, you see different things. How would we interpret the latest sort of Golden Week data?
Yeah. So I think the biggest takeaway is there's a clear shift from consumer goods to more experience. Yeah, so I think during Golden Week, clearly traffic is really good. And of course, you can argue that it's a long holiday, so people probably travel more, so that they didn't have time to visit the shopping malls to shop. And also, you remember we have earlier Singles Day promotion activities which kick in recently. So consumers might hold back their purchasing during the holiday. But having said that, in the past few holidays, we still see holiday sales is still slightly better than the normal time. And this time, 2.7% growth only, compared with you have 6% in Labor Day and 4% in Chinese New Year. Even compared with past 2 months, July, August, the retail sales growth is like 3 to 4%. This 2.7% indeed is not too exciting. But having said that, break down into the category, we have been seeing that consumers want more experience. And also, if you look at some subsectors, there are still some bright side related to experience. And also, if the companies, they can figure out some new growth opportunities, there are still category or the penetration stories. They are still more resilient. Yeah, but overall, I think aside from the general top line number is not too exciting, one key trend we have been seeing is pricing and deflation. Yeah, so from end of second quarter, we start to see that the pricing trend turn softer, and this might continue. Even we should have an easier base in the second half.
How much did discounts help?
On the one side, you have the food delivery platform fight earlier, although it peaked out in July, August. But looking at different freshly made drink company, earlier you can buy a cup of coffee or milk tea at 15, 16 renminbi per cups. But in the recent trading, it's probably only like 10 or even below. Wow. So it's actually quite big discount. And also in some sectors, like apparel, it's actually not really the inventory issue. In China, brands and retailers, they actually have capability to control the inventory pretty well. But it's more like you need to do promotions to attract consumers' attention. So discount, again, base should be easier in second half, but we still see third quarter, the promotion activity is still quite intense.
How do you look at in subsectors, right? Everything from jewelry to restaurants to, sportswear. I mean, what stood out to you?
So a few sectors we still like, definitely those with volume growth story. So basically, we take aside the pricing for now. We hope to see some pricing improvement, but if the sector still have volume story and it's still a safe bottom support, so some new consumer ideas like IP diversified retailers, they are still doing really well, and pet foods is still doing well.
Pet food, okay.
Yeah, and also on the other side, for the bigger categories, actually beverage, no matter it's packaged RTD beverage or the freshly made drink, these beverages still relatively doing well because of volume growth. And sportswear, I think, is still relative sectors you see general volume growth. But in near term, you just see a huge divergence in terms of the brand's performance. And maybe one more interesting thing to add is we have been talking about rational spending, kind of consumer trading down in the past few quarters. But in the past 2 quarters, some premium segment is actually doing better. So in sportswear, in cosmetics, even for some luxury, you see some luxury shopping malls traffic, they really improve because of the low base. So not sure whether it's a little bit like a stock market wealth effect or it's just easy base, but in the past 2 quarters, it's a premium if you can really deliver, the brand can really tell some good stories. People still want to pay premium. But in the mass, it's really, really competitive on the functionality, on the pricing.
So would you, from an investment strategy perspective, would investors be better off leaning towards these brands or companies on the higher price points?
Not necessarily. I think ultimately, I think if you want to scale, definitely the affordability is still key. So value for money, and if they can capture the lower tier city opportunities, definitely from the scale perspective, this is still the areas they can explore. But for premium segment, niche brands and in the good brand cycle, actually there's opportunity. When we look at the consumer space, even in cosmetics, in jewelry, we actually see aggregate challenges. But you can still always pick up some brands that are doing well because they have right product portfolio and right brand momentum in the coming periods of time.
What else should we be watching out for? Obviously, when it comes to the food delivery space, you mentioned about maybe we reached a peak when it comes to the competition. But in terms of subsidies, should we expect that to continue into 2026?
Yeah, that's a great point. There's a lot of debate, and honestly, to some extent, market pricing huge corrections next year. And this is why a couple of bubble tea companies, they had good runs in the first 7 months, and then share price pulled back by like 20-30%. So on the one side, we indeed admit that this makes the whole competitive landscape very complicated. But on the other side, we always think that it's not just the subsidy, because if you break down into different brands, some brands are actually doing much better because they have new products. So again, still go back to each companies whether they can figure out some new ways to serve, to engage with consumers. So looking into next year, on the one side, we factor in same-store sales decline, but some brands, they probably will be still performing better. And on top of that, they have store expansion, network expansion to support still pretty attractive growth next year.
It's hard to, I wonder how you analyze the market now, because on one hand, you look at the headline number and you think, okay, overall demand is quite weak. But also, do you think part of it is consumers have just gotten used to discounts and subsidies? In other words, demand could be okay, but if people expect discounts to continue, I'm not going to buy until they give me the discounts. I wonder how you would best characterize the Chinese consumer right now.
Yeah, and this is something we also worry about. Yeah, so earlier we do see some stabilization of the pricing, and initially it's not really better confidence. Initially it's more like, if I gave more discount, it couldn't drive traffic further. So the brands, company, they started to be a little bit more disciplined. Yeah, so hopefully I think the competition will be still a little bit rationalized, and so that people will still go back to pricing, because ultimately if it's all about pricing, and then different companies' strengths in product innovations and storytelling will be just underestimated. Yeah, but so that's why I think in the coming probably few quarters, if we still see pricing still uncertain, and if that's a volume growth, you still have the natural penetration story. And aside from the domestic theme, I think a lot of Chinese consumer companies, they are looking for is actually overseas expansion. Although these tariffs make things a little bit complicated in the near term, but we still see that there's decent growth opportunities overseas. So by leveraging their established competitive edge in China, and especially I think it's the quick response to what consumers want, and there's still decent white space to grow globally.
Very quickly, what markets are those? Is that Europe, Southeast Asia?
It's actually everywhere.
Including the U.S.?
Yeah, including the U.S. and Europe. Yeah.
Interesting.
Very nice. Goldman Sachs there, one of the reports they have here is the Goldman Sachs Guide to Chinese Restaurants. It's not, of course, a restaurant's guide, but really Chinese restaurants and how you play that. Michelle Chang, thank you so much. Fantastic there out of Goldman. All right, a quick glance at these markets. 13 minutes into the cash market session. We're not doing well. We're coming off lows, I believe, in some cases. There we go, on your screens. Plenty more ahead. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back. Among the sectors we're tracking very closely, and there are many today given the sell-off, we're looking at property specifically on the back of this news of the abrupt resignation of the China Vanke chairman, who actually stepped in amid an already abrupt management overhaul back in January. So we'll continue to track this story. It's dragging down the space. We're down about 5% on the stock. We're down 3% on the sector.
Yep. So coming at a time when the financial position of the developer is already quite vulnerable here, and have a wall of really onshore debt maturities as well. So there you go. Some other big political stories that we're tracking for you today. President Trump has reiterated that the war in Gaza is over and that the truce will hold. He's traveling to Israel and is scheduled to address Parliament later on Monday. Now, if the deal holds, it would represent a major step towards lasting peace, something neither Trump nor his predecessor Joe Biden was able to secure in previous rounds of negotiations.
The war is over, okay? You understand that? I think people are a lot of reasons why it's going to hold, but I think people are tired of it. It's been centuries, okay? Not just recent, it's been centuries. I think people are tired of it. Yeah, the ceasefire is going to hold.
Tensions are escalating in the South China Sea after the Philippines accused a Chinese ship of deliberately ramming a government vessel. The Philippine Coast Guard says the Chinese ship had already fired water cannon before the collision on Sunday, causing damage to its vessel but no injuries. The Chinese Coast Guard says it was conducting, quote, normal law enforcement operations near the Spratly Islands.
Right, let's stay in Southeast Asia here. So let's talk about Malaysia. So the second Minister of Finance says that the country's economy is actually being supported by strong private consumption. Speaking to Bloomberg, Amir Hamzah Azizan has also talked about the resilience of the country's currency, the ringgit, reflecting really the solid fundamentals of the economy, and also he expects more foreign inflows to continue.
If you look at it, we are first half year, 190 billion of FDIs coming in and approved investments. We're seeing domestic investments also growing well. We've seen, if I use as a proxy, and I look back at EPF as a proxy of formal employment, EPF's contribution rates have gone up. It's growing at 9% compared to the previous year. So that's a sign that employment is still good. My money is still being pumped into the system. And the interventions that we're doing to lift the flow so that the citizenry has money in its hands are also helping drive private consumption. So I think those elements have actually created resilience in the Malaysian economy. And therefore, people look at Malaysia in a slightly different form. And then with the slowing down of the growth of interest rates in other countries, particularly the US, where they have been cutting, that's allowed the differential to get smaller, so the ringgit has equally strengthened.
Do you expect the inflows to pick up speed and further boost the currency in the next 12, 24 months?
I think it was important for us to make sure that 2026 is a year that we have enough built in to sustain the domestic economy. So I think that resilience will actually show value to investors going outside. The government fiscal reform is showing value to it. So we started off with a fiscal deficit to GDP of 6.4%. This year we'll end up at 3.8. Next year we'll down at 3.5. So there is resolve. And if you see at all the reforms that we've been doing, it's about putting in fiscal discipline is coming in. And those are good signs to investors that are coming in. We've had a stable government, clarity of policy, and that's helped to attract investments.
So supporting the currency, the thing is, the ringgit's performance is also contingent on the dollar, which also depends on what the Fed does. Right now, expectations are perhaps for 2 cuts, but that may not happen. How do you see that playing out into your currency?
Well, even if you look at this year, there were expectations of further cuts, and further cuts didn't come in, right? But the ringgit still stayed resilient, because the fundamentals are still strong, and the differentials have remained quite reasonable along that line. So I think even if the Fed slows down its process, the ringgit still has a lot of wind behind it to be able to push ahead along the way.
Tariffs are a big uncertainty. You saw how, President Trump is imposing additional 100% tariffs on China, taking it to 130%. This is your largest trading partner, contributing to about 17% of overall trade. And some say 130% tariffs would mean stagflation, supply chain disruptions. How might that impact the Malaysian economy?
I think we've seen what's transpiring with the changing tariffs in the first half of the year. And when we started the journey early on in the year, the signals were tariff is going to come in, it's going to rattle the markets quite dramatically. Countries will have to do dramatic shifts in order to manage it. But over time, practicality started to come in because it's a very much more integrated supply chain that we're having on a global scale. So I think this recent shifts will probably also find a better landing in the not-too-distant future, and we'll come back to what is probably a practicable solution. And I think both sides are figuring that one out. So from a Malaysian point of view, the key is to actually understand what is the components of our trade. And our trade are E&E and semiconductors, but we also have still the commodities and so on anchoring the trade. So if we continue to do those well, semiconductors, which is a very narrow supply chain, continues to tick on a better note, I think we'll be able to ride it out.
Amir Hamzah Azizan, their second Malaysian Minister of Finance and Economy, speaking exclusively with Insight anchor Haslinda Amin. Now, if you're a subscriber and want to rewatch that interview, you can watch via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages throughout the shows as well. Check it out at TV Go.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Some corporate stories we're tracking for you today. Didi Autonomous Driving says it's raised $280 million in a new round of financing. A statement posted on its official WeChat says investors include the Zhongguancun Science City Technology Growth Fund, JC Group, and Didi itself. The company says the capital will be used to accelerate AI research and the deployment of Level 4 autonomous driving technology. China Wanka's recently appointed chairman has resigned from the role in a new blow to the embattled developer facing liquidity challenges. An exchange filing says Xing's resignation is due to personal reasons. Wonka has elected Huang Liping as the new chairman. The surprise twist threatens to further cloud the outlook for Wonka ahead of a wall of onshore debt maturities.
All right, just very quickly, looking at the chip space, semiconductors, this is across the region, so everything from Samsung, SK Hynix down, and TSMC is coming up as well there. Down substantially. The opposite is taking place with Cambricon now actually coming up, SMIC on your screens also seeing some upside. Again, perhaps a direct function of the trade rhetoric heating up yet again, and certainly these are some of the domestic plays there that had benefited from such pickup in rhetoric. Rare earth stocks coming up as well, doing very well. Again, rare earths very much in focus there because substantially well, 21%. So not all is bad going into the Monday session here. Just to also mention that U.S. assets, dollar yen coming up on your screens right now are showing markets are coming off the edge a little bit, although we are getting a lot of selling still. This might indicate maybe in a couple of hours things will peter out depending on the rhetoric that we've seen and heard so far out of the U.S. president. Plenty more ahead here on the China Show. Have a look at our guests coming through. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter. But it's bad for the product. It's not good. After that, I am never doing that again.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders.
Take your arm. Strap this on. I want you to put this earpiece on.
Oman Sovereign Wealth Fund. We have others.
Hey, Hannah, I need you to do something for me. I'm going to take your arm. I'm going to strap this on. I want you to put this earpiece on, okay?
What is this?
There's only one track on it. It's
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Bersachi in Vienna, and this is Bloomberg.
Welcome back to the China Show. A look at the CSI 300 a half hour into the session, and you are seeing quite a bit of downside here. We're down about 1.5%. MSCI China is down by about 2%. This tumbling of equities certainly hasn't coincided with bonds taking a bit here this morning. Investors are certainly getting a little bit jittery when it comes to the latest, when it comes to U.S.-China trade tensions, this back and forth tit for tat that we saw over the weekend as well. We have seen at least the U.S. side come off a little bit in terms of the temperature and talking about, the door is still open when it comes to trade talks, but at least for now, we're still seeing a catch down story across onshore markets and here in Hong Kong.
Yeah, that's really on the back of the comments that the U.S. president made as he was making his way either onto Air Force One or on Air Force One. He's really toned down the rhetoric as far as that was concerned. It's taken the edge of markets. I think when you look at, to your point, U.S. assets right now are firmly in the green, but certainly what we're pointing out as well is we haven't reversed fully the declines from Friday. So you split the difference between the two. We're not even halfway back. MSCI China is down about 2%. Some of the big movers we're seeing on your screen, CSI 300 and the big names coming up very, very shortly. So it's not all red on your screens. You do have a bid coming through as far as the sort of your domestic chip plays like SMIC. Kingsoft is actually traded, of course, onshore. You are getting substantial upside there. But you are getting the drags. Goar Tech is a very good example of that. We're also looking at the 50-day moving average in the MSCI China. Certainly when you look at how, the Hang Seng futures on Friday fell to the limit of 5%. We were looking at several lines of support possibly that could be tested today. And as you can see on this one specifically, we are close, but not there just yet. Just to also mention that on the 50-day moving average, just watch it very, very closely and whether or not we do manage a bounce above that, because we are seeing some pressure right now. The FIX, which came in on the stronger side, managing to also take some of the edge off some of the selling out there. So dollar China's coming up. Dollar yen was quoted weaker going into the Monday session. There's a separate conversation in Japan and politics, and what's happened to the coalition there might be adding more premium to Japanese assets. U.S. futures, as we were pointing out, Treasury futures are coming. You don't have, of course, Japanese cash markets up, but yeah, there we go. If yields were quoted today, we would be higher on the 2s and also the 10s. But yes, NASDAQ futures are now up 2% in the first few hours of trading here in the Asia Pacific.
Yeah, let's look back on what we've heard so far, really from both sides. President Trump says tariffs for China are still the plan, starting from November 1st. But speaking on board the Air Force One today, he called Chinese President Xi Jinping a, quote, smart man and a great leader.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened, and I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
Let's bring in our China correspondent, Min Min Lo. She joins us live from Shanghai here this morning. It seems like, at least for now, Trump is pulling negotiations back from the brink just a little bit.
That's right. Well, President Trump also wrote on Truth Social. He said, don't worry about China. Everything is going to be fine. And it seems like President Trump is anxious to reassure markets that this is not going to spiral out of control while he continues to put pressure on China to roll back some of the retaliatory moves that we have seen so far. We hear the same thing from J.D. Vance on Fox News as well, urging China to take the reasonable path here, saying the U.S. will reciprocate with reasonable measures as well. But so far, from the Chinese side, we have heard the Chinese Commerce Ministry saying that threatening China with tariffs at every turn is not the right way to deal with China, and China will not hesitate to retaliate as necessary to protect their legitimate rights and interests. And so far, we have seen the tightening of the rare earth controls as the strongest sort of long-arm jurisdiction that China has attempted so far when it comes to rare earths, because it applies to overseas exporter of products that contain even trace elements of Chinese rare earths, and this could have important implications on the tech supply chain, right? Analysts are saying it could cause weeks-long delay of shipments of equipment from the likes of ASML. It could raise prices as well. And it seems like China is increasingly confident of the pain that they could inflict from its supply chain dominance. And they're willing to use that in exchange for tolerating incremental increases in the sort of export controls that we are seeing from the US, and even higher tariffs as well.
Well, yeah, Min, speaking of tariffs, it's strangely coincidental that trade numbers are actually set to come out at some point, in fact, any time now, really. And, you know, I wonder what the implications are when you look at trade, you look at some key dates as far as what we're watching is concerned. What options does China have now as we go into those trade talks and beyond them?
Well, of course, if the 100% tariffs, the additional 100% tariffs kick in, it could threaten to basically cut all trade between U.S. and China. But so far, as you said, looking at the trade numbers, China has seen trade hitting new records this year. It shows you that China is resilient and agile enough to really shift with the changing trade flows to increase its trade with other regions to offset the decline in shipments with the U.S. Of course, there's more sort of uncertainty ahead with the new levies being imposed on shipping vessels from both US, China. Both sides are imposing these levies on each other's vessels starting tomorrow. But again, in terms of what else is in China's toolbox, they still have other levers to pull. They have the ability to disrupt economic engines in the US, including, for example, companies like Apple and tech companies that are trying to, diversify the supply chain away from China. They are facing efforts that are being stalled by Beijing, which is restricting these companies from cooperating with the likes of Foxconn and Chinese contractors that are key and essential to their operations. You think about the Chinese market, it's still a huge market for really sensitive industries in the US, including agriculture, as well as tobacco, parts, aircraft parts as well. So yes, we have up until early November when the new tariffs could kick in, and of course end of the month is when President Xi and Trump could possibly meet in South Korea. Whether that's still happening, we'll have to see.
Min, thank you. Min Lo in Shanghai for us, our China correspondent there. Let's have a look at the implications across FX market. It's been a crazy ride across FX. In fact, just to mention dollar-yen, which you see on your screens, right? So as recently as 10 calendar days back, we were at 147. So if anyone told us back then that we would write a headline, the yen would strengthen to 151, we'd call them crazy back then. But here we are in this new range. Joining us now is Joey Chu, Head of Asia FX Research at HSBC. Joey, good morning. So obviously we will talk about the politics in Japan in a moment and what that means, but what do you make of the price action in FX markets this morning so far, given all the trade news so far from the weekend?
Well, I think we saw with a great sense of relief that the dollar CNY fixing came in at relatively low levels, sort of continuing the string of stronger than expected RMB fixing since they came back from Golden Week on 9th of October. Right, we've been still stuck at this 710 type of handle, which I think is very good news and is a great anchor for the rest of dollar Asia amidst these times of volatility.
This is coming at a time when we're seeing the dollar rebound overall. I mean, obviously, we had some interesting central bank decisions out of Asia last week, surprise cuts in some ways. But is there a sense that this whole kind of big dollar short trade is now fading?
I mean, I think we've been getting such questions since the start of third quarter, which was also when, the dollar started to find a little bit of a footing, partly because a lot of the de-dollarization type of arguments sort of faded, and a lot of the hedging moves in dollar Taiwan, for example, also sort of subsided. But, overall, our view is still that the Fed is still cutting, and historically, when we look back, there were times when, during the times when the Fed cuts and the US does not go into recession, are actually precisely the times when the dollar actually weakens. So our base case is still weakening modestly of the dollar.
Okay, Joey, can I ask you about the yen specifically, because that one has both a dollar component and its own idiosyncratic weirdness recently, and apologies for the lack of a more diplomatic way to describe that. The The argument recently is because of what's happening politically, or what's happened politically, the range on dollar-yen has shifted up substantially. Would you subscribe to that view? What is that range now we're looking at on dollar-yen?
Yeah, I think this uncertainty about, number one, in the first place, who is going to be the prime minister, and number two, whether there will be changes in this bias, be it for fiscal policy, monetary policy, currency policy, or even foreign policy. I think all these are great unknowns, and as we have seen in many times in history, especially with the U.S. over the turn of the year, changes in government can have huge changes in the currency. So I think no one's really wanting to take a lot of risk right now. So the uncertainty is just sort of lifting dollar-yen up, especially if you consider where we have been coming from at the before the elections, when dollar-yen actually fell quite a lot in the second quarter. So our view is that eventually the dust will settle and we'll find out about the policies. Our base case is still that no matter who comes into power, the fact is that cost of living is the number one issue in facing the Japanese public, and so a weak yen is just going to be detrimental to this issue. And so any political leader that comes in has to face this reality.
Should we still assume that the BOJ can hike, even with a pretty dovish, I could say, new prime minister?
So our view is still that the BOJ will hike, because ultimately it will be basing its views and its rationale on the economic fundamentals. Of course, politics can affect it, because it can affect confidence, can affect investment decisions, and therefore affect the economy. But I think we have seen enough economic momentum or enough wage momentum onshore in Japan so far to judge that actually one rate hike is at least on the cards.
All right. Joey, you also mentioned, and apologies, I forgot to ask you about this and to go deeper into this, but yeah, I mean, the fix today was, I guess in many ways, a reminder of something else that might help us sort of backstop some of the risk appetite out there. Should we continue? Do you expect the PBOC to continue to lean into yuan weakness?
So actually, our view is that the fixing stalling at about 710 to 711 for the last couple of months already is both a function of the DXY not really moving lower, as well as a function of the trade talks sort of progressing well enough, or up until recently, but there have been no concrete developments in tariffs. So I think both conditions remain in place. In fact, the second condition about the tariffs, arguably you could say that it's developing in the negative way. So for us, I think there is some risk of upside risk in dollar CNY fixing going a little bit higher than what we have seen recently. But I still think that at the end of the day, it's not going to be a currency war that we are thinking about.
Joey Chu, thank you, head of Asia FX Research at HSBC there. We're getting just some lines crossing. There's a press briefing for the Customs Bureau in China in Beijing right now, and we're hearing from the Customs Deputy Director Wang Jun speaking and basically saying when it comes to trade faces rising uncertainty, difficulties, and the external environment still complex. Of course, this is on the back of what we've been hearing over the weekend, and really this escalation, a re-escalation of the U.S.-China trade dispute and the like. So certainly that's the comments there. We're still waiting, though, the export numbers and import numbers from September. Yeah,
they should be mentioning that at some point during this briefing, and we'll break those numbers to you once we have those trade numbers coming through. As well. Interesting, maybe within that, what are we going to see as far as soybeans are concerned, or maybe the absence of which. Right, coming up here, we'll continue the conversation here on U.S.-China, and Hao Hong will be joining us out of Lotus Asset Management, who does see, of course, the latest moves as a strategic signal on the part of Beijing intended for the U.S. to get that message. Hao Hong joins us in a couple of minutes.
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We do not make a lot of short-term trades, if you will. I think this is something that we've been watching for since, beginning of the year. Yeah. I think one of the big, as I mentioned earlier, this is one of the big ones that's still missing in terms of tariffs. Initially, thought that we have until like mid-November to decide, but I think this is something that is coming to fore now. I think the markets will adjust. We are relatively well positioned, I think, in terms of where we are right now. We're not looking to making any knee-jerk moves ahead of this news.
Chikai Chen there, head of Asian and Global EM Equities at BNP Paribas Asset Management, speaking to us a little bit earlier on. Meanwhile, we're hearing from some of these financial newspapers in China saying that stock investors shouldn't be, quote, overly pessimistic despite external shocks. The Shanghai Securities News is citing brokerages who say traders should pay closer attention to China's economic transformation and capital market reforms.
Yeah, to help us sift through the noise and signal here, joining us here on set is Hao Hong, managing partner and CIO at Lotus Asset Management. Hao, it's nice to see you. The market's done extremely well going into the weekend, yes. And then maybe for those who were looking for an opportunity to buy the dip or a dip, here's a dip for you today. Yes. Would you? What advice would you give to those people?
Yeah, well, I think we will be buyer of this dip, right? So we've been waiting for this. I think, before this correction, the Chinese stocks has been going from strength to strength, especially the tech stocks. So I think, for people who, wanted to get into this trade, it's very difficult, all right? Or not very, but, it's trying to find a good position to get in, right? Mm. So now this is the chance, and I think, the volatility will be with us for some time, but then this gives a period of building a window for building positions.
It's interesting though, but I think we didn't expect this in some ways. I don't know if you did, Powell, but what do you think is the reason, the motivation that China went into this move of imposing export curbs on rare earths, right? Because we're still a few weeks away from APEC.
That's right. Yeah, I think judging from the market's response, I think most people were surprised by this move. I think China is retaliating, because before this, the U.S. is using the BIS affiliated route, basically blocking all the channels that China can get its hands on advanced semiconductor chips. So I think after that, if you see a series of Chinese retaliation, right? So China is telling the leading tech firms not to buy NVIDIA chips. It's also showing confidence is Chinese-made chips. And also, China is imposing fees on U.S. ships as well for using Chinese ports. So leading up to this, right? So basically, we're becoming more restrictive on rare earths exports. So I think, people are seeing it as a sort of a retaliation to the previous U.S. move. But then over the weekend, Donald Trump basically retaliated by, imposing 100% tariff on Chinese goods. So therefore, the market is rightly concerned. But I think, judging from the history so far this year, more likely than not, we're going to get a tackle trade. Right? So Donald Trump is going to back off at this stage. For two of the leading countries in the world, no one can gain anything from hitting at each other.
Do you expect the posturing, though, to continue the next 2 weeks ahead of the meeting? And do you expect the meeting to still take place?
Yes. Well, I think both sides are still expecting the meeting to take place in a couple of weeks. And also, going into this meeting, China has to posture, right? So as still have cards on the table to play, and also telling the opposite side, where the bottom line is for this negotiation. So in so doing, it actually helped for the meeting to become more successful, right? So if during the meeting, China try to change check and trying to retaliate after the meeting starts, then I think it will be a even worse starting point for the meeting.
Okay, so if this is the window of opportunity to buy, what is worth scooping up right now, right? Because up until now it's been growth, right?
Yes.
Is it time to sustain growth, or is it time to actually rotate?
Yeah, I think people has done tremendously well with the growth stocks, right? So if you look at the Star 50 index in China, it's up like 180% in the past 12 months, right? So it's the leading performing index in the world. I think by now, people has done so well, and also because the relative performance has been so extreme, then it actually pays to rotate some of the money back to the value stocks. So in the past couple of months, as growth stocks start to rally, Chinese banks, insurance, brokers hasn't been catching up as much. But these are the names that is very steady, it's heavy index weight. And so as money rotate back to these stocks, then we expect that, these stocks will lift the Chinese index higher from here.
I'm looking at some of the valuations. I'm just going to mention SMIC as an example. Trading at 160 times earnings. I think your reaction says everything. But so how? What do you think expectations are? Do you think expectations are slightly too high as far as AI is concerned in China? Or how do I play that?
Well, I think everybody is, going for AI, right? So it's going to change the way we work. I think specific for SMIC, we have a position in the stock to declare.
Yep.
But then
thank you for that.
Yeah. Then at the same time, we're expecting earnings to double from here, right? So rapid earnings growth from here.
Yeah.
So as a result, even though now the PE is like very, very high, right? So but for growth stocks, 100, 200 times PE is actually showing the growth potential that people are willing to pay for, right? So at this price. So one shouldn't be too surprised to see, the stock continue to do well, and also earnings starting to catch up. Therefore, then you will see a PE ratio actually comes down because earnings is going faster than the price.
Okay. What should I look for in terms of ways to measure trade war tensions? The proxies that because you've been looking at everything from soybeans to semiconductors.
Yes.
What's the right sort of one to look at?
Yeah, I think a number of indicators we can keep track on. One is the soybean you mentioned, semiconductor performance, and also the Chinese yuan, right? So this morning, we see Chinese yuan is actually have a stronger reference rate. So meaning China is actually not retaliating after the U.S. imposing 100% tariff. And also, the U.S. long bond yields, right? So and the Chinese long bond yield as well. So many of these indicators is going to tell you what the market thinks. But then, I think the most direct way to measure is the poly market, right? So the prediction market. So they have a bet, whether China can resolve these conflicts around the APEC summit. I think right now the chance is like 90%-ish, right? So there's the market is actually quite optimistic of the outlook.
What do you think the risk premium should be after this meeting? Because this, to me, is a reminder that markets forgot about this issue.
Yes.
Right? We forgot about it, and then the weekend I woke up Saturday morning.
Yes.
Yeah, that it could still flare up. So what do you think the appropriate risk premium should be after this meeting, assuming poly market is correct?
Yeah, well, I think, there would be like back and forth, between now and leading up to the summit. And also, I think, for the Chinese yuan, the Chinese central bank is sending a signal that China doesn't want a war, but, if there's a war, China is ready for it. And also, for the risk preference sake, for the Hang Seng, for example, right? So Hang Seng is about, 26,000-ish, right? So it's actually at a higher level than the beginning of this year. And you can see the lower point of the Hang Seng index is actually rising. So one should be, we're very comfortable with Hang Seng being at about, 25,000 is a buying opportunity.
Okay, just in 10 seconds or so, do you think the national team might come in to stabilize in case the onshore market starts to fall even further?
Yeah, I think, well, judging from this morning's performance,
Okay.
I think, the national team is at rest, is quite relaxed at the situation.
All right.
And I think many people are looking for buying opportunities.
Hong, thank you so much. Managing Partner, CIO at Lotus Asset Management. Coming up here on the China Show, Eurasia Group's China Practice Head will be joining us in a couple of minutes. This is Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. When I started to realize what was happening, it was 12 years, and we haven't done it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Looking at the Japanese futures market, more uncertainty on the political side. According to Kyodo News, the Komeito party is saying it does not rule out cooperation with the opposition, and that exercise is focused on the nomination of the prime minister. More uncertainty out there. Japanese futures, there we go, as we promised, coming up on your screens. We're down 2% on equity futures.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Washington is dealing with a much more assertive Beijing. China is prepared this time around. It has put tools in place to respond to U.S. measures. It has reduced its dependence on U.S. imports and has reduced dependence on its exports to the United States by forging relations with other countries, particularly increasing its trade flows with Southeast Asia, and it's increased its self-sufficiency, as well as it's identified its choke points where it can hurt the United States.
That was Wendy Cutler there, the vice president of the Asia Society Policy Institute, in the latest flare-up, unexpected flare-up, looking at where markets are right now in terms of the U.S.-China trade conversation. For more analysis on where we go next as far as the relationship goes here, let's bring in Eurasia Group's China practice head and former U.S. diplomat David Mealy here with us on set. Quite timely and perfect timing, really, to have you join us. Thank you so much for taking the time. So why are we here? Like, why is this happening all of a sudden?
Yeah, well, thanks, David. Thanks, Yvonne, for having me today. I'm glad I happen to be in Hong Kong. Why are we here? Well, I actually think the two sides were on a good path towards having the meeting at APEC and then for Trump to travel to China next year. And I'm still optimistic about that. But along the way, there was this closing of a loophole on the U.S. side, this new 50% rule that came out. And the Chinese saw it as more than perhaps it was intended to be. And then now we have the new Chinese release of these rare earth elements and related technology export control rules. And then President Trump has responded with his threat on tariffs. So it's been a back and forth that I think really reflects how concerned each side is about communicating where its pain points are and the necessity of the other side to help drive this car between those pain points.
Yeah. You mentioned some of these loopholes. Can you decipher what is actually new and what's not new in these curbs in particular?
Well, the new U.S. rule essentially expands how export controls apply to subsidiaries that are tied to Chinese companies. And by some estimates, the number of affected companies goes from something like 1,200 to over 10,000. So it is a significant new rule. It is impactful. Whether the U.S. intended for it to come across and be understood that way, I am not sure. I think they think about these things for a long time, and maybe it is correct that from their point of view, they were just tightening things up.
Does it change at all the likely scenarios at the APEC meeting, assuming that meeting still goes ahead?
I'm going to go with it. It does not change APEC. I think the two sides are already signaling that they want that meeting to go on. Okay. President Trump's post on Truth Social overnight suggested this as an episode that I think he called it a bad day or something close to that, that they will get past. But perhaps it will delay the process a bit for getting to the transactional trade deal that we're all anticipating. I mean, at Eurasia, we're still holding to our call that the two sides will reach this deal. I think it's likely to be on the occasion of whenever Trump does get to China. But I do wonder if APEC, the result of that will be the two sides agreeing they need some more time just to hammer things out, hammer out what the actual meaning is of each of these moves that the U.S. and China have made, and come up with reassurance that the outcomes of these export control moves, it will not affect the reliability of industry getting what it needs to function.
I mean, I'm just wondering what could come next. I'm just wondering in terms of, now that we see the threat of 100% tariffs from the U.S., in terms of China's response, what do I look like? Is this TikTok deal in jeopardy? Are soybeans continue to be a sore spot?
So I think that's what would come next, would be a reminder of all the ways that each side can inflict pain. Well, let me step back, though. I was just in China for 2 weeks.
Sure.
Talked to a lot of my old government contacts, people in think tanks, businesses, and so on. And I came away with the impression that the Chinese really feel they can work with Donald Trump, that they see him as pragmatic, as transactional, as somebody who shows respect to President Xi. And what they really want to get to is getting to more stability and predictability in the relationship that they envision could last through Donald Trump's term.
Do they feel like they have the upper hand, though, China, right now?
They felt they played the rare earths issue last April very well. That was clear. But they also know that the U.S. holds a lot of cards. And we saw some of those cards last April, actually, when Trump responded with the controls on the chips and on the jet engines, on the ethane gas. So I think what both sides know is neither can move in a direction that serves its sole advantage. Each side has very serious pain points.
In my head, the timeline moves into next year when possibly, to your point, Donald Trump makes a trip to China, possibly. And then the U.S. midterms are rolling around. How do you think the U.S. midterms might affect Donald Trump's orientation?
Well, I think both Presidents Trump and Xi are extending themselves a bit by planning on these two meetings. And, I mean, they're clearly working towards getting to a deal.
Right.
But for both of them, they're going to have some pushback from people in their capitals. For Donald Trump, we can already see from the hawkish elements that there's a lot of concern about what he is going to do next. So whatever he does, he is going to have a strong motive to make sure it is successful. And that gives me optimism about the implementation of a deal. The midterms will be part of that, but it's more than that. China is hosting APEC next year. The U.S. is hosting the G20. Along the way, there are going to be a lot of opportunities for people to meet at the ministerial level. And then at the end of the year, there's going to be opportunities for leaders to get together at the leadership level. All of this, I mean, from my experience working, basically 30 years on U.S.-China, nothing works for this relationship like scheduling high-level meetings. It gets the bureaucracies on each side to kind of sit up straight and figure out what's possible. And I think that's actually setting us up potentially for a good 2026 if they can get to a deal, if they can get past this episode, and if they can implement well.
Where does Taiwan fit into all this?
Well, we saw what looked like some gestures from Donald Trump in recent months. The Lai transit of the United States did not happen. Defense talks were downgraded. There were some other measures as well. The Chinese are clearly looking with high hopes to Donald Trump to give them reassurance that the United States is moving away from what they felt was the quote-unquote hollowing out of Taiwan policy, of U.S. one-China policy in the Biden days. And so I think now what they are hoping for is that at minimum, Donald Trump, when he visits Beijing or at some point around that, makes a very clear public reaffirmation of U.S. policy, and that will allow them to feel that the U.S. is not implicitly sending signals to the Taiwan leadership that it is going to tolerate what the Chinese fear will be provocative moves by President Lai.
I mean, it sounds like an oxymoron to get more clarity on the strategic ambiguity sort of policy, but how much goodwill do you think Donald Trump is able to get for U.S. companies if he leans in that direction and gives China what they want?
I am hesitant to suggest that Donald Trump is going to actually act in a way that links a trade deal or actions to help U.S. companies to what he does on Taiwan. I think Taiwan exists on its own merits. It is the most important issue to the Chinese. Remember, when Trump and Xi have phone calls, we always learn that no matter what the central element of the call is, the Chinese always raise Taiwan. It is their number one priority to move that forward. And so I think Donald Trump recognizes that in this region, cross-strait issues are a source of potential instability. He does want an overall productive relationship with the Chinese, and I think it is those issues alone that will drive how he responds on Taiwan. That said, the gestures over the summer were probably to some extent a reaction to an understanding that after the tit for tat that occurred last April, a path towards the two sides getting to a trade deal and stabilizing the relationship had to occur against a backdrop of no major flare-ups over Taiwan.
Of course, it's something to monitor. We have the plenum coming up. We also have this 15th five-year plan.
Yeah.
What are you going to be watching out for the most? Do you think some of these external threats that China is seeing right now, does it change the playbook in any way?
I think when we talk about these external threats, what's really motivating China is it doesn't want to have to think about those because it has internal business to take care of. When I was in China in these recent weeks, what I heard the most about was this concept of involution, this idea that there is this destructive downward spiral of competition that is affecting not just sectors in the economy, but now pushing through the entire economy. I think what we want to look for the fourth plenum and for the 15th five-year plan is what China plans to do about this. I expect we will hear that they will express determination to act here, to address deflation, to address falling margins, to address youth unemployment, to address cannibalization of R&D expenditures, issues like this that come out of involution. They are very concerned, but it is very hard to follow through, and I will be looking to understand what exactly they see as their tools and what they will be doing about this.
Do you get a sense that these domestic issues are at the very top of their priority, and not so much all these, let's call them distractions on the trade front? What do you think is top of their priorities as far as your understanding goes from the people that you talk to?
My understanding is, like all countries, they're thinking about their own country first and domestic issues first. They are actually quite happy with how their economy performed in the first half of last year, but they know that the consumer stimulus that they employed can't be effective forever. Right. They know this involution issue is there. They know that exports are a top source of growth for them, and they're hitting resistance with the United States and eventually with the EU and other markets. So now they need to turn inward and focus on the property sector, on youth unemployment, on consumer sentiment, on involution, and I expect that we're going to see determination on that front.
David, it's great to have you in town. Thank you so much. David Mealy there, Eurasia Group's China practice head, joining us here in Hong Kong. We also did hear from the S4 Capital chairman and founder, Martin Sorrell, saying that he remains super bullish on China despite Trump's new tariff threats. Speaking to us at the International Business Leaders Advisory Council conference in Shanghai, Sorrell explained how tariffs are impacting the advertising industry.
We have to see how tariffs sort of come out at the end of the day. We'll see what happens, particularly with the negotiation between the US and China. Having said that, all that does is delay things. I mean, people, when there's an uncertainty, they don't make decisions. I'm talking about the advertising industry now. They don't make decisions as quickly as they should do, or they postpone making a decision because they're uncertain about the results. So it's not good news. Growth as a whole is going to be lower. I think we've entered a new age of fragmentation, and growth is lower. Inflation is more stubborn, as we know with the central banks. They try to get inflation down. It's much more stubborn than and tariffs don't help.
You talk about slow growth being the new normal.
Not slow growth, but it's sort of under 3% rather than over 3%.
What is your assessment of China and how and whether it will be coming out of this?
I remain super bullish on China. I mean, despite problems in the real estate market, which we still have, the stock market probably has improved a little bit from where it was this time last year with EBLAC. State-owned enterprises borrowings, I mean, that is being addressed.
Consumption sentiment is still pretty weak, though.
No, it's true. I mean, consumer sentiment, but Chinese always save a lot. The big opportunity for China is in the tariff world that you mentioned and we were discussing. As the trade patterns alter and the US will have to become, in my view, less important to China. It'll still be important, but less important. China's already diversifying its trade policy. Very interesting, even since April.
But we've been seeing very compressed margins, though, domestically because of the deflationary pressures. Do you see that changing anytime soon? Deflation is an issue in the Chinese economy that we have to be dealt with. No, I think China has enough. The government has enough fiscal firepower at the centre
to deal with the situation. The priority for domestic Chinese companies is outbound China. The big opportunity for Chinese companies is outbound China. The big opportunity for Chinese companies is outbound China. They need, I believe, our help in marketing. You have to be very acutely aware of what goes on here in the Chinese consumer. And there's not one Chinese consumer, obviously. Foreign companies come in here, know that it's going to be super competitive, and they have to be super efficient and super agile.
Yeah, there we go. That was S4 Capital Chairman Martin Sorrell there with Min, of course, in Shanghai just over the weekend. Very quickly, we are about just an hour and 14 minutes to the cash market session, and we're doing better given the circumstances out there. We're certainly coming off lows of the day. We're now just down about 2%. Shanghai comp CSI printed down as much as, I think, 2.5% in the opening minutes have certainly come off lows of the day.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Welcome back. So the NBA has returned to China with some preseason games in Macau, 6 years after the fallout, of course, over the protests in Hong Kong put the relationship on ice. Stephen Engel, our chief North Asia correspondent, sent this report.
Six-time NBA All-Star and Hall of Famer Mitch Richmond is part of the NBA's, dare I say, full-court press to win back fans in China after a 6-year freeze of its annual China Games. You could say the relationship has been hit and miss. The league had been playing preseason games on the mainland since 2004, building a massive and lucrative fan base. That came to a screeching halt in 2019 after one team executive posted on social media support for Hong Kong's protests, angering Beijing. 6 years on, the NBA China Games are back, but now in the Chinese gambling hub of Macau through a multi-year deal with Las Vegas Sands.
There's a lot going on with basketball in terms of its future potential, but I think it's going to be investment-led. And I think there's a huge opportunity here in China. Simply put, China is a market that's too big for the NBA to ignore. And for China, the NBA is too popular for it to ignore. S&P says a staggering half of China's adult netizens watch NBA games online, including one NBA player who's from China.
I feel blessed, be a part of this family. Since I was a kid, I was watching on the TV. Right now, it's like a dream come true for me.
From my perspective, it's always been an extreme amount of love. I have, a tremendous amount of respect for, the country of China, and they have the same for us.
A sentiment echoed by former football great David Beckham, who was on hand as a multiple brand ambassador in China and told me he believes sports has the ability to break down barriers. Soft power, if you will.
My connection started a long time ago with China. And every time that I go into a new country, a new city, I jump into the culture straight away. So it's about the food, it's about the people, it's about the fans.
This year's NBA China Games in Macau feature two teams that, while they've come close, have actually never won the NBA title. But there may be another prize at hand, and that is winning over fans for their teams in the Greater China region, especially now that the former Houston Rockets center Yao Ming has been out of the league for more than a decade now. The two teams are the Phoenix Suns at the far basket and also the Brooklyn Nets. Oh, by the way, the Nets are owned by Alibaba co-founder Joe Tsai.
Yao Ming is no longer with the Houston Rockets, and I'd rather spend more time in New York than in Houston, and I'm going to make the Nets China's team.
Call it a draw on China bragging rights as the Nets and Suns split their two games here at the Venetian Arena. Stephen Engel, Bloomberg News, Macau.
So cool. All right,
Yeah.
if you're a subscriber and want to rewatch all the interviews in Steve's package, of course, you can watch it through our interactive TV function, TV Go. You can also become part of the conversation and send us instant messages. Check it out at TV Go.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
All right, chicken markets, chicken movers here this morning. You continue to see some downside when it comes to Hang Seng. We're down by about 2% here right now. You are seeing a little bit of strength coming through in the currency here, of course, after that strong fixing from the PBOC here today. But certainly in terms of what to watch, or watching some of the key technicals, or watching the likes of rare earths, for example. Of course, they have been at the center of this whole U.S.-China trade spat as well. So some of what they've seen in Australia and China have been climbing as we continue to watch some of these developments coming through here as well. But you've been watching some of the technicals overall, Dave.
Yeah, going into today, I mean, looking at the drop that we had on Friday did indicate maybe a 3% drop was likely going to be one of the scenarios to consider today. And a 3% would have taken us to the blue line, which is the 50-day, which is effectively where we are right now. This note just dropped in our inboxes. This is out of UBS, James Wang and his team. And he says, the question is this a replay of the April sell-off? And he says we don't get to that point quite a bit. We will see some bottom fishing, which he says will lead to the index bouncing off. If any, we test the 74 handle. This is what he had to say here.
Yeah, well supported, he says, right? That would bring us back to levels that we saw in May 9th.
Yeah.
Right before the previous tariff de-escalation, and 15% from some of the current levels here so far. So that's a take from the UBS side of things here. We talked about what really has been the pain point, or at least where we're seeing the biggest price action. For one thing, it's the rare earth stocks. So those have been actually moving on the upside here when it comes to Australia, in China, for example, here, as, of course, the spat intensifies. So there you go. You actually are seeing quite a bit of movement there. China exporter stocks, certainly that's sort of be the focus here, given given the threat, of course, of 100% tariffs on Chinese goods. There you go. You are seeing a bit of a movement there to the downside. Tongfu Microelectronics, for example, is down some 5%. EV makers also is part of that story, I guess you could say, when it comes to the exporters side of things as well. But there you go. You are seeing, because we did see some NEV sales did grow about 15.5%. But today it really is kind of a risk-off session in some of these, especially when it comes to China tech overall, Dave.
Yeah, in fact, just on the Alibaba note, and that's coming up on your screens right now, this one actually just coming through in the last hour or so. So higher, which is not the description of the direction, not of markets today. That's the appliance maker, of course, coming through with Alibaba and signing this AI cooperation pact. Scant on details. This was a statement out of WeChat, or put on WeChat. The partnership between the two will focus on areas like AI plus cloud, advanced manufacturing, also e-commerce, and also global expansion. Just a note, but of course today's we're a catch-down trade as far as both things go. Before we wrap up the show, a look at in the next hour. So we're looking at this massive move on Friday in overnight HIBOR, that spike you see of about 107 basis points to 245. This updates in about 15 minutes or so, but we will leave you with a look. So something over positive notes. Markets are coming off the lows. U.S. futures, dollar yen, VIX futures are also, as you can see, not acting as much dollar. And we're also looking at Aussie yen, of course, which is a good indicator of risk appetite.
Yeah, as Hao Hong mentioned, right? If you take a look at what poly market and when some people are betting on whether, we still continue to see some sort of resolution on the trade front as well, you see signs possibly of that taco trade maybe reemerging here this morning. That's it for us here on the China Show. Insight is next.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
After threatening more tariffs, President Trump signals an openness to dealing with China, offering President Xi a possible ramp-off. But Beijing's drawing clear red lines on U.S. export controls, making it hard to quickly ease trade war risks. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Goldman Sachs sees the latest U.S.-China flare-up as a tactical move ahead at the APEC summit, but warns of a wider range of outcomes from tariff cuts to fresh export curbs. We'll discuss this with Henrietta Levin, a former White House and State Department China advisor, and for the market's perspective, VS Partners Hong Kong co-founder and CIO Vanessa Xu will be sharing us her take. And of course, we hear exclusively from Malaysia's second finance minister on why he believes the government's moves to cushion the blow from Trump's tariffs could further boost the ringgit. And we have breaking news for China's trade for September. Of course, data that's been widely anticipated. We have China's September exports in USD terms rising more than anticipated, up 8.3% year-on-year, beating estimates of 6.6%. That is a massive jump in imports as well. Take a look where we are in terms of those import numbers. We have imports coming in USD terms rising 7.4% year-on-year. The estimate was for 1.8%. So both in terms of imports and exports, a beat. Imports suggesting perhaps there is a greater appetite in terms of demand. Imports again in USD terms rising 7.4% year-on-year. The estimate was for 1.8%. In terms of the trade surplus, we're looking at $875 billion. That is USD for the period of January to September. So across the board, pretty much a better than expected figure, suggesting that perhaps we're seeing resilience in the Chinese economy. Now, in terms of the market, here's a look at how markets across Asia are digesting the latest escalation in U.S.-China trade tensions. Asian markets sliding, led by declines in China and Hong Kong, while Trump shocked investors with his new threat of 100% tariffs on China has also left a window open for a deal, given his November 1st deadline. Optimism there already showing with gains in S&P futures as well as crude. Now, these numbers coming as President Trump says tariffs for China are still the plan for November 1st. But speaking on board Air Force One today, he called Chinese President Xi Jinping a smart man and a great leader. Trump also highlighting that he has given himself plenty of time to work out a deal with Xi before his deadline.
For me, you know what November 1st is? An eternity. November 1st is an eternity for me. For somebody else, it's right around the corner. For me, when I hear November 1st, it's an eternity.
Let's get more on the U.S.-China trade tensions with Henrietta Levin, Senior Fellow at the Center for Strategic and International Studies. She previously held senior roles at the U.S. Department of State and the White House. Also with us is in Hong Kong, John Liu, Senior Executive Editor for Greater China at Bloomberg News. John, first of all, set the scene for us. How are you looking at this tit for tat?
Well, everything kicked off late last week when China announced these very broad measures to increase controls over the export of rare earths, these critical minerals, essentially giving China the ability to exert influence over any product if it uses even the smallest amount of these rare earths. And that, in turn, kicked off this response from President Trump on Friday during the U.S. Day, where he threatened and then did actually impose a 100% additional tariff on Chinese goods. What has been really interesting, though, I think, is the 100% tariff that President Trump has imposed. That starts on November 1st, as we heard President Trump talking about, an eternity from now. But also those rare earth measures, those are slated to start after that. So before the November 10th deadline for when the previous agreements between the United States and China are set to roll over. And so it does really set up a scene where the two presidents, Trump and Xi, are set to meet, we expect, at APEC at the end of October. So that really puts the onus, or it really ratchets up the anticipation of what we will get out of that meeting.
So, Henrietta, is it about the timing? I mean, this is coming on the cusp of the two leaders set to meet on the sidelines of APEC.
The timing does speak quite loudly. I think it is. We're seeing both sides realize that they may have overplayed their hand in introducing more escalation into the U.S.-China relationship than either side was seeking. Donald Trump has announced, as you mentioned, that he intends to impose 100% tariffs on China as of November 1st, but the timing is important. That is intended to be right after the leaders meet at APEC, and Trump has spoken quite warmly just today about his interest in maintaining that meeting with President Xi. So you have to expect that he's setting this up more as an opportunity to save the day and bring the U.S.-China relationship back onto an even footing than to go back to what was an effective trade embargo that the U.S. demonstrated it could not withstand, especially when we consider the prospective retaliation from the Chinese side in leveraging its choke points on rare earth minerals. The U.S. has showed it cannot withstand what President Trump is promising to do, and so I think this is more of a negotiating tactic than a policy plan.
But Henrietta, how would you describe relations between the two sides now? Are they better? I mean, we know that we've had 4 high-level meetings over the past perhaps 5 months between Scott Bessent and He Lifeng. That was to stabilize relations. Where are we with that?
Look, I think it is always important for the leaders of the United States and China and for their lieutenants to be talking, to have an open dialogue, to ensure that any misunderstandings can be addressed before we end up in the kind of unintended escalation spirals like we saw over the past day or two. But it does also seem like in these talks, there is not always agreement between the two sides of what is even being discussed, let alone agreed. And so these conversations have also, in a way, proven an opportunity for destabilization in the relationship because there isn't always agreement on what is even on the agenda. I would also say it does seem like the talks have been mired really in managing of the tit-for-tat retaliation the two sides have brought to bear, rather than addressing the underlying economic structural concerns that Trump's trade war was ostensibly intended to address.
And John, what's China's perspective here? We know that Trump was quite quick to dial down the tension, saying everything is going to be okay with China, that perhaps Xi Jinping had a bad moment. How is this landing in China?
Well, I think if you asked the officialdom in Beijing, they would say they were forced to take these steps when it came to rare earths, when it's come to these additional fees that China is imposing on American shipping now. They would try and say that they had to do these to draw a red line, to show that the United States, after the talks in London, after the talks in Madrid, the agreements reached in those places, the United States did take actions to broaden, for example, at the end of September, how the Commerce Department enforces the entity list that it has, starting to impose those restrictions on the subsidiaries of companies who are on the entity list. And China would argue that those steps showed that China had to take a tough measure to show the U.S. could not continue to sort of chip away at whatever agreements the two sides reached in these meetings that they've had on and off for the last few months.
And China coming from a position of strength, you would imagine. I mean, you do sense the confidence. It has said repeatedly it is not afraid of a trade war. It said it again over the weekend. So I guess its dominance over the supply chain of rare earths is really giving it that confidence. Is that a fair assessment?
I think Beijing's feeling fairly confident at the moment. You were talking about the trade numbers that are just out at the start of the show. Trade is doing well. I mean, Chinese exports to the U.S. are down, but they're going up to everywhere else in the world. And so that, I think, offers a measure of reassurance to Beijing that it can take the pain for longer than Washington can. But I think at the same time, China's economy is, I would say, in a fragile recovery at best. And so I don't think the Chinese, in the best situation, they would not like to see 100% or 200% tariffs on their goods. They like to get this thing resolved.
And Henrietta, the U.S. economy also at risk right now. We're looking at a government shutdown, and we're yet to see the full impact of tariffs on the consumers. So Trump has to take that into consideration, too.
I think so. And, looking at the perspective from Beijing, they are betting that they do have the upper hand in any trade war with the United States. They do have, I think, an incredible amount of confidence in their ability to manage the U.S.-China relationship and Donald Trump, because they think that they will take economic pain. Their economy is not doing very well from economic punitive measures from the United States, but they are betting that the U.S. economy will hurt worse and faster, and that the U.S. political system, the U.S. society cannot withstand that pain. And I think they feel they've been proven right in that Donald Trump has backed down several times now from a more aggressive economic posture vis-a-vis China, and we've seen that again even in the past 2 days with him pivoting from a very aggressive message promising 100% tariffs to more of a conciliatory message towards Xi, enthusiasm for a meeting, enthusiasm for working this out. And I think that is because the economic picture in the U.S. is on Donald Trump's mind.
So a lot of room for de-escalation. That meeting on the sidelines of the APEC summit will come through, right? Because the optics are important for the world.
I think so. Donald Trump has made clear for months that he really wants to get in the room with Xi. He wants to have this conversation face to face. And the Chinese, for their part, have put out statements just in the past few days calling for dialogue and engagement and the implementation of what they call the consensus reached between Trump and Xi on their earlier call. So I think on both sides, you see a significant appetite for continued diplomacy and dialogue.
And, John, if it doesn't happen, the fallout could be massive. Could it have impact on, for example, the TikTok-U.S. deal?
I think the reason that U.S. markets responded the way they did to those Truth Social posts from President Trump on Friday was because now the realm of possibility, the range of possibilities that we could get from this meeting between the two presidents at APEC has expanded dramatically. We could get some agreement that is much better than the markets had expected, but we could also get some escalation that is far worse than people had feared. And so I think people are, at the moment, really not sure what to think heading into this big meeting.
And, John, some have suggested perhaps China offered a huge investment package. What do we know about what's on the table and how far and how much China is willing to give?
Well, I think we know that China has offered to invest in the U.S. That has been something that President Trump has welcomed from Japanese, European companies from around the world. We also know that China has pushed for the U.S. to change the way it describes its relationship with Taiwan, to get the U.S. to say it opposes Taiwan independence instead of saying it does not support Taiwanese independence. That would be a big diplomatic political win for Beijing. And in response, we know that President Trump has talked about soybean purchases, for example. President Trump has obviously talked about rare earth minerals. And so I think these are some of the things that potentially are on the table.
And Henrietta, of course, we heard from J.D. Vance saying that China should choose the path of reason. What is that path for the U.S.?
I think that the U.S. is focused on securing tactical concessions from China, while Beijing is more focused on the strategic picture. So U.S. is focused on getting purchase commitments, for example, related to soybeans, agricultural products, potentially Boeing aircraft, that would be seen as political concessions to President Trump. Whereas you see China focused on getting from the U.S. side concessions on restrictions related to very high-end U.S. technology, including semiconductor technology for use in AI development, focus on the Taiwan issues mentioned earlier. And so you worry about a bit of a disconnect in the conversation where the U.S. is for the first time in decades, potentially willing to link these very significant strategic concessions related to American leadership and presence in the world to more tactical economic concessions that would bolster the president's near-term political position.
Great perspective there. Henrietta Levin, Senior Fellow at CSIS, and John Liu, Senior Executive Editor at Bloomberg News. We thank you so much for your time today. Now, still ahead on Insight, we talk investment strategy with VS Partners co-founder and CIO Vanessa Xu. More on the key themes she's seeing in markets. Keep it here with us. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Welcome back to Insight. U.S. equity index futures are climbing after President Trump signaled an openness to a deal with China. However, Chinese stocks are sliding, showing investors are still concerned about trade tensions. Let's get insights from Vanessa Xu, co-founder and CIO of VS Partners in Hong Kong. Vanessa, good to have you with us. What do you make of the reaction of the market so far? Seems pretty muted.
Well, the Asian market have responded in a measured way, particularly in China. Actually, domestically, some of the indices stood resiliently. I think on the narratives of retaliations on both sides over the weekend, it's a posturing ahead of important international and domestic events. In China, the Party's plenary is set to happen at the later part of the month, and the APEC is set to happen end of the month. Both sides have very important domestic issues to address. On the U.S. side, the government shutdown, the Treasury, and the Fed policies, and several domestic issues, and China as well to continue to support the economy. So this is strong-handed posturing, yet embedded with the messaging that both sides, under certain conditions, are willing to talk, is a understandable stance ahead of the potential talks. I'm still holding the base view that the talk will happen, and behind the scenes, both sides will have to, like it or not, have to work with each other.
What happened over the weekend underscored the fragility of relations and the expectations of a long-drawn negotiation process. How should investors position for that?
Yeah, drawing the parallel of April, a very fast, sharp escalation of the narratives, then followed by both sides giving each other the, off-ramp to focus on the very important reality. I think regardless of narrative, the both presidents are still bound by the economic reality, which is that China needs to boost its domestic consumption, needs to extend the credit, needs to continue to support by ample liquidity in order to reboot its economy. And the U.S. side, politically, it cannot afford a recessionary outlook, despite slight modest weakening in the labor market. So I think the market needs to focus on the fundamentals of economies. Actually, the U.S. economy is fairly resilient, but the risk is in the financial conditions, given where all the risk assets are quite pricey right now, and Fed is the administration is shifting the policy from monetary quantitative easing to a fiscal quantitative easing, i.e., through Treasury, not through the financial systems. So that actually will tighten the condition, which is happening right now. So that is a actual risk in the near future to watch.
Do you see a buying opportunity? If you take a look at HS Tech, it's currently down about 3%. If you believe in the AI story, the tech story, the China tech story, then perhaps you should be buying up when everybody's selling.
There are buying opportunities, but it is more nuanced than just directly buying the tech and AI themes. And the big tech Chinese companies' earnings actually just revised down, not revised up, despite the very strong price performance this year, because of companies have not yet found a valid way of monetization of the AI spending. In the U.S., similarly, we are actually looking at real asset investment, as I mentioned before, fiscal easing that goes into capex. The money, the system has the money, but the money has to go somewhere. Instead of the financial market, it goes to the real, the Main Street rather than Wall Street. So the shovels that are providing infrastructures and enabling technologies to the taxi is a buying opportunity, but not it goes into power, goes into utility, and it goes into infrastructure rather than the tech company themselves.
How about consumption? I'm wondering if perhaps it is time to rotate to those consumption plays, given China's appetite to boost consumption in the country.
Policies have the headline policies. If you're talking about China, consumption continues to be soft. I think real PPI and CPI continues to be evidently from data that's deflationary. Stronger policy support still are needed. Therefore, this is a reality that drives the government to, be very pragmatic about trade negotiations because China do need a friendlier, benign environment with the global market, not just the U.S. but the rest of the world. But speaking of consumption, we do see very strong growth in large Asia economies and particularly domestically. I just finished my research trip in Vietnam and in India, and despite the tariff headline that also hit these countries over summer, but the domestic consumptions with very favorable demographics and credit expansion are growing strongly. So if we are looking for consumption growth, we're looking at Asia economies that are large enough to support a domestic market.
Before we let you go, we have to touch on gold. It rallied. It saw a little bit of correction. Where do you see gold headed, and what are you reading into gold prices right now?
Well, there are two things. One is the fundamental but slow change of a global currency system that moved to decentralized, currency or more diversified currency system. So, and another theme is about institutional investors are buying real assets. Gold is a very direct expression, and the gold stocks and the miners are direct expression of real assets. And previously was driven by central banks buying. So these semantics together supported strong fundamentals of gold. But not only that, but the liquidity flow into real assets, and it's a late cycle effect of liquidity also flowing to commodities and the materials.
Right. Vanessa, great stuff. Thank you so much. Vanessa Xu, co-founder and CIO of VS Partners Hong Kong. Coming up, here why Malaysia's government expects the ringgit to extend its recent gains. Our exclusive with the second finance minister, Amir Hamzah Azizan, is next. Keep it here with us. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Bersachi in Vienna, and this is Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back. You're watching Insight. Let's do a check on Malaysian assets right now, ringgit in particular, which has had quite a good run, among the best performers in the Southeast Asian region, currently at 422. In terms of the KLCI, it's down with the rest of the region, currently down 0.4%. Of course, it's had a strong IPO market. Now, Malaysia's second Minister of Finance is expecting the ringgit to extend its recent gains. Amir Hamzah Azizan told us exclusively the currency could strengthen to just below 4 to the dollar, its highest since 2018. The ringgit has already appreciated nearly 6% this year, making it the best performer in Southeast Asia. Amir told us the resilience of the currency reflects the economy's solid fundamentals.
I think we've had a good first half. First half came in at 4.4%. And we've seen the exports are still holding, and the development expenditure that's been spending it actually helping to support it. And I think one of the pleasing elements of it is private consumption has gone up, because effectively the government has been trying to lift wages in the country. So we did minimum wage lift in February this year, and the civil service pay increases, and they have been spending and stimulating the economy. So I think those are good support that's actually coming into the economy also, on top of the normal exports and so on.
So 4.8 is a possibility.
Well, let's see. Despite all
Don't be shy, Minister.
Despite all the challenges we've all seen in terms of tariff and so on, I think the economy has got the resilience it's managing through. And I think we will probably end up within the range that we've declared.
Okay, that's not saying too much. For 2026, 4 to 4.5% projection. What's the biggest risk to that estimate?
I think when you look at it, I think we all adjusted the estimates down, and we anticipated the effects of the rattling of the global economy with the tariffs and realignment of how supply chains are moving, how trade is actually moving. So a lower projection was expected. But the key for us in the Malaysian economy is to understand what can we do to the Malaysian economy, what can we stimulate in the Malaysian economy to keep it up. So I think if you look at what we've done in the budget, there was a lot of spends that were actually put in terms of supporting infrastructure growth, putting in long-term growth elements in terms of building the right type of infrastructure that the country needs in the future, and also making sure that our engines of growth, because export engines, FDI is still strong, but also making sure our SMEs are also looked at. So there were a couple of measures that we put in to actually make sure that the SMEs engines continues to tick. So if we've managed to do that well, I think we are going to manage within that range.
Tariffs are a big uncertainty. You saw how, President Trump is imposing additional 100% tariffs on China, taking it to 130%. This is your largest trading partner, contributing to about 17% of overall trade. And some say 130% tariffs would mean stagflation, supply chain disruptions. How might that impact the Malaysian economy?
I think we've seen what's transpiring with the changing tariffs in the first half of the year. And when we started the journey earlier, the signals were tariff is going to come in, it's going to rattle the markets quite dramatically. Countries will have to do dramatic shifts in order to manage it. But over time, practicality started to come in because it's a very much more integrated supply chain that we're having on a global scale. So I think this recent shifts will probably also find a better landing in the not-so-distant future, and we'll come back to what is probably a practical solution. And I think both sides are figuring that one out. So from a Malaysian point of view, the key is to actually understand what is the components of our trade. And our trade are E&E and semiconductors, but we also have still the commodities and so on anchoring the trade. So if we continue to do those well, semiconductors, which is a very narrow supply chain, continues to tick on a better note, I think we'll be able to ride it out.
Let's talk about the Malaysian ringgit. Pretty resilient. Is that a reflection of the fundamentals of the economy?
I think it is. If you look at it, we are first half year 190 billion of FDIs coming in and approved investments. We're seeing domestic investments also flowing well. We've seen, if I use as a proxy, and I look back at EPF as a proxy of formal employment, EPF's contribution rates have gone up. It's growing at 9% compared to the previous year. So that's a sign that employment is still good. My money is still being pumped into the system. And the interventions that we're doing to lift the flow so that the citizenry has money in its hands are also helping drive private consumption. So I think those elements have actually created resilience in the Malaysian economy. And therefore, people look at Malaysia in a slightly different form. And then with the slowing down of the growth of interest rates in other countries, particularly the US where they have been cutting, that's allowed the differential to get smaller, so the ringgit has equally strengthened.
Do you expect the inflows to pick up speed and further boost the currency in the next 12, 24 months?
I think it was important for us to make sure that 2026 is a year that we have enough built in to sustain the domestic economy. So I think that resilience will actually show value to investors going outside. The government fiscal reform is showing value to it. So we started off with a fiscal deficit to GDP of 6.4%. This year we'll end up at 3.8, next year we're down at 3.5. So there is resolve. And if you see at all the reforms that we've been doing, it's about putting in fiscal disciplines coming in. And those are good signs to investors that are coming in. We've had a stable government, clarity of policy, and that's helped to attract investments.
So supporting the currency, the thing is, the ringgit's performance is also contingent on the dollar, which also depends on what the Fed does. Right now, expectations are perhaps for 2 cuts, but that may not happen. How do you see that playing out into your currency?
Well, even if you look at this year, there were expectations of further cuts, and further cuts didn't come in, right? But the ringgit still stayed resilient, because the fundamentals are still strong, and the differentials have remained quite reasonable along that line. So I think even if the Fed slows down its process, the ringgit still has a lot of wind behind it to be able to push ahead along the way.
You talk a lot about putting money into the hands of the people. You did that with this budget. In fact, some say 60% of the budget actually goes into civil servant salaries, pension funds as well. Could you be missing the opportunity to perhaps carry out structural reforms which could then help the economy as a whole and growth?
I think this government has actually started to do a lot of structural reform, right? And one of the key things that we've been trying to do is to dial back on subsidies. And when we give subsidies, we're making sure that the subsidies actually end up on the right end of the stick. The challenge that we've had in the past was a blanket mechanism in terms of subsidies. When we did electricity, we targeted that industries and the top end of society will have to pay more, and the bottom end get some support along the way. And we've reached the point that subsidies and electricity have squared at this point of time. So the government is not putting any new money inside that. We've done that for diesel. From diesel last year when we rolled it out, with a lot of trepidation from a lot of people in terms of rattling the economy. But you've seen inflation under control. You've seen us also to still support the core segments of society, the logistics sector, so we are able to contain inflation, yet we're able to get savings. And now recently we've done that with petrol. So again, I think reform comes in many ways. And what the key things you have to do is plan it well, anchor it well, and make sure it sustains. And that's what we've been able to do in the journey that we have.
And that was Malaysia's second finance minister, Amir Hamzah Azizan, speaking exclusively to us in Kuala Lumpur. Well, for more on the resilience of the Malaysian ringgit, let's bring in Bloomberg Emerging Markets macro strategist Marcus Wong. And Marcus, of course, quite a turnaround for the Malaysian story and for the ringgit story. We started the year, looking at a pretty lackluster currency, but here we are. It's among the strongest currencies in Southeast Asia.
Yeah, it is quite a turnaround, as you said, and owing back to what Amir said in his conversation just now, as well as the budget that we saw on Friday, investors love predictability. Investors love fiscal consolidation. The 3.5 budget deficit target for next year was actually even lower than what economists surveyed by Bloomberg were expecting, which was at 3.55% deficit. And this predictability is, I would say, juxtaposed against what we've seen with its neighbouring peer, Indonesia, recently. I mean, at the start of this year, I think you could say that the cards were flipped. Indonesia looked like it was, going on this, solid fiscal trajectory. But, as we've seen, since September, with the new finance minister, that took over Mulyani, the fiscal guardrails that have anchored Indonesia for the past few years are now in question, now in doubt. And again, juxtaposed with that in Malaysia, this fiscal consolidation is quite positive for investors. And it's important to that point is because the government was expecting Petronas oil revenue to actually deplete next year. So the cut in subsidies comes in very, very important at this point in time. And on that point, the government has some credibility too, because we saw the government expanding its sales and service tax base in June, as well as the rationalization of the fuel and the Euro 95 fuel in September. So it shows that there's some credibility involved, and investors are keen on it.
Juxtaposition. Interesting, you called out Indonesia, but it's not just Indonesia. It's Thailand, it's the Philippines. So it does look like Malaysia is a more stable market. Talk about stability in Malaysia, which is uncanny, really. So the prospects for FDI in the future is also playing into the strength of the currency, correct? Because that is expected to persist.
Yes, as FDI is all about investor confidence in the region, and sad to say, not sad to say, but at the end of the day, it's juxtaposition. So Malaysia is doing well. Its neighbours probably have some catch up to do, from what we've seen over the past few months. So the flows that Amir has mentioned, this could definitely extend moving forward. Definitely supportive of the ringgit, but not just FDI flows. I mean, other things that are supportive of the ringgit include the fact that Bank Negara is expected to keep rates on hold for the foreseeable future. Economists expect it for it to hold through 2026. In comparison, we've seen central banks such as Indonesia, the Philippines have surprised with rate cuts instead. So a lot of factors are supporting the ringgit, FDI, rate cuts. How, of course, US-China trade relations evolve from here is important. As rightly put, US and China are Malaysia's two biggest export partners. So their relationship will matter moving forward.
How about the rest of the Asian world? Because we're seeing today the Asian AFEX index falling to the lowest since May. I mean, that's trepidation. That's investors on edge, isn't it?
Yes. So, of course, the broad dollar has been part of the story, and that, of course, is related to how the euro and the yen has been performing. But, of course, to this region, a lot of it depends on how China and the yuan moves going forward. We've seen the yuan actually strengthen today, as the PBOC, of course, has signaled that they want yuan stability. So in the sense that, we can expect Asian currencies, even though you would say it's near a 5-month low, no one expects a sell-off from here. But of course, if the dollar continues to move stronger, and trade relations between US and China deteriorate from here, and that's a fair assumption, maybe in the near term, but who knows in the longer term, we could actually see Asian currencies, more further pressure from here.
And that yuan stability will also help prop up emerging market currencies in this part of the world.
Yes, definitely. A lot of
that correlation has become stronger.
Yes, you're right to say that, and a lot of it is due to the fact that the yuan is viewed as a regional anchor. A lot of two main factors. For a lot of is the main trading partner, or the biggest main trading partner for people in this region, and also the fact that it has a significant weightage in the currency baskets of, for example, like a Singapore dollar. So what happens for the yuan really does matter for Asian currencies.
So what are some of the themes that we're looking at for in the Asian AFEX space in the next 6-12 months?
So of course, how you could say that we've been quite of a lull in the past maybe 3 or 4 months. US-China trade optimism has bowed. There were talks of meet between Trump and Xi. There were meetings between the working partners. So that has kept Asian currencies in a sense in a more buoyant mood over the past few months. So of course this is now in question moving forward. How that evolves will matter a lot for currencies. Of course, how the Fed, will they one day, as you said, 2 rate cuts are priced in for this year. If that happens, that will be, of course, supportive. But I guess importantly for investors recently is there are a lot of idiosyncratic risk. We've seen with Philippines and the corruption issue that has really dragged on the peso. Of course, with rupiah, as I mentioned earlier, and also with Thailand, the stability of the new government. That there will be a vote moving forward, and it will be a question for investors out there whether the current administration will hold. So larger risk, of course, will be trade, but increasingly we're seeing that this idiosyncratic risk popping up in Southeast Asia. Safe to say, Malaysia seems in a better position than most.
Yeah, and we see the reversal of fortune so quickly. Marcus, thank you so much for that. Bloomberg Emerging Markets macro strategist Marcus Wong with his assessment. Now, let's take a look at how Chinese stocks are doing. Of course, China is at lunch break, but this is how it's looking in terms of the HSI. It is under pressure, not surprisingly. The Hang Seng down more than 3% on the back of the tit-for-tat that we saw over the weekend between Trump and Xi Jinping, that concerns about those trade wars resurging. Also, we're seeing in terms of HS Tech down by 4% right now. Of course, this is one index which has been surging. It's climbed 31% in 2025 alone as Chinese equities benefited from a trade truce with the U.S. in addition to optimism over the country's growing heft in AI, of course. Taking a look at the tech giants, they're also under pressure, not surprisingly. But remember that the likes of Alibaba have surged about 100%, with Tencent up almost 60%. So those the drop that we're seeing today isn't really moving the needle. Still, Alibaba down almost 5% as we speak. Let's take a look at the Indian markets as we count down to the Indian Open. Let's take a look at the early numbers. Where we are in terms of how it is shaping up. This is a market that's been pretty much propped up by retail investors providing that support that we've seen so far this year. In terms of the Indian rupee trading at 88.74, Indian markets are also under pressure. The Sensex down by 0.3%. Sentiment being guided with the rest of the region in terms of those trade concerns from investors. Now, here's some more top geopolitical stories we are following. President Trump has reiterated that the war in Gaza is over and that the truce will hold. He's traveling to Israel and is scheduled to address Parliament later on Monday. If the deal holds, it would represent a major step toward lasting peace, something neither Trump nor his predecessor Joe Biden was able to secure in previous rounds of negotiations.
Okay, you understand that? I think people are a lot of reasons why it's going to hold, but I think people are tired of it. It's been centuries, okay? Not just recent. It's been centuries. I think people are tired of it. Yeah, the ceasefire is going to hold.
French President Emmanuel Macron has announced a new cabinet as pressure mounts for the government to pass a budget. On Friday, Macron reappointed Prime Minister Sébastien Lecornu just days after he had resigned. Macron's weakened majority and a widening budget gap are fueling investor concerns, with French bond spreads now at multi-year highs. And still to come on the show, Tata Capital set to make its trading debut in Mumbai, with LG Electronics next cap off the rank. More on this multi-billion-dollar test of India's IPO markets coming up. Keep it here with us. This is Bloomberg.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
It is a big week for India's IPO market with a pair of billion-dollar listings coming up. Tata Capital is set to debut today after raising $1.7 billion in the country's largest IPO this year. That will be followed by Tuesday by another mega listing from LG Electronics India. For more, let's bring in Chiranjeevi Chakraborty, who leads our equities coverage here in Asia. So much excitement and, of course, good appetite expected.
Yeah, a lot of excitement. This is a big week for India's IPO market and IPO history. We're getting the biggest listing since Hyundai's India unit got listed last year, which was a $3.3 billion IPO. And now Tata Capital, which is about to list in another half an hour, 45 minutes, is a $1.7 billion IPO and the biggest so far this year. That said, Haas, at this point of time, it doesn't look like the listing pop is going to be there, given that grey markets are indicating a rather muted sort of opening for the stock.
For the longer term, this stock seems to have potential to go higher, right? There is a lot of growth story attached to it.
Yeah, that is the view that analysts are sharing at this point of time. They are more focused on the long-term potential for a sort of shadow lender in India in a developing economy. As you know, financials and lenders tend to do quite well, and that is where most of the analysts are focusing on rather than the short-term gains, given the fact that in the short term, the shadow lending industry in India is going through a bit of a margin compression. There are concerns about credit growth in the country, given the broader economic slowdown, and also about margins.
CJ, we know that India is fast becoming a fundraising hub. We've seen a lot of IPOs, big IPOs. On top of that, I think it comes down to how deep that domestic market is, that liquidity in India, isn't it?
Yeah, it's all about the domestic investors right now, and particularly the domestic mutual funds as well as retail investors who are investing into this market through these mutual funds, and they are flush with cash at this point of time. They're dominating, if you look at the anchor books that happened prior to the IPO going public, those lists are being dominated by local mutual funds and insurance companies rather than global investors, the marquee investors that we have gotten so used to, dominating those lists. And clearly, they are the one who are driving, the demand for this, and also giving a lot of companies the hope that if they were to come to the market, their IPOs will successfully sail through, as we have seen throughout this year after the early, rough patch earlier this year when the secondary market itself was not doing that well.
And CJ, of course, all eyes on LG Electronics India as well, making its debut this week, in fact, tomorrow. And some say that, when you take a look at its IPO pricing, it is actually at 40% discount to its peers.
Yeah, that is true. And the funny bit is that it's actually probably become when it lists the largest listed white good maker in India, and that is where a lot of analysts are focusing at, that the valuations are quite attractive for that IPO, and we have seen that in the demand that came through from wealthy investors and retail investors when the IPO was open for public subscription. And if you look at the grey market premiums for the listing tomorrow, it is indicating a very healthy pop when the debut happens tomorrow morning.
CJ, thank you so much for that. All eyes on the Indian market, as always. CJ Chakraborty, who leads the equities coverage in Asia. Well, let's do a check on markets. The Hang Seng in particular, the markets in Hong Kong, obviously getting a lot of pressure on the back of tit-for-tat developments over the weekend over that trade war between the U.S. and China. The Hang Seng currently down about 3.5%. We've seen HS Tech under some pressure as well, currently down 4.5%. It is its sixth day in a row of that drop, biggest move since April. Taking a look where we are in terms of the property index, unscathed as well, lower by about 1.5%. The big tech names are under a lot of pressure. Alibaba, case in point, currently dropping about 5%. This is one stock which has climbed about 100%, with Tencent also rising 60% in the same period. Both stocks are leading the index lower as we speak. HS Tech is standing its losses amid those U.S.-China tensions. And we're keeping an eye on the FX space. Let's take a look at where we are in terms of where Asian currencies are doing right now. Remember that we just had optimism from the second finance minister of Malaysia saying that he expects the Malaysian currency to rise. In terms of the Japanese yen, it is down about 0.5%. The Korean won also under pressure on the back of the dollar index remaining steady at 12.12 right now. And cryptocurrencies, of course, we saw that massive move over the weekend. Bitcoin currently down about 0.1%. Before we go, here's a look at tomorrow's show. We'll get fresh market insights from Moneta senior advisor Evan David. That's as traders continue to watch the U.S. and China trade spat, as well as President Trump's Israel visit. That is it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.
Asia's not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, well, you know, Trump's been, you know, sort of saying, well, you know, we shouldn't be focused on this, but yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I have been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Israel awaits the release of its last hostages after the 2-year war with Hamas. 20 are believed to be alive and due to be returned to their families today. Fragile peace. President Trump makes his way to the Middle East to herald the peace deal. He'll address Israel's parliament and greet hostages before meeting with Arab and world leaders to sign the historic agreement ending the war. And trade hopes that Trump softens his tone on China, easing tensions which escalated on Friday on plans for additional 100% tariffs and export controls on critical software. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. It's difficult to overstate how important today is going to be for the region, for the families of those hostages who look like are going to be released in the next couple of hours, the Palestinians who are returning to their homes. So much going on. And of course, the U.S. president himself is set to land in the region in the coming hours. So we are giving you now some live images coming through from Hostage Square in Tel Aviv. As you can see, a lot of excitement, some optimism, and really a lot of nerves ahead of how the next couple of hours are going to play out. So this is a big focus for our show. And we will get to that in a moment. But also, let me just run you through what has happened to markets over the course of the last few hours, especially because on Friday, a massive escalation came through from President Trump. He put out that very incendiary post on Truth Social hinting that they could really raise tariff rates on Chinese goods by a significant amount by November the 1st, up to 100%, on top of the additional tariffs that are already in place now. But over the course of the weekend, he sort of dialed that back. And so, yes, a big escalation on the China-US front, but at the same time, some hopes actually that there could be scope for compromise by that November 1st deadline. Today, what you're seeing is S&P futures actually leaning towards the green, up 1.2%. So the biggest decline since Liberation Day on Friday, with a massive pullback in Wall Street, the S&P wiping out all of its gains for the week, down 2.7%, the Nasdaq down 3.5%, but today leaning towards the green. So already recuperating, you could say, half of the losses almost from Friday. Not the case for MSCI Asia Pacific ex Japan. Japan is out on holiday today, so not included, but you can see the Hanover pretty negative this morning. Hang Seng down more than 3.5% in the Hanover, so 2.2%. A lot of red on these Asian bourses as we get into the European Open. And the dollar yen, you can see now holding in around 152, but a lot of fireworks on Friday as the dollar lost a lot of ground once that post came through. The yen rallied in sympathy versus the USD, and today you can see stabilizing around that 152 level. But of course, there has been plenty of speculation about what's going to happen with the yen from here, with the political backdrop in Japan also a big question mark at the moment, with LDP losing one of their key coalition partners. And then Bitcoin stabilizing today at 115,000, but a massive loser on Friday. We saw up to $20 billion worth of liquidations go through in the crypto space. Again, questions there about the extent of the liquidation, how many players were involved in that. But the point is, at one point, Bitcoin was down 12%. Today, stabilizing at around 115,000. So all asset classes got hit on Friday afternoon. And then in terms of regional bourses, I thought today was a good day to just take stock also at how some of these regional stock markets have done. This is year to date, actually over the course of the last year, so over a 1-year time horizon. You can see that the Tel Aviv Stock Exchange is actually up 53%. And no surprise that insurance stocks, defense stocks have done quite well there. The Egyptian Stock Exchange up 25%. Later today, we are going to be speaking to a key Egyptian minister on the show as well to talk through some of the economic developments there. Abu Dhabi up 8.7%, and then Tadawul, the Saudi index, is actually down 4.8% over the course of the last 12 months, something that we have covered extensively. But this is just to show that stock markets, at least in the region, have been quite resilient despite everything that has been going on. So that leads us to our top story today. Hamas is expected to start releasing Israeli hostages this morning, marking the moment of truth for President Trump's fragile peace deal. Trump is on his way to the Middle East to herald the agreement ending the 2-year Israel-Hamas war. And he's scheduled to address Israel's Knesset and greet hostages later today.
The war is over, okay? Do you understand that? I think people are... a lot of reasons why it's going to hold. But I think people are tired of it. It's been centuries, okay? Not just recent, it's been centuries. I think people are tired of it. Yeah, the ceasefire is going to hold.
To the Arab leaders and partners of ours who meant so much in this negotiation, including President Erdogan from Turkey, including Sheikh Mohammed from Qatar, including the Emir, including President Sisi, all of whom played a critical and an integral role in this peace deal. I say thank you.
President Trump will meet with many of those leaders that Steve Witkoff just referenced now later today at a summit in Sharm el-Sheikh, Egypt, where there will be a signing ceremony for the Gaza peace deal. Let's go live now to Bloomberg's Dan Williams in Jerusalem. Dan, I think, as I was saying at the top of the show, it's difficult to overstate what a momentous day this is for Israel, for the families of those hostages who've been waiting for 2 years now, and, of course, for the hundreds of thousands of Palestinians who have started the long return back to their homes and, very early stages of what could be reconstruction.
Indeed, it's daybreak in Jerusalem. I don't think it would be an exaggeration to say that for many Israelis and Palestinians, there is a hope this will also be a new dawn for their
Okay, we seem to be having some technical difficulties with Dan Williams. We will go back to him the second we reestablish connection. But for now, let's continue the conversation with our guest. And today we've got Adam Ramey. He is Associate Dean. Let me just get the full title up. He's Associate Dean of Social Science and Associate Professor of Political Science at NYU Abu Dhabi. Adam, thank you so much for joining us. You know, actually, I just want to go back to some sound that we played where President Trump declared that the war is over. Do you have faith that this ceasefire, this exchange of hostages for prisoners can actually lead to more long-term security and stability in the region?
Well, I think that, President Trump has certainly heralded this peace deal as not just a short-term ceasefire, but as a bedrock for long-lasting peace in the region. Citing not just the recent conflict of the last 2 years, but rather of the decades-long. I mean, he said centuries, but I think the broader point is he wants to sort of have a long-lasting peace and some sort of meaningful, deal that both the Israeli and Palestinian publics can live by. I think that President Trump has been sort of quite short-tempered with regards to Prime Minister Netanyahu's conduct of the war in Gaza. I think that he wanted this over with. He campaigned on bringing peace to the region and stability to the world in the lead up to the November elections. And now here he is, not even quite a year into his term yet, and the war had still kept going. And I think President Trump was losing patience. And certainly the more dovish or peace-seeking members of his inner circle, including Vice President J.D. Vance, are heralding this as well. I mean, this is what President Trump promised. He said he was going to bring a resolution to both the Israeli-Palestinian conflict in Gaza as well as the Russia-Ukraine conflict, and here we are right now. It's taken far too long, but President Trump was able to get all the parties to the table and get them to agree to a set of terms that they would all find acceptable. And assuming everything goes well with the prisoner exchange, I think that we've got the kernel of something that can be built upon for the future. And certainly for the rest of President Trump's term, he'll be a partner for peace in that regard.
Yeah. Well, let's talk about the fact that he is considered to be a partner for peace, receiving what is likely to be a hero's welcome in Israel and also in Egypt as well. I mean, he even said it's very rare that that both sides, the Arab leaders and Israel are happy with this outcome. But what do you make of the fact that Israel will not be present at the Gaza signing ceremony later this afternoon?
Well, I think it's very clear that this was a United States-led initiative. I don't think the Prime Minister Netanyahu wanted to wind things down anytime soon. It was President Trump that got all the parties to the table. And Netanyahu and his war cabinet are going along with it, but I think that the signal is quite clear. This is a Trump-led initiative. It's a Trump-led initiative that the Israeli public writ large endorses, and that the Arab publics endorse. And so he's getting the hero's welcome from the Israeli public and from foreign Arab leaders and Arab publics, but not so much from Netanyahu and his war cabinet.
What do you think happens to the Israeli Prime Minister from here? One of the most remarkable developments over the course of the weekend was the cheers that came from Hostage Square when President Trump's name was brought up, and the boos that ensued when the Israeli Prime Minister's name was brought up. Do you think that his domestic position is now untenable?
Oh, for sure. I think that it's remarkable. In most countries around the world, when the country is attacked and there's some sort of major military engagement, there's what we call a rally around the flag effect, and incumbent governments get a huge boost. But Prime Minister Netanyahu, saw a slight boost, but nothing material in that. And I think it's important to remember that before October 7th, 2023, there were massive protests in Tel Aviv, millions of people taking to the streets protesting against Prime Minister Netanyahu's judicial reforms, calls for across the ideological spectrum, left, right, and center, among both Jews and Arabs within the Israeli state, for Netanyahu's government, for him personally to be held accountable and for his government to be brought down. And now with the war over, I think those voices are already clamoring for change. And just in the past week or so, opposition leader Yair Lapid was plotting his attempt to take down Netanyahu within the next couple of months. Indeed, Netanyahu's coalition has been very, very fragile from the get-go, relying on extremist voices on the Israeli right in order to cobble together a bare majority in the Knesset. And all it takes is one of those partners to back out, and the government could fall quite easily. So I would expect to see, especially in the coming weeks and months, not only calls for Prime Minister Netanyahu to be ousted, but actual attempts in the legislative chamber, the Knesset, to try to bring down the government and have new elections.
Okay, so that's on the Israeli side. Something else I want to flag over the weekend, there were multiple reports of fighting within the Gaza Strip, Hamas officials looking to reassert control and security in some areas and also punish those who they thought were aligning themselves too closely with the Israeli side. What does that tell you about the challenge ahead in terms of reconstructing and rebuilding a credible governance in Gaza when Hamas themselves don't seem to want to let go so quickly?
Well, I mean, this is the challenge. I mean, so the Israeli military has pounded Gaza for 2 years now. And, you know, while a huge amount of infrastructure is damaged and countless lives are lost, Hamas's ability to wage war is still largely intact. And though they've lost some leaders along the way, the essential apparatus of the Hamas-led government in Gaza and the military equipment to back that up are still there and still intact. And just as the withdrawal happened, I've seen countless images and videos from the Gaza Strip showing Hamas reasserting its presence in the area. And indeed, there are going to be reprisals, and it's going to be a challenge. And I wouldn't be surprised to see Prime Minister Netanyahu try to use this as a threat to say, well, you know, if Hamas continues to rearm itself, we reserve the right to resume hostilities. I don't think President Trump would be too positive about that, but I think it's going to be a serious challenge. There were wide gaps between the government in Gaza versus the government in the West Bank, the Fatah-controlled government there, and how things are going to play out going forward are going to be incredibly tricky, because Gaza is going to need to be rebuilt, and the question is to whom is the rebuilding funds going to be directed, and is Hamas going to be able to exert unchecked authority like it did prior to October 7th to 2023, and that's something that only time is going to be able to tell.
Yeah. Very way of capturing some of the huge questions that await us in the coming months and years. Adam Remy from NYU Abu Dhabi. But we've just got some lines crossing the terminal now. Hamas has published the names of the 20 living hostages set to be released later this morning. Let's go back to Bloomberg's Dan Williams in Jerusalem. This is the moment that the families of those hostages have been waiting for. Dan, tell us about the mood in Israel today.
Good morning. Good to be back with you, Jumana. Yes, indeed, the sun is rising over Jerusalem. For many Israelis and Palestinians, a ray of sunshine, if you like, after a very, very dark period with this 2-year-old Gaza war. It's the end of the war, according to President Trump. He's hoping to put the diplomatic space in order for that in the afternoon when he meets with other regional leaders in Egypt. But for now, all the focus is on that hostage release, the first stage of the implementation of Trump's peace plan. We're hearing that Hamas, as you noted, has published the names of 20 living hostages. That appears to correspond to predictions made pretty much throughout the war, that just 20 of the 48 hostages remaining in Gaza are still alive. This will come as immense relief for the families of those hostages who are due to be reunited with them in the coming 2-3 hours. For the families of the dead hostages, a bittersweet day. They will have been prepared for this eventuality that their reunion will be with the remains of their loved ones. However, that will provide them with some closure. It's not entirely clear that all 28 bodies, the 28 bodies expected by Israel as part of this swap, will be delivered today. There is some question over whether even Hamas is capable of retrieving all of those bodies, but nonetheless, the recovery of the bodies really puts a line under this conflict, the recovery of the live hostages, and that will set into motion the remainder of this plan, it is hoped.
President Trump is set to be landing in Israel in the next couple of hours, addressing the Knesset, and then traveling on to Sharm el-Sheikh in Egypt for the Gaza signing ceremony. Just walk us through the choreography of the day, Dan.
Well, we will have rather an emotional yo-yo of a day for the president, for everyone watching him, and this is a story of global interest, obviously. He will receive a hero's welcome in Israel. His approval ratings are really through the roof. The city of Jerusalem is decked with American and Israeli flags. You can expect the walls behind me of Jerusalem's old city have already been illuminated with images of the U.S. flag. He's really seen as the man who brought to a close a war that was seen often impossible to conclude in a way that Israelis would deem satisfactory. So he will be coming here on a short trip of a few hours. He will be speaking at the Knesset, Israel's parliament. He will also be hearing speeches by the Israeli Prime Minister, opposition leader, parliamentary speaker, and meeting with the families of some of those hostages who are being recovered, apparently in the coming minutes.
Bloomberg's Dan Williams live from Jerusalem, an absolutely monumental day. And just for those who are just tuning in, Hamas have said that they are ready to release the 20 living hostages in the exchange deal, and they have published the names of the 20 Israeli hostages that are set to be released this morning. Still ahead this hour, we will be speaking to Egypt's Minister of Planning, Economic and Development, and the worst day for Wall Street since April. But it seems as though over the weekend, President Trump is pulling back from the brink a little bit.
Yes, and we did see the market reaction reflecting that as well. If you look at the Hang Seng Index, we saw a decline there, but certainly much less than the declines that we saw last Friday in the U.S. session. And yes, President Trump appearing to provide an off-ramp to President Xi here. He wrote on Truth Social, "Don't worry about China, it'll all be fine. The U.S. wants to help China, not hurt it." We also heard something similar from J.D. Vance as well on Fox News, calling on China to choose the reasonable path, saying that the U.S. will reciprocate with reasonable actions as well. But you know, what I'm hearing here from people here in Shanghai, from official circles, from the private sector, and also what I'm getting from what state media has been publishing so far, it seems like the Chinese side is seeing this as the U.S. acting in bad faith. And there is a breakdown of trust, whether or not China can continue to trust the U.S. to keep up its end of the bargain in any trade truce, because it seems like the Chinese Commerce Ministry, at least officially, they're defending the action, saying that this is a defensive act in response to the U.S. Adding new restrictive measures after the two sides had agreed to a sort of truce, especially after the Madrid talks. And you can see on this graphic here, the Commerce Ministry saying that they will not hesitate to take retaliatory action to protect the legitimate rights and interests of the Chinese economy.
Yeah, I mean, they've talked of retaliation, possibly further retaliation. What other options does China have? Because the rare earths leverage is a pretty powerful one, a pretty powerful tool that China has, not only on the U.S., but over the rest of the world.
Yes, indeed. And this time, China has really used the strongest attempt yet of its rare earth leverage, because the latest tightening of the rare earth export controls last week provided extraterritorial jurisdiction as well. It places control on overseas exporters that sell products with even trace amounts of rare earths from China. So this would disrupt any mitigation measures from the U.S. seeking to get alternative rare earth magnets from the likes of Germany or Japan or other allies. But at the same time, the Chinese Commerce Ministry made it clear as well that this is an export control. It's not a ban. It's sort of giving that space for negotiation as well, because the Chinese Commerce Ministry is saying they just need to get the license from the Commerce Ministry, and China will be willing to work with countries to, expand dialogue and to smooth the path to ensure that rare earths continue flowing. So there is, from both sides, signals that they do want dialogue to happen, and we still have a couple of weeks until November 1st when those threatened tariffs would kick in. So we'll see if both sides manage to dial down tensions from there. But so far, we have seen Chinese exports still holding up pretty well as well. We got the trade numbers today, surprising to the upside, over 8% increase on year, and much higher than what we saw last month, 4%. We are seeing increase in imports as well, and it shows you that China is resilient and agile enough to respond to the shifting trade flows, with the U.S. becoming a less important part of its economy.
Yeah, Min, well, luckily we have a specialist with us to talk through some of the implications on the Chinese economy as well. Min Lo in Shanghai. U.S. equity futures are rebounding alongside crude as trade rhetoric cools down. Gold, though, continuing to find new highs. Joining us now is Trinh Nguyen, Natixis Emerging Asia senior economist. Trinh, how do you see all of this playing out? Is it Trump posturing in the hope that he's going to get a deal with President Xi before November the 1st? I mean, how should you be trading this, if at all, in the coming weeks?
Well, I do think that the maximalist position is very unlikely, but I think what we're looking at is that U.S.-China tensions continue to be very escalated. China is weaponizing, obviously, its supply chains, but the U.S. is also its market access. And I think those 2 points are not going to disappear. They're just going to be mitigated by the talks upcoming. The fact that China trade data exports were quite strong today point to the fact that it's probably going into these talks a bit more confident, which suggests that there's not a lot of room to also concede as well.
So I was going to ask you about that. What do you make of China's trade numbers today? Because as it stands, they still have a much higher tariff rate than the existing tariff rate for other countries around the world. And yet they continue to post these very strong export numbers. How and where are they exporting to?
Absolutely. China has cheap prices, right? We have deflation onshore, and as a result, it's able to compete externally, given the fact that it's much more competitive. Exports to the U.S. decline sizably, and so it's flooding much of this more to Southeast Asia, to India, to the rest of the world, to the EU. So the trade deficit is widening with China, with the rest of the world. And I think one of the key points here is that exports continue to be a key growth driver for China, and that is going to be a point of contentions moving forward. You can see that tensions are rising with the EU, the fact that it's now has a bigger trade deficit in September than the U.S. Also with the rest of the Asian countries. It's a very uncomfortable position for Asia. On the one hand, it gets to import cheaper goods, which causes a deflation in goods. But on the other hand, we have a gradual process of deindustrialization where firms are not able to compete with these cheaper goods coming through their shores. So it creates a tension in that while the Asian traders of the region are unhappy with Trump protectionism and tariffs, it's also finding it very difficult to find an alternative market to the U.S. As China imports less. So the year-to-date number shows a contraction, even though exports continue to accelerate. And that points to the fact that it faces both competition with China, but at the same time, not able to export more to the Chinese market.
And Trinh, just succinctly here, do you think that this is actually going to lead to further inter-regional barriers as well? You know, the likes of India wanting to perhaps protect their own industrial market?
Absolutely. And I think that some countries would do that much more than others. Some are in a less position. Obviously, we have a situation with Thailand where you have political paralysis. We have a situation in Indonesia where the country is much more dependent for China for trade and investment. So the room to maneuver is much less. But we clearly will see much more trade barriers throughout the world to protect their markets. And it's going to probably start with steel and widen out to other areas. But irrespective, in the short term, this is going to be a sugar rush that's going to lead to greater tensions and also deindustrialization within Asia.
Trent, thank you so much. Trent Nguyen, a Texas senior economist from Emerging Asia. Well, coming up, we're going to talk about Egypt with Egypt's Minister of Planning and Economic Development.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost for meatballs, too.
I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We're actually running today about 40% of our sales is actually veggie balls and plant balls. And personally, I don't love the veggie balls, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel awaits the release of its last hostages after the 2-year war with Hamas. 20 are believed to be alive and due to be returned to their families today as Palestinian families return to a devastated Gaza. Fragile peace. President Trump makes his way to the Middle East to herald the peace deal. He'll address Israel's parliament and greet hostages before meeting with Arab and world leaders to sign the historic agreement ending the war. And trade hopes. Trump softens his tone on China, easing tensions which escalated on Friday on plans for additional 100% tariffs and export controls on critical software. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Major day in the region. We are going to stay on top of all of the developments. President Trump should be landing in the next couple of hours to Israel. This as Hamas just released the names of the 20 hostages that are also due to be released in the coming hours. So really momentous day, and we will continue to monitor those developments. But for now, let's just bring it back to markets. So much volatility and fireworks on Wall Street towards the close on Friday. Big pullback for the S&P, down more than 2.6% by the end of the day. NASDAQ also down 3.7%, its biggest shakeout since Liberation Day. So really just tells you how markets reacted adversely to that Trump post that he put up on Truth Social, suggesting that they were going to go down harder on China and possibly introduce another 100% tariffs. That being said, over the course of the weekend, he seems to have dialed back the tone and insinuated that there is still scope for negotiations and that meeting with President Xi could still happen. So that is the mood as we head into today. S&P futures leaning towards the green, up 1.2%, but the handover from Asia Pacific, Japan are out for a holiday. It's very negative. As you can see, red there, down 2.1%. Hang Seng really feeling the brunt of the sell-off this morning, down more than 3.5% as we talk about that handover. Dollar yen sitting just shy of 152, though we did see a massive jump in the yen versus the USD. The USD losing a lot of ground after that Truth Social post came out. Today, though, the dollar regaining some of its footing, up 0.5% versus the yen. And then Bitcoin, again, stabilization here, but we saw almost $20 billion worth of liquidations go through in the crypto space on Friday. At one point, Bitcoin was down 12% in trading. So a lot of liquidations across all asset classes. Today, the theme is one of stabilization. And let's just take a moment also to reevaluate regional bourses. Price action over the past year. Big day for the region. You can see that most regional indices have actually had a good run over the past year. The Tel Aviv Stock Exchange up 53%. The Egyptian index up 25% over the last 12 months. The only, I would say, underperformer has been the Saudi Tadawul index, down 4.8% over the course of this year, as markets have paid a lot of attention to Saudi spending plans in addition to the backdrop of lower oil prices. All right, President Trump plans to visit Egypt to celebrate a peace deal that has halted the fighting in Gaza. Egypt played a key role in brokering the agreement, which was secured after negotiations with the U.S., Qatar, and Turkey. Joining us now is Rania Al-Mashat, Egypt's Minister of Planning, Economic Development and International Cooperation. Good morning to you, Minister. Really important day to have you on. And Egypt, of course, are center stage with that Gaza peace ceremony taking place in Sharm el-Sheikh, and Egypt being one of the key countries that was mediating to get the peace deal across the line. Your thoughts on the significance of today and what it could potentially mean for regional stability?
Well, thank you very much. Yes, it's a very important day, not just for the region, but for the world. We know that there has been 2 years of suffering by the Palestinian people. So to reach some resolution and put in the foundations for peace is going to be fundamental for the future. Moreover, the world has also been affected by the economic implications of what has happened in the Suez Canal as a route for international trade. So we are looking forward to a good day, a day where you have leaders from around the world. Our president, His Excellency Abdel Fattah al-Sisi, has been very resolute since the beginning with a very clear vision, a vision of resolution and a vision of pushing forward with respect to the rights under international law.
You mentioned the economic impact the regional instability has had, not least on Egypt, the transit through Suez Canal. How do you expect upside risk to present itself in the coming months should this deal actually hold?
Just looking at the participation globally, the deal being brokered through President Trump and also the help of Egyptian leaders as well as those from the region, we do look forward to seeing a more lasting resolution, one that provides calm in the area. And therefore, with the resumption of Suez Canal vessels moving in there, I think that is going to be very, very positive whether it is for Egypt or for the cost of trade globally.
With the hit to some of the receipts coming through from the Suez Canal, what remedies did the government put in place to sort of try to compensate for that?
We have embarked on very important reforms in March 2024. And this is despite the headwinds from the impacts of the conflict in the region. This was reforms related to fiscal discipline, monetary policy, a flexible exchange rate, caps on public investments. All of this has led to a GDP growth which is now averaging 4.5%. Last quarter was 5%. All of this pushed by an economic model that is based on more industrialization, more tradables. When you take a look at Egypt's GDP growth, you will see that the sources of growth have come from more economic activity in manufacturing, again, benefiting from the very important reforms that happened, macro reforms that happened in March 24. This is continuing through a very ambitious structural reform program where we are looking at increasing competitiveness, increasing private sector engagement, and also benefiting from green investments in the country.
Yeah, and indeed, the S&P upgrades came through last week, which is an endorsement of some of the policies that you put in place. Egypt has signed a number of agreements, investment deals over the last 18 months or so with the likes of UK, EU, UAE, obviously, to name a few. What other partners are you looking for? And could we expect to see more of these types of deals in the coming months?
So we've put together a very detailed economic reform program named Egypt's Narrative for Economic Development. In it, we identify sectors which are considered priorities to attract foreign investments and also benefit from the very robust infrastructure that was put in place over the past few years. So when you mention UK, when you mention the EU, UAE, other countries, there is a lot of inflows with respect to investments in different areas, particularly in ports. The tourism is doing very well. We feel that 2026 is going to be an inflection point where the different sectors are going to be contributing, notwithstanding, of course, the decline in the Suez Canal receipts. We've seen a rebound in remittances. We've seen a rebound in tourism. And as I mentioned, what is key for growth and jobs has been manufacturing. And we see many companies coming in the Suez Canal economic zone and many other places to actually either increase equity in existing companies, do joint ventures, or actually start new firms. So all of this is a story which is evolving in a steady way. And the benefits we are seeing in lower inflation, greater productivity, and higher GDP growth.
Yeah, and Rania, I know you're a very busy lady, and you're heading on to the IMF meetings this week. Egypt's program obviously up for a review. What are some of the key items that are going to be discussed?
So for us, we are traveling to Washington for the World Bank and IMF meetings. As you know, Egypt, under the IMF program, has also important partnerships with the EU, with the World Bank. So there are different sources of financing linked to our ambitious structural reform program. As I mentioned, we look forward to discussing the reforms that are taking place. The S&P upgrade, as you mentioned, was a testament that these reforms are gaining traction. And as was mentioned in that report, there are many points to the upside, provided we are continuing with the reforms. We are committed to the reforms. We are opening up the economy, increasing competition, and also trying to reduce the bottlenecks that we had seen over the past years. Once again, this is happening despite the very tough regional geopolitical landscape. So as this is also going to be hopefully moving in the right direction after today's big summit in Sharm el-Sheikh. This is all going to be positive for the Egyptian economy, and therefore there are very important dividends and gains for those who invest in Egypt.
Minister, thank you so much for taking the time to chat to us. A very, very big day for the region and for Egypt as well. Rania Al-Mashati, Egypt's Minister of Planning, Economic Development and International Cooperation. And coming up, Saudi Arabia seems to be leaning more on global debt as local listings slow. We'll ask Amwal Capital Partners what this shift means for investor appetite and the kingdom's funding plans. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Well, if you're joining us now, some breaking news coming through. Army radio in Israel is citing that the first 6 hostages to be released in Gaza City. You're looking at live images from Hostage Square in Tel Aviv, where families, where so many members of the public are waiting in anticipation for this milestone moment, waiting for 2 years now for their loved ones, for the hostages to be released. And a short while ago, Hamas published the names of the 20 Israeli hostages that are set to be released this morning. So all of that is set to come in the coming hours, possibly even the coming minutes. High level of anticipation. And of course, this marks the very first step of a very long process. And the hostage release will happen at the same time as Palestinian prisoners and detainees will also be released at the same time. So that is all going to happen in coming hours, in addition to President Trump landing in Israel shortly. So we will keep you up to speed on anything we hear out of there. All right, switching back to regional bourses, markets, funding, we're seeing a notable shift in how Saudi Arabia is financing its economic ambitions. The government and key state entities seem to be leaning more heavily on debt as they slow the pace of local share sales. The Public Investment Fund, for instance, just completed its first Eurobond sale, drawing strong investor demand with orders totaling over 6.9 billion euros. This growing reliance on global debt markets comes amid lower oil prices, rising fiscal pressures, and cooling sentiment on the local bourse. For now, we're joined by Zina Rizek, co-head of fixed income at Amwal Capital Partners. Before we talk about funding and the scale of the borrowing that Saudi Arabia has undertaken, how much of a surprise was it to anyone who looks at the Saudi Arabian market that their budget deficit number came so much wider than they had projected at the beginning of the year?
Good morning, Romano. Indeed, usually the budget that Saudi used to put used to be pretty much respected, and the issuance used to be pretty much respected. This year, it did come as a surprise that the budget was significantly bigger. But then when you look at the breakdown of that, lower oil prices, lower revenues, and increased spending would obviously lead to such. I mean, the fiscal break, even depending on how you look at it and what you include in it, is around $98 per barrel. So we're massively lower than that.
Yeah. So one of the reports that came out last week, my colleague wrote about this, is the fact that they are leaning less on local listings. So state-owned companies no longer really going down the path of IPOs. And what Saudi Inc. has been doing is issuing and relying on a lot more debt at a sovereign level or via some of these other entities as well, such as PIF.
Absolutely.
How much of an impact is that having on their borrowing costs?
The borrowing cost has been wider than other GCC countries and even lower rated peers. So we've had this year close to $40 billion of issuance from Saudi between sovereigns, PIF and Aramco. But yes, spreads are wider than, say, Abu Dhabi and Qatar, 30 to 40 basis points wider. And if you compare even Saudi to Indonesia, which is like significantly lower rating, Saudi trade few basis points inside of Indonesia. So this is obviously reflected from the amount of issuing and from the wider spread and the expected upcoming supply. But I mean, it remains a very strong fundamental country. Reserves are still very strong. And I think if you were to compare between, say, Indo and Saudi, you'd go for Saudi any day.
Right. So let me just ask you about your thoughts on the increased reliance on debt to raise the amount of funds that's necessary in the country. I mean, as a bonds investor, do you think that this is a significant development?
Not a massive development yet. I mean, I think that the shift will be between the two. We were expecting Saudi to come back to the market before year-end, but now that we saw the news that they're going through an international loan instead of coming back to the market. If the loan goes through, they won't come back. They will come back in Q1. So far, the massive change is not significant for spread to move wider. But I mean, obviously, if the IPO market closes massively, there will need to be a bigger shift towards that. And then, yes, I think that we will see a bigger impact on spreads.
Okay, so we've been talking about sovereign, quasi-sovereign debt issuance, but also there's been a massive pickup in some of the bank paper issuance as well. The banks are looking for funding. Does that create some sort of a cannibalization effect and that it will likely attract these same type of investors, or is it not something to be concerned about?
The cannibalization from AT1s is towards equities, not towards sovereigns. So the sovereign investors and the massive investors in the sovereign are usually bigger, and you have crossover, and you have the Asian investor and the American investor. When it comes to bank AT1s, issuers are smaller usually. So those usually retail investors would shift away from an equities into the AT1 market. But I wouldn't see it as impacting the sovereign spreads.
Okay. And Zina, let me just bring it back to the macro question, which is, with oil trading around $65, this is the status quo. Should oil prices drop further, does that again raise questions about the risk premium that is embedded in Saudi Arabia's borrowing costs right now?
Absolutely. So the way we look at it is not oil dropping, but how long oil would stay lower. But
right.
Yeah, absolutely. If oil drops and stays lower, there will need to be a revision, be it from moving plans, like moving projects or delaying some projects if possible, and diversifying funding needs, because if oil drops and the cuts, I mean, they have revised spending plans for next year. If this consolidates, oil stays high, we're fine. If it drops, then I think more serious revision has to be made.
Okay. And while I have you, the big news of the day, the Gaza peace deal. President Trump is heading to Sharm el-Sheikh later today. We're just speaking to Egyptian minister. Do you expect Egypt to gain some positivity, some dividends on the back of what could be more regional security?
I mean, lower geopolitical risk is obviously positive and seen positively. From a market's perspective, from a fixed income perspective, even in the midst of a war, the impact was limited. So I don't think from a credit perspective, maybe from an FDI perspective, it might be more positive. From a credits market, there has been some sort of complacency when it comes to this matter.
Okay. Zena, thank you so much. That was Zena Rizek, co-head of fixed income at Amwal Capital Partners. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, South African officials investigating how local technology ended up in Russian drones used to attack Ukraine. More on that story next. This is Bloomberg.
Okay, ready? David, what initially sparked your interest in this topic of longevity? 15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. South African authorities are investigating how a locally made component ended up in Russian drones used to attack Ukraine. The equipment in question is a laser rangefinder, which was not designed for military use. For more, we're now joined by Bloomberg's Anthony Squazan. Tell us about this story. Quite fascinating. What do we know?
Well, basically, the laser rangefinder is a piece of equipment that's used to detonate the drone when it approaches its target. So it's pretty crucial and pretty dangerous. So the South African government wasn't aware that this was happening, and they'll now be sending inspectors to the factory where it's made and basically assess it from there. Because by law, the company should really have had a permit, and South Africa, by law, does not export arms to countries at war, which Russia obviously is. So it's a little bit problematic.
And could this discovery perhaps reignite some of the tensions between South Africa and the U.S.?
I think it's more uncomfortable in reigniting tensions. Obviously, it's not a good development for South Africa. It's quite embarrassing. South Africa has presented itself as a neutral party between the two countries, Ukraine and Russia. But obviously, supply chains are quite hard to manage, and it wasn't sold directly to Russia. It appears to have been sold by a reseller, and somebody appears to have taken it to Russia and used it in these drones. I think there will be an attempt to tighten up the supply chain and to look at the company in question, but I'm not sure it's going to be a huge diplomatic spat.
Okay. Bloomberg's Anthony Squazan, thank you so much for bringing us that story, very specific to South Africa and military equipment. But let us just recap the top story of the day, which is that the hostages that have been held in captivity for the past 2 years are set to be released this morning. Earlier, about an hour ago, Hamas published the names of the 20 hostages who are set to be released. Right now, you are looking at live images from Hostage Square in Tel Aviv. The families, members of the public, waiting with anticipation, with bated breath to see when the first releases are going to take place. Those are images from Khan Yunis in the Gaza Strip. And of course, in exchange for the release of the hostages, there will be a release of up to what we're seeing now is the latest numbers, 1,700 Palestinian prisoners and detainees. This was a very contentious part of the process of negotiations that took place last week because it was necessary for Israel to sign off on some of the names of the prisoners that were going to be released. Some were serving life sentences and were contentious, including the names of Mohammed Barghouti, who does not seem like is going to be released in this round. So the IDF have said now that Red Cross are on their way to the meeting point to receive the first batch of hostages. That is the latest news that we have. The Israeli Army radio are saying that the first 6 hostages will be released in Gaza City. There's a helicopter approaching as we speak, so unclear yet exactly who is on that helicopter, but we do know in a very short while the first round of hostages, the first set of hostages are going to be released. And this is a hugely momentous day. In a couple of hours' time, at around 10 a.m. local, so in about 1 hour's time, President Trump is due to land in Israel as well. He has been invited to deliver a speech at the Knesset. After that happens, he will be making his way on to Sharm el-Sheikh in Egypt for that Gaza peace signing ceremony, with many key Arab leaders and European leaders there in attendance as well. But you're looking at live images now with the short release, upcoming release of the first round of hostages since October 7. That's it for Horizons Middle East. I'm Jumana Versace in Dubai.
Asia's not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, well, you know, Trump's been, sort of saying, well, we shouldn't be focused on this, but yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I have been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. President Trump declares the war is over as he heads to the Middle East to greet Israeli hostages being handed over after 2 years of bloodshed. S&P futures rebound after the US president signals openness to a trade deal with China. Shares slump in Asia, though, as they catch up with the renewed tariff uncertainty. Plus, a new cabinet for France, as President Macron hopes it will be second time lucky for reappointed Prime Minister Sébastien Lecornu. Good morning. So as we keep a close eye, of course, on the events unfolding in Israel and Gaza, the market squarely focused on readjusting to the trade tensions between the US and China. As we said in the headline, President Trump and the Vice President suggesting that there is a window of opportunity to continue negotiations between the two sides after, of course, that significant sell-off that you saw by the close on Friday. Today, the picture is turning around on the comments from the US President. European futures then, after closing lower by more than 1% by the end of play on Friday, currently pointing up by 0.3%. The FTSE 100, though, currently down 3 points. S&P immies then dropping 2.7%. US markets on Friday on the S&P 500 today pointing higher by 1.3%. Nasdaq 100 futures looking to add 423 points. Quite a turnaround as well after significant selling for the tech-heavy index on Friday, currently pointing higher by 1.7%. So it's risk on across these equity markets after the significant losses on Friday. Of course, Asia is playing that catch-up. We'll get to that shortly. Brent crude up 1.3%. Oil prices higher again on the trade story. $63 a barrel on Brent. Gold, fresh record highs for the yellow metal, up 1% in the session today. Geopolitics tying in to gold. Euro-dollar at 116, the single currency largely unchanged. And Bitcoin plummeting on Friday. 114 right now, down 0.3%. The crypto space radically ruptured on the back of some of the adjustments on Friday. Let's flip the board and have a look at the Asia session then. You have had that sell-off continue in Asia on the catch-up, of course, given the comments on Friday from President Trump threatening 100% tariffs. He has moderated that to some extent over the weekend, but the benchmark in Asia is currently down 1.4%. The CSI 300, mainland China, falling 2%, and Hong Kong, you're seeing a lot of selling there as well, down 3.5% on the HSI. Is this a buying opportunity for Chinese tech? Or is this just the start of things to come? Has there been complacency in these markets? The Japanese yen at 151, currently a little softer, down 0.5%. Again, further yen weakness. Japan, a national holiday there today. Let's cross over right now, get the latest in terms of the geopolitical story of the moment. And of course, this is Hamas expected to start releasing Israeli hostages this morning, at any moment, in fact, marking the moment of truth for President Trump's fragile peace deal. Trump is on his way to the Middle East to herald the agreement ending the 2-year Israel-Hamas war. He's scheduled to address Israel's Knesset and greet hostages later today.
The war is over, okay? You understand that? I think people are a lot of reasons why it's going to hold. But I think people are tired of it. It's been centuries, okay? Not just recent, it's been centuries. I think people are tired of it. Yeah, the ceasefire is going to hold.
Well, later, world leaders will be at a signing ceremony for the Gaza peace deal in Sharm el-Sheikh in Egypt, of course. Let's go live now to Bloomberg's Dan Williams, though, who is in Jerusalem for us. Dan, what is the latest on the hostages?
Good morning, Tom. Yes, a very consequential day for the Middle East is unfolding fast. Just about an hour before President Trump is due to land in Israel to be feted as a hero among Israelis for managing to bring about a peace deal, a deal ending that 2-year war. An hour before then, we're now looking at the coming minutes, the first of the hostages due to be released in the first stage of that peace plan. That's happening right now within the Gaza Strip. Vehicles from the Red Cross heading out to meet Hamas to receive the first of those hostages. They will then be delivered back to Israel. And I think all sides are hoping that this hostage release will be carried out swiftly without hold-up so that a reciprocal release by Israel of almost 2,000 jailed Palestinians can also be carried out, thereby putting a line under the first stage of the Trump plan and opening up a path for continued implementation, it is hoped, for a plan that would bring about peace. Obviously, much has to be hammered out, and that is the reason for the president's travel from here later today to Sharm el-Sheikh in Egypt to meet statesmen from the region, from Europe and elsewhere, to try and bring in as many stakeholders in on that plan and make sure it's done.
Dan, to your point, on the summit then in Egypt, as you witness this historic moment in terms of the relationships, of course, in the region, and historic moment, of course, for the people of Israel as well, what is expected to come out of the summit, and to what extent is that likely to build the foundations for phase 2, for moving this beyond hostage releases and prisoner releases and a ceasefire to something more consequential?
Well, I don't think we can expect any heavy lifting in terms of negotiations, in terms of agreements, Keep in mind that the US president is on a very, very tight schedule. He'll be in Israel for only a few hours. The same applies to his stay in Egypt. Now, I don't want to say this would be a photo op, but I think this is an opportunity for him to publicly bring aboard a number of stakeholders, people, leaders, countries, publicly committing to see through this plan, make sure it's not forgotten. Because what remains of the plan to be implemented, this is a 20-point plan. What we're seeing today is really the first 2-3 points being implemented. And the heavy lifting on the plan is due in the immediate and ensuing future. It would require Hamas to disarm. Hamas would require persuading to disarm. It would also require some very inventive and constructive plans for the rehabilitation of the Gaza Strip, which has been extensively devastated by this war. That requires money, that requires commitment. The president is very keen on loyalty. He's very keen on people meeting their commitments to him. And I think he plans to hold whichever leaders turn up and agree with him at this summit, to hold them to what they say, especially what they say in public.
OK, Bloomberg's Dan Williams on the ground for us in Jerusalem on this momentous day, of course, for the region. Channel 12 reporting that 7 hostages have been handed over to the Red Crescent. So that is the latest in terms of the movements around the hostages. Channel 12 saying 7 hostages were handed over to the Red Crescent. It is understood that Hamas has been holding 20 hostages, live hostages. 7 apparently handed over to the Red Crescent, again, according to reporting from Channel 12. We keep across this story for you, of course, throughout the morning. Now, President Trump's administration, meanwhile, has signalled openness to a deal with China in a bid to quell fresh trade tensions after Friday's sharp stock sell-off. Speaking aboard Air Force One, President Trump called Chinese President Xi Jinping a smart man and a great leader.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set. I know what happened. I really understand what happened. And I'm not even saying he's wrong. But then we met him with something much tougher than what he did to us. Again, because of the tariffs, it's much tougher.
Let's bring in Bloomberg's Balash Penstein in Hong Kong. So we've seen this back and forth, and clearly the market reaction has been pronounced, Balash. Are the comments from President Trump seen as a way to address pressure on the equity markets, or is this posturing ahead of a potential meeting with his Chinese counterpart?
Well, there was certainly a sense of reassurance for the markets, and we see European and U.S. assets coming back after that very significant sell-off that we saw on Friday, when markets were jolted out of their complacency over trade. But what else these comments do is they open a bit of room for negotiations and offer some off-ramps for what is the most important trade relationship in the world. But what happened over the weekend and at the end of last week is a reminder to markets and to everybody that we might be in a trade truce between the U.S. and China. We certainly seem to be quite far from a trade peace, and both sides are quite willing to go and press the levers that they have available and go, instead of very kind of incremental changes and negotiations, they are going for really major steps to remind each other of the tools that they have at their disposal. And so that really puts the focus on the upcoming meeting between Presidents Trump and Xi at the end of October coming up.
Balash, talk to us about the relative resilience of the Chinese economy, if that's how we describe it, to these ramped-up tensions then between the two sides. We had some export numbers suggesting that there is still strength there for the manufacturing engine of China. Does the pressure coming down from the US side, how vulnerable is the Chinese economy at this point, or is there that resilience?
Well, I don't think the Chinese economy is in a fantastic shape, but today's numbers do show that there is a lot of muscle still left in the Chinese export machine, in the engine of the Chinese economy. And even as their exports to the U.S. have come down quite significantly, we can see that they are able to find other markets for Chinese products, which does give a little bit more confidence to the Chinese side when it comes to these negotiations. And let's not forget, when they approach these trade talks, they are taking a very long-term view of it, and they're very confident in their ability to withstand what they see as temporary pain. They certainly think that they are more capable of doing that than the U.S. ever is. And perhaps what we saw as a reaction to the market sell-off on Friday, that gives them some more evidence that that is indeed the case.
Paula Spence, thank you very much indeed on the update there in terms of the evolution of US-China trade tensions, of course, that have adjusted over the last 48 hours or so. US futures right now rebounding after gains, of course, for the month were wiped out in Friday's sharp sell-off. It was really pronounced. NASDAQ 100 falling more than 3%. Let's bring in Bloomberg's Valerie Teitel right now for the latest. Val, was it an overreaction from the markets on Friday?
Was it all about dream on Friday? We closed Friday at the lows. As you mentioned, NASDAQ futures plummeting over 3.5% at the end of Friday's session, but we are coming back up 1.7% in today's trade. I think the question on the market's mind, though, Tom, is this lasting damage to the enthusiasm around the AI trade, around the tech trade in the U.S.? This stark reminder on Friday that trade tensions between the U.S. and China still could escalate meaningfully. The other thing to remember is on markets' minds is whether this Trump-Xi meeting is still in place at the end of the month. If that is still in place, Tom, the market might view all of this as jockeying for leverage ahead of that decision instead of a lasting turn in relations headed towards maybe a potential breakup between the U.S. and China relationship. So that's what markets are thinking after spending most of the weekend in panic. We're happy to see green on the screen for NASDAQ 100 futures. I do want to talk about the Treasury market, though. It was a very interesting price action on Friday, a very sharp rally on Friday in this risk-off sentiment. Now, this is key, Tom, because the last time around on Liberation Day, Treasuries declined in price around this threats around tariffs. So perhaps this is a different way of the market viewing. Perhaps another round of tariffs would be growth negative instead of inflation positive. So that is something to keep in mind. I have prices behind me. The U.S. Treasury market is shut today for a U.S. holiday. But as you can see, a very sharp rally on Friday. We're now erasing some of that in today's session. I do want to mention what's going on in Asia, because as well as we have the NASDAQ futures rebounding, we are at session lows when it comes to a lot of these Asian indices. HS Tech down to over 3.5%. And that is good to keep in mind that perhaps sentiment when it comes to Asian equities is not as positive as it is in the U.S. But in some way, this is just catching up to the futures move on Friday's session.
OK, Bloomberg's Valerie Teitel, thank you very much indeed. Breaking down the market reaction, of course, to the latest in terms of the relationships between Beijing and Washington. Here's what else to think about through this week then. On Tuesday, we're going to hear from Fed Chair Jay Powell. Of course, we've had a lack of data as a result of the ongoing government shutdown. So scrutiny, of course, as always, on what the Fed Chair will have to say. That's on Tuesday. We'll bring that for you, of course, all the context and reporting around that. Also on Tuesday, earnings season kicking off with the banks. JP Morgan, Goldman Sachs and Citi all bringing out their latest numbers, of course, for the quarter. How well have these banks performed? They've had some very strong quarters recently. Will that continue? And on Wednesday, from banks to the chip-making space, the equipment maker ASML, of course, listed in the Netherlands and key to the supply and production of cutting-edge chips. That company reporting as well. So that's a big one for Europe that we will preview for you and bring you all the latest on. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go, DAYB Go on the terminal, and the focus on US-China tensions and the fact that the US is signalling the door is still open for negotiations. Coming up, the French president reappoints Sébastien Lecornu as Prime Minister. Can he get a budget passed by year end? That is a question we have asked a number of times this year. We'll explore that next. This is Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Happy Monday. President Emmanuel Macron has announced a new cabinet in a bid to head off France's growing political crisis. And after being reappointed Prime Minister, Sébastien Lecornu is racing now to form a government and pass a budget. Let's get more then with Bloomberg's Caroline Connard in Paris. Caroline, Lecornu then reappointed, a new cabinet as well has been named. What is the makeup of that cabinet? How much has actually changed?
I don't know if you know the movie Groundhog Day, but it feels like this in France at the moment, kind of living the same day again and again. So after he resigned last Monday, Lecornu was appointed again on Friday night around 10 p.m. French time, saying he accepted the mission as of duty, that his only mission would be to pass a budget by the end of the year. And clearly he had been discussing with all the opposition parties over the past few days. So Macron thought that his job wasn't done quite yet and that he would be the best positioned. A few new faces in this government from civil society, such as the prefect of police or the former head of the railway company SNCF. Roland Lescure remains as finance minister. He was named last week and said on Friday in Luxembourg he was optimistic about passing a new budget. And Jean-Noël Barrot remains as foreign minister. So a form of stability for some of the big jobs there. But all the heavyweights are kind of out of this government because Lecornu said he wanted to have some cabinet members disconnected from presidential ambitions. So no more Bruno Retailleau there, who slammed the door last week. No more Bruno Le Maire there, who angered the Republicans. No more Elisabeth Borne either, who suggested a few days ago and opened the Pandora box by suggesting that she was ready to suspend the pension reform. Of course, the task is still huge. There will be a first cabinet meeting tomorrow, Tuesday, because President Macron is in Egypt, of course, today. First reaction about this new cabinet last night from Olivier Faure, the first secretary of the Socialist Party. No comment.
Caroline, what makes President Macron and Lecornu think that they can actually succeed this time around then?
We'll see as soon as this week, because both the far right and the far left have said that they would propose the first motions of no confidence to be debated as soon as this week. But since the surprise resignation last Monday, there seems to be a slight change of tone, especially among the socialists, saying they will not necessarily topple this new government, at least if Lecornu is ready to put the suspension of the pension reform back on the table to be debated in Parliament. The Republicans have left the boat. In fact, they said that all the Republican ministers who kept their job in this Lecornu II government will be excluded from the party. But at the same time, they also said they will give their tacit support
to this new Le Cornu 2 government. Of course, time is running out because the budget needs to be presented as soon as this week in order to be debated for 70 days in Parliament. So the mountain is still very high, the Parliament is still very fragmented, and it feels again that this is President Macron's last chance before calling snap elections.
OK, Bloomberg's Caroline Gonner in Paris on the last chance for President Macron, potentially. So we look to developments there. Caroline, thank you. Meanwhile, we have continuing developments, of course, on the ground in Israel. Israel's Channel 12 saying the hostages have now been handed over to the IDF. The hostages have been handed over to the IDF. We had reports from Channel 12 a couple of minutes ago saying 7 hostages were handed over to the Red Crescent. Those 7 hostages now, it seems, according to Channel 12, have been handed over to the IDF. The next steps we understand then is that the IDF will be, of course, taking those hostages to Ra'im in Israel, where they're expected to meet up with family members after being held in captivity, of course, for 2 years. Around 20 live hostages have been held, continue to be held by Hamas. 7 now, it seems, with the IDF. We continue, of course, to monitor this for you. Hamas saying they will hand over another group at 10 a.m. local time. So that's in around an hour and a half's time. That is according to Al Jazeera. We'll keep across this story for you. Live pictures there from Ra'im in Israel. Coming up, the world's progress on clean energy will be the key focus of this week's BNEF summit in London. We discuss the future of renewables. That is next. This is Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Now, the Bloomberg NEF summit kicks off in London tomorrow, connecting energy leaders from business to investment. Attendees will discuss how technological change and how and when a cleaner, more competitive future might come into view. Joining me now is Bloomberg NEF's head of analysis, Albert Chung. Albert, thank you for joining us bright and early this morning and set up what to expect from this summit. It's an annual summit. What are we going to be watching for? What are the key themes or the key topics?
Thanks so much for having me. Well, of course, this year we're in a moment where the energy transition is facing some challenges, particularly in the US with the Trump administration. So here in Europe, in London, the focus is really on how does the EU and the UK continue to scale up clean energy, continue to pursue its very ambitious decarbonisation goals, but in a way that aligns with its goals around energy security, but also doesn't raise costs for the consumer. I think it's really important that the industry continues to work on domestic consensus around low carbon and make sure it doesn't lead to higher costs and helps to preserve Europe's competitiveness.
So given some of those challenges, and particularly the radical political shift that we've seen in the US, how much investor appetite is there for this space at this point?
So our research shows that global renewable energy investment is running at an all-time high globally. So around $400 billion was committed to new renewable energy projects in the first half of this year. That's more than any other half-year record that we've seen. Interestingly for me, when I look at the data, Europe is actually driving a lot of that growth. So we're seeing this uptick in offshore wind financings in Europe. Asia is up as well. But the US was down 36% year on year in the first half of this year. So you're seeing the impact of that policy uncertainty, all the tariff changes and all of that playing through.
So that's a major divergence between what's happening in the US versus Europe and the investment flows. What is that doing in terms of the energy transition then, and how that's changing that story?
Well, what we're hearing, at least anecdotally, is that it's making Europe, again, a more attractive place to invest. So a few years ago, there was this narrative that the US had the most favorable regime for clean energy investment globally, the Inflation Reduction Act and everything. Everybody was afraid of capital being sucked out of Europe and into the US. And now you're starting to see anecdotally maybe that some of that capital is going to come back to Europe because Europe has a stable policy, regulatory regimes around clean energy investment.
I know this is an area you look at very closely as well, which is grid stability and to what extent the grid is match fit for this new era of renewable energy. Where do we stand on that question?
The answer is that there's still work to do. I think there's a lot of column inches being written about the Iberian blackout a few months ago, and the answer is it's still not totally clear what caused that. What we do know is that grid operators need to have the tools and technologies, the processes, the protocols, and all of those things in place to handle a high renewables penetration in future. That is work in progress that the industry needs to work on. And at the same time, Europe needs to reduce its exposure to international gas markets, which is really its key energy security vulnerability.
Albert, fantastic setup for the event. Good luck to you and the team. Thank you very much indeed. Bloomberg NEF's Head of Analysis, Albert Chung. The BNF Summit takes place tomorrow and Wednesday, with the whole event being streamed live. Scan the QR code to watch or head to LiveGo on the terminal. There's plenty more coming up. We'll get back, of course, to events on the ground in Israel. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. President Trump declares the war is over as he heads to the Middle East to greet Israeli hostages being handed over after 2 years of bloodshed. S&P futures rebound after the US president signals openness to a trade deal with China. Shares slump in Asia, though, as they catch up with the renewed tariff uncertainty. Plus, a new cabinet for France as President Macron hopes it will be second time lucky for reappointed Prime Minister Sébastien Lecornu. So as we keep a firm eye, of course, and a close eye on what's happening in Israel and Gaza, we bring you the market check, where equity markets are turning around on the front foot then after the heavy losses that came through on Friday with that threat from President Trump in terms of 100% tariffs on China. Since then, as we've been reporting, he has signalled that there is still a window open to negotiation with his partners in Beijing. European futures then on the front foot, up 0.4% after closing lower more than 1% on Friday. FTSE 100 futures now in the green as well, looking to add 6 points. S&P E-minis pointing higher by 1.3% after tumbling 2.7% on Friday. Nasdaq 100 futures pointed to gains of 433 points after plummeting around 3.5% by the close on Friday. Let's flip the board and look cross-asset then. In terms of the focus, Treasury's not trading yet. Japan is closed for a holiday, but Brent is currently up 1.4%. So oil higher on the comments from President Trump around a potential negotiation with China going forward. Gold remains near record highs, 4,072 per troy ounce, up 1.4% in the session today. Euro-dollar at 116. And Bitcoin, which tumbled on Friday, along with other crypto names, and through Saturday as well, currently a little softer by 0.2% at close to 115,000 per coin. Let's return to our top story, though, because Hamas is expected to hand over 20 hostages after publishing their names. We know that 7 of those hostages, according to Channel 12 in Israel, are now with the IDF. President Trump's top envoy, Steve Witkoff, and his son-in-law, Jared Kushner, negotiated the hostage release, which includes a deal to hand over almost 2,000 Palestinian prisoners.
To the Arab leaders and partners of ours who meant so much in this negotiation, including President Erdogan from Turkey, including Sheikh Mohammed from Qatar, including the Emir, including President Sisi, all of whom played a critical and an integral role in this peace deal. I say thank you.
Well, President Trump will meet with many of those leaders later today at a summit in Sharm el-Sheikh, Egypt. Bloomberg's Horizons anchor Jumana Pasecci joins me now. Jumana, just start with what the latest is on the ground in Israel, then maybe look forward to that summit in Egypt then, where some key global leaders will be meeting alongside, of course, President Trump himself.
Well, it's difficult to overstate the significance of this moment, Tom. Thousands of people gathering, waiting for the release of those hostages. About an hour ago, Hamas published the list of 20 names that are going to be released this morning. The latest reporting suggesting that 7 of them have now been handed over to the Red Crescent, the Israeli army, saying that the phased process of retrieving the hostages will begin shortly. And of course, this is a moment that the region, that the families of those hostages, that Israelis and Palestinians have been waiting for 2 years now, and really perhaps does cap an end to what has been a devastating war. In the Palestinian enclave of the Gaza Strip as well, in Khan Yunis, people also mobilizing there. They're waiting to hear the list of names of the Palestinian detainees and prisoners that are also set to be released. And remember, this was one of the thornier part of the discussions last week. There are a couple of names, some of those Palestinian prisoners serving life sentences in Israeli prisons. And there was a lot of debate as to whether some of them, including the likes of Mohammed Barghouti, would actually be released. It seems as though he's not going to be on that list this morning. And so on both sides, a real feeling that perhaps this marks an end to the devastation, but still very, very early stage, the very early innings of what happens next in terms of whether this short-term ceasefire can actually lead to a permanent ceasefire and even the possibility of broader peace in the region. Now, President Trump himself is expected to land in Israel shortly, in about an hour's time, an hour and a half. He will then be addressing the Knesset and meeting with some of the families of the hostages, later making his way onto Sharm el-Sheikh in Egypt summit, which of course was the meeting point for so many of the negotiations that took place last week that led to this breakthrough. And he will be there alongside some of the senior leaders from the region, European leaders as well, the likes of UK Prime Minister President Macron, alongside many of those regional leaders that Steve Witkoff actually thanked during that speech in Israel over the course of the weekend. Now, President Trump has called this the beginning of peace, the end of war. But again, many thorny subjects still have to be discussed, including questions about the extent of Hamas disarmament, what future governance of Gaza looks like, what exactly that apolitical Palestinian technocrat government could look like, and the oversight of it, in addition to the extent of IDF withdrawal. So still many unanswered questions. But for now, Tom, really a day of relief and celebration in this part of the world.
OK, Bloomberg's Germana Pesecci, thank you very much indeed for that important update as we continue, of course, to get additional lines on that. And as Germana was saying, the report suggesting that 7 hostages are now with the IDF and will be, of course, reunited with their families, we expect soon. For more on this, let's bring in Gershon Baskin, co-founder and co-director of the Alliance for Two States. Gershon is a commentator, but also someone who has had hands-on experience now and into the past in terms of mediation, in terms of conversations, in terms of trying to align and create cooperation between two sides. Gershon, thank you for your time. Just start with this moment for us, the reaction to what we're seeing right now in Israel.
There's jubilation, of course. There are more than 100,000 people in Hostage Square in Tel Aviv right now. There are people all around the country on the roads, around the Gaza Strip area with Israeli flags, waiting to greet the hostages as they cross the border back into Israel. The hostages will, of course, meet their families and then fly by helicopter to hospital. We don't know what their physical and mental condition is. That will be known later in the day. It's also a day of a lot of tension because we're also waiting for 28 deceased hostages to be returned by Hamas today and in the coming days as part of the agreement. And we all expect that to happen. So there's a great deal of joy, and there'll be tears of joy, but there's also a great deal of sorrow and a lot of tears of sorrow at the same time.
Yes, the human story. It's hard to overstate the human impact. And as you say, it's uncertain what condition these hostages will be returned in. And of course, the remains of the deceased as well. Gershon, as you look, someone who's thought very deeply about the future and particularly the prospects of a two-state solution, what is your level of confidence that this will lead to a more meaningful and lasting peace between the two sides?
It's very difficult for the common Israeli or Palestinian to imagine that peace could emerge from this. I look at it very coherently and logically and understand that the horrendous trauma that we've experienced over the last 2 years has to lead to an epiphany in both societies, and understanding that the horrific things that we've experienced over the last 2 years have to lead us to understand that this must be the last Israeli-Palestinian war. We have to wake up to a new age and understand that even after this war, there are 7 million Israeli Jews and 7 million Palestinians living on the land between the Jordan River and the Mediterranean Sea. And the only solution to this conflict remains the two-state solution. That's very difficult for most Israelis and Palestinians to say this morning, but I believe that we will have an awakening because we cannot keep doing this. And we have the help of the international community, which has bought in more than ever before to the two-state solution. And I think that both the Israeli and the Palestinian publics will understand very quickly the consequences of what we have done to each other over the last 2 years, whether it be Palestinians waking up in the morning and looking around them and discovering that Gaza doesn't exist anymore. 2 million people are homeless, no infrastructure, everything's been destroyed. And Israelis waking up to the reality that we have lost too many of our loved ones. We have to stop sending our soldiers to the front to be killed and to come back in boxes. This just cannot go on. I think that the full enlistment of President Trump is here a change in the whole possibility of moving forward with the peace process. We have our own work to do in Israel and Palestine. We must change our leaders, both in Israel and in Palestine, and bring a new generation of leaders who have the ability to look forward to a new day and to understand that we have to make peace. We share this homeland. It belongs to all of us. All of us will remain here, and we have to find a way of doing that.
Gershon, as you talk about new leadership in both Israel and Palestine, what does new leadership in Gaza mean? Who is best placed to take over the running of that territory?
I've been in communication with the last 2 weeks, together with a Palestinian colleague, with a number of civil society and private sector leaders in Gaza who are willing to stand up and take the job. They've written 2 letters to President to President Trump, which I delivered it through Mr. Witkoff. There are other people in Gaza who have a record of public service who are not connected to Hamas and not directly connected to the Palestinian Authority. In order for whatever government is placed in Gaza, it needs to have some official linkage to the Palestinian Authority in Ramallah, because that is the address. President Abbas has now been invited to the summit that will take place later today in Cairo, and until a few hours ago he hadn't been invited. So it is a good thing that he will be there, because there needs to be an official Palestinian address. Abbas is committed to conduct national elections in Palestine within a year. That means elections in the West Bank, Gaza, and in East Jerusalem. And it'll be the first time since 2006 that the Palestinians will have the ability to decide who they want to rule them, given that President Abbas has also said that the election law in Palestine will stipulate that only parties that support peace with Israel and two-state solution will be allowed to participate. So there's no chance that a party like Hamas could rise through elections and be selected by the Palestinian people, who no longer want to be ruled by an organization like Hamas.
And when it comes to Israel, Gershon, and the cabinet of the Israeli Prime Minister Netanyahu, including Smotrich and Ben-Gvir, who some characterize as having extreme views, certainly very right-wing and hard-right views, to what extent could they be an impediment to progress?
Well, I think that we are scheduled for elections in November 26. I'm not sure that the government will last that long. This deal was voted against by Smotrich and Ben-Gvir and members of their party in the government. They are not happy with the government. We'll see what develops. But I think that the spike in popularity that Netanyahu is winning now because of the deal will drop quickly, swiftly, because now that the war is over, the Israeli public will demand a commission of inquiry to determine why Israel failed to protect itself on October 7th. How is it that Netanyahu and his government financially supported Hamas for many years, viewed Hamas as an asset and the Palestinian Authority as a liability? All the bad things that the government of Israel has done, and Netanyahu personally responsible for preventing any kind of peace with the Palestinians since 2009. This will come to play when this war is over, when the hostages are home, when Israeli society begins to heal. And I think we will be going to early elections sometime early in 26, but we'll see.
Gershon Baskin, really, really valuable insights, of course, on a momentous day for Israel and the region, co-founder and co-director of the Alliance for Two States. Thank you. Coming up, the US-China trade war reignites. We're going to discuss what it means then for the markets with Anika Gupta from Wisdom Tree. Futures, of course, pointing higher in the session today. Stay with us. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties. We have the Oman Sovereign Wealth Fund. We have others who are willing and ready.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. US equity index futures then higher today after President Donald Trump signalled an openness to a deal with China, improving sentiment after, of course, markets were rattled, to say the least, by a sharp escalation in trade tensions on Friday. And you saw that in terms of the rapid moves lower for US equities by the close. Joining me now is Bloomberg Markets correspondent Nora Melinda. Nora, where do equity markets stand from here then? Was it an overreaction on Friday? How much confidence is there that we're going to see a turnaround now, given the moderated language from President Trump and his team over the weekend?
And that's what Wall Street is currently trying to figure out here. I mean, if you think about what we saw on Friday, what we're seeing today is a rebound, definitely a different picture than what we saw on Friday. And of course, this underscores this idea of the taco trade, which essentially means Trump always chickens out here. So you start to see him laying out some trade negotiations going back and forth. You're going to see headlines flying, and then you see him pairing some of the statements that he makes, and then you start to see a rebound here in the market. So that's what a lot of my sources have been telling me could be potentially playing out here, and a lot of them saying that this is a story that a lot of the market has seen before, so not to fret here.
OK, Nora, thank you very much indeed. Nora Melinda, with the view there in terms of the adjustments around the markets and maybe the taco trade being back. Let's get another market view right now and bring in Anika Gupta, WisdomTree's Director of Macroeconomic Research. Anika, good morning. Is this a buy the dip then? Do you agree? Is this an opportunity maybe to add exposure to US equities given the sharp sell-off that we saw on Friday?
Well, definitely. I think, we have seen a very sharp sell-off over prior to coming into the weekend, but it seems like the new economic data that we've got from China this morning with very strong exports, they've been able to offset some of that weakness from lower exports to the US with much higher exports to the EU as well as the Southeastern Bloc. So that's, that gives a very important signaling message. China has the upper hand when it comes to trade, from the viewpoint of their dominance on the supply chain, on the supply of rare earth metals. And then when it comes to exports, despite all the tariff headlines, despite all the tariff uncertainty, they're thinking over the long term, they've managed to divert a lot of that risk out of the US into and obtain much higher export volumes from other parts of the world. So definitely, I think having that strategic allocation to your underlying portfolio where, strategic metals and rare earth miners really come to dominance is a particular part of the portfolio that you should pay a bit more attention to.
I just wonder if, given that given China thinks it has the upper hand, and you point to the trade data that came out today, whether in fact that's a risk for the markets, because it could lead China to take a harder line than maybe they can afford to do in terms of negotiations with the US. Did at least Friday show that there's some complacency in the markets when it comes to expectations about this trading relationship?
Absolutely. I mean, equity markets are trading at an all-time high, so they are susceptible and vulnerable to these sell-offs. So a headline that comes in where, President Trump is threatening to impose a 100% tariff, obviously in retaliation to China's restrictions on rare earth metals, does call for some caution in the markets. But the point is that as long as China holds this upper hand in these trade negotiations, you have that taco trade evolving because Trump eventually has to give in because he cannot actually place such high punitive tariffs on China, given the fact that they control really around 80% of supply of rare earth metals. So I think that's really important to keep in mind. And I think going forward, clearly the emphasis is now going to be the third quarter earnings results will be front and center. And I think that's where investors' concerns are going to be predominantly focused on.
Where is your lens going to be when it comes to earnings season then, Anika? What are you going to be scrutinizing? What are you looking to see?
Well, it's really interesting because yet again, we've entered Q3 where expectations, consensus expectations are very low. If you reflect over the prior 3 quarters, Q2 earnings expectations for the S&P 500 came out at 11%. We're now starting with the expectations for Q3 earnings season at 6%. And quarter over quarter over the prior 3 quarters, we've seen the S&P 500 beat earnings consensus expectations by about 500 basis points. So if you try to break down where that 6% has come from and why it's so much lower than the 11% that we got in Q2, I think first and foremost, a lot of that is predicated on lower growth globally. And I think the second is predicated on the fact that the tech sector, which accounts for about 30% of the S&P 500, is now slated to have a reduction in overall earnings growth from 30% that we saw in Q2 to now 15%. And I think that's a bit too much of a reduction in consensus expectations. So I think where we would likely end up is near the upper single digits, so around 9, early 8 or early 9% for Q3 earnings.
Anika, we're just bringing a red head across the terminal right now. The IDF, of course, the forces of Israel, reporting that Red Cross has now 7 hostages have been handed to them. Red Cross says 7 hostages have handed to them. The IDF is reporting that. We've been reporting, of course, lines coming through from Channel 12 of Israel that those 7 hostages have been handed over to the Red Cross and then on to the IDF. The IDF saying the Red Cross says that 7 hostages have been handed to them. That is a red head across the terminal. We'll keep across, of course, the events unfolding in Israel as these hostages are returned. Anika, pivoting back to the market story and the view around earnings, clearly a challenge for European earnings has been the strength of the euro. To what extent does that continue to be a story in the current quarter?
Yeah, that is likely to weigh on earnings results. I think we started the year with very high expectations for Europe, and European equities have in lockstep performed very well. But now, obviously, we see that that tailwind for the U.S. with the weaker dollar being a very strong tailwind for U.S. earnings expectation now become a headwind for Europe with the stronger euro, and I think that is going to weigh on earnings expectation. But on the flip side, I think what investors are, taking cues from for the earnings season is higher dividend payouts and more buybacks. And we're seeing more and more of that happen across European corporates.
OK, Anika Gupta, Wisdom Tree's Director of Macroeconomic Research on the market implications of US-China trade tensions. What to think about when it comes to earnings season as well, with US banks reporting this week. Anika, thank you very much indeed. There's a lot more coming up. We're going to break down the moves around Bitcoin and silver and some of that export data out of China. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to Bloomberg Daybreak Europe. So the trade data out of China suggesting that Beijing may feel it has a little bit of negotiating leverage then, leading into any conversations between the two presidents. If indeed that meeting still happens, you could, of course, get negotiations between the two sides, potentially as early as this week. We know that President Trump has signalled that maybe he's open to restarting those conversations after, of course, threatening 100% tariffs on Friday. But the trade data came in, exports very strong, at the fastest pace of growth for exports in 6 months, and a significant drop in terms of exports to the US, down about 30%, but more than offset by exports to Europe and Southeast Asia. So that part of the economy is holding up for China, which may make them feel that they have some leverage in any of those conversations. Let's flip the board and have a look at silver, because you've seen a rally there as well, up 75% year-to-date. Part of that is down to a short squeeze in London. Bitcoin, a bit of a turnaround, but it dropped below 105,000 on Friday. You had about $19 billion wiped out in terms of crypto assets, in terms of the market drop on Friday, linked, of course, to President Trump's threats around China tariffs. Bit of a rebound today. Silver, of course, was in focus. Bitcoin, though, below 105,000, now down around 115,000. We keep across that asset for you as well. The open trade is up next. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates a complementary diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
go until the opening trade. US stocks, crypto and crude all bouncing this Monday morning. President Trump dialing down the trade war rhetoric. France's latest government races to secure a budget by the end of the week and, of course, survive a no-confidence vote. And within the next hour, President Trump is expected to land in Tel Aviv as hostages held by Hamas start to be released. Lizzie.
We can come to that, but futures on both sides of the Atlantic pointing higher this morning. We have no cash trading in treasuries. It's a holiday in Japan, also Columbus Day stateside. So we look to currencies. Euro dollar at 116, pretty steady right now. Bitcoin's been bouncing back. Remember on Friday it was below 105k. Still here we are a touch lower today on the session, but the countdown to the opening trade starts right now.
I think we're going to be fine with China. Look, I have a great relationship with President Xi. He's a very tough man. He's a very smart man. He's a great leader for their country. He's a great leader. And I have a great relationship with him. I think we'll get it set.
Monday morning, good morning. How was your weekend? Quite stressful, I would imagine, as you look at what happened Friday and think about the position impact that we could see Monday morning. But rest assured, Monday morning comes with a side of taco. That is on the menu. Trump delivering it there yesterday, along with some other statements that were released as well. And you can already start to see some of the market reaction that Lizzie just laid out for you. We are seeing a bounce back in risk assets that were battered at the back end of last week. Look at what's happening with crypto, oil, the dollar. Bonds are a different story. We'll come to those in just a moment. But just a little bit of a recap, I think, Lizzie, before we get going here. We were set up for some sort of a shock. Markets had got to some pretty extreme levels. Something was going to break at some point. We were going to get a moment when actually we did see maybe volatility rising. We got that Friday. The move in crypto was extraordinary, one of the biggest days we've ever seen. Stocks got battered. The AI trade got knocked pretty hard. Monday morning, here we go. We're kind of back. We're back on the front foot. Trump puts the taco trade back on the table, as you say. Risk is back on. The dip gets bought. But volatility, let's take a look at where VIX is this morning. It's still relatively elevated at 21.6. It's up by a third. So that trade is still going to have a ripple effect into other asset classes. Does it affect foreign exchange? Does it affect all kinds of other things? And also China still looks as if it's taking this with a pinch of salt at the moment.
Now, is that because China was already overheated?
Yep.
When we look at all of these different effects that we saw on Friday, which are the ones that last? Yes, crypto is bouncing back, as I say this morning.
Yep.
Do we see scarring when it comes to that? And does that infect other asset classes? A question that we will ask today. When it comes to why taco, look at the signals that we've had over the weekend. So we heard from J.D. Vance seeming to dial it back, seeming to suggest that it's all been a bit of diplomatic choreography.
Yep.
The suggestion that maybe it was all just a big misunderstanding when it came to export controls. The US kind of giving China the off-ramp here to be able to say, the new controls are not a full export ban. The applications that meet regulations will be approved. And then it seems that actually by November the 1st, maybe we don't see those 100% tariffs. And that's the relief that we're seeing in
So the betting odds were never that we would get those tariffs applied by the 1st, and the taco trade would kick in at some point. China will argue, you started it, we're just reciprocating.
Yes.
And you could argue that this is just the build-up to the APEC summit.
Yes.
But the threat is there that it isn't, and that threat has grown larger. So you've got to put that into your risk model, and you've got to therefore maybe take risk assets down a notch.
Now, we should take the polymarket odds with a pinch of salt. It's
Yep.
not based on a whole lot of money. We need to see whether that meeting actually happens. Is it just, as I say, a bit of choreography, whether in the run-up
Yep.
to it as a negotiating ploy? And the big question as well is how much leverage does China have? Who has the upper hand here? J.D. Vance making it very clear he thinks it's Washington. But you've pointed out this morning, we've had that export data this morning. China exports soaring, beating estimates.
Yeah.
Is that actually a sign that China can't rely on its domestic market and actually it has to turn elsewhere? It can't look at the US. The exports to the US fell 27%.
Yeah.
It's still holding
There's
up
going to be
otherwise.
some re-exports in there. There's going to be all kinds of other things going on within this data. So you need to also take that with a pinch of salt. I think my big takeaway from all of this, though, is that markets got stretched. Over the weekend, I think a lot of people would have looked at their positions and thought about what they would need to do in a higher volatility environment. So volatility has been very suppressed. A lot of trades have worked as a result of that. If volatility steps up, what doesn't work? Is it the carry trade? What happens with gold? What happens with the silver squeeze? We'll come on to that in a moment. There's lots of trades that work less well. The AI trade could be one of them as well. All of those, I think a lot of people would have spent the weekend thinking about what happens next. So I think that's always going to be in the back of their minds. If you're a portfolio manager sitting down this Monday morning, you're going to be having a sense of relief this morning. The oppositions haven't completely been blown up, but you're also going to be aware of the fact that this threat is there, and maybe it's more central in the kind of outcome of the distribution of outcomes, and you're going to be watching that all carefully.
Or maybe you're just rubbing your hands, looking at the dip bag. You've got Nasdaq futures up 1.8%. John Authers in his column this morning saying it's all been a bit naive in the market out there. So, you know, what's the actual mood?
Let's talk about France and what is happening there. Le Cornu, take two. We have his second government. We have a cabinet that has been formed.
What's the definition of insanity, Guy?
I don't know what it is in French.
So, Le Cornu back, as you say, a new cabinet, pretty much very similar to what we had seen before, but hoping for a different outcome. And so really putting the pressure on the other parties to come to some policy way through this. You've got to persuade the centre-right Republicans and the centre-left Socialists to abstain on a confidence motion. Le Pen says that she's going to put one through Parliament. The Socialist leader, Olivier Faure, saying that it's most likely Le Cornu will fail, which would take us right back to the choices that Macron faced last week, where it's a snap vote, a new prime minister, or he resigns. But I've been in Paris last week. The sense to me is that Macron knows nothing can get rid of him, and so he is willing to push and push when it comes to picking that last cabinet that was so offensive that led to Le Cornu's resignation before. And you know, he just cares about the international stage mostly, hence why he's off to the Middle East, to Egypt, to sign this peace deal when it comes to Gaza.
Absolutely. He keeps getting dragged in, though, to the domestic political story. He can't escape it completely. And while he keeps kind of finding different permutations, is it ultimately going to be something that he has to focus on more, that we are going to see elections happening in France, that if you end up having to push an emergency procedure to get a budget over the line, we must be getting into the dying stages of this parliament. How much longer can he string this one out for? And if he ends up with a difficult outcome from that parliamentary election, does that force him maybe to take changes in terms of his presidential ambitions?
That's what I thought when I went to Paris last week, but I left feeling like that is the difference between French and British politics. If he were the Prime Minister and there were no president, maybe that pressure would be there. But because he knows he is safe until the 2027 presidential elections, I think he doesn't feel that same pressure.
But there must be some sort of legacy effect here, that he wants his legacy to be better than this kind of crumbling lame duck, catastrophic kind of picture that emerges from French politics at the moment, this crisis to crisis to crisis kind of narrative, because that's what he's going to be defined by.
You would hope, Guy, you would hope. But look, as I say, he's off to
Let's talk about that.
The Middle East, and Trump arriving in Tel Aviv to meet the hostage families, addressing the Knesset, then heading to Egypt to host this peace summit with the Egyptian president and European leaders, as I say, including Macron, but also Merz and the UK's Keir Starmer. The IDF saying that 7 Israeli hostages held in Gaza by Hamas have been handed over to them by a Red Crescent team. And we can go now, actually, live to Bloomberg's Dan Williams. He's in Jerusalem for us. Dan, just talk us through what more we know and what we're expecting from President Trump's visit.
Good morning. We're just minutes away from President Trump landing in Israel at the start of that whirlwind visit to the region to celebrate and be celebrated for his peace plan unveiled only 2 weeks ago, a plan to bring an end to this 2-year Gaza war that's shaken up the region. As he comes into land already, the first critical stage of that plan is happening on the ground with 7 hostages, 7 out of 48 hostages to be delivered by Hamas back to Israel. 7 of them, live hostages, we're told, are in vehicles on their way back to Israel. Another 13 live hostages due to go free. The remainder, sadly, are believed to be dead, and there is a question as to whether all of them will be recovered during the course of the day. However, this has been anticipated by Israelis, obviously the loved one of those hostages, with great excitement. For now, we have not seen images of those hostages. Media reports suggest they are walking on their own, meaning they have not been seriously incapacitated by their trial, their 2 years in captivity, often in parlous conditions. However, they will be taken for medical assessment before being reunited with their parents, and we may not actually be seeing them publicly. But nonetheless, their families will no doubt be quick to congratulate the president in person when he arrives, when he speaks in a couple hours at Israel's parliament, before he heads on to Egypt to put the final touches on what he hopes is the implementation of what remains of this deal for Gaza.
Dan Williams out of Jerusalem, we thank you so much for that update. Of course, the question remains, how do you stop Israel attacking as soon as it's received the hostages? But we shall be hearing from President Trump. We'll watch live pictures of that later in the programme. Indeed, he may be having more commentary on the US-China trade spat, Guy.
Yeah, this is phase one in terms of what is happening in the Middle East. Phase two looks a little trickier. We've got some major market moves that we need to talk about. We've got some great guests lined up to talk about them. Jane Foley, Rabobank's FX strategy head, is going to be joining us shortly. Alberto Gallo, Andromeda Capital Management CIO and co-founder, joining us to talk about what is happening in the govie market, the credit market. There's other credit stories we need to fold in as well. Patrick Armstrong, Perimi Wealth, going to be joining us at the market open. And Angelina Vavavina, Fitch Ratings head of EMEA Natural Resources and Commodities, here to talk about the silver squeeze, what's happening in gold, the market move that we are seeing in terms of the oil trade overnight, bouncing back quite strongly. Lots of factors to fold in to that commodity story, Lizzie.
In terms of what's on the docket for the week ahead, today we have the IFF meetings convening in Washington, D.C. Also, as I mentioned, it's that US bond market holiday. Then tomorrow we hear from the Fed Chair Jerome Powell. We also get US bank earnings kicking off with JP Morgan, Goldman Sachs, Citi and Wells Fargo and BlackRock as well. Wednesday, European earnings highlight is ASML. We also have more US bank earnings from Morgan Stanley and Bank of America. And then on Thursday, TSMC earnings as well.
Looks like it's going to be a really interesting earnings season. The options market pricing in a lot of volatility. I just want to take you back to that bank story that Lizzie mentioned, with the big banks reporting out of the United States later this week. We've got a story here in the UK which just kind of keeps rumbling on now. Lloyds Bank out of the UK signalling at the back end of last week that the motor finance provision story that it is facing as a result of missold credit around auto purchases is going to be more meaningful to it than originally anticipated. Lloyds now sees, and it's announcing this morning, an additional 800 million motor finance provision, a significant step up in terms of the numbers that I think the market may have been thinking about. We'll see how that stock reacts at the get-go of trade this Monday morning. What else do you need to know this Monday morning? Let's run through some of the other stock stories that we are watching. European pharma stocks likely to be on the move after President Trump announced late Friday a deal with AstraZeneca to slash prices on some of the British company's drugs in exchange for tariff relief in the United States. It's the second major deal between the White House and a pharmaceutical company. The agreement will see AstraZeneca launch all of its new medicines in the United States at the lowest prices offered to peer countries. Astra's CEO, Pascal Soriot, appeared with Donald Trump for the announcement.
To say that I appreciate very much Secretary Letnick granting us a 3-year tariff exemption to localize the remainder of our products. Most of our products are locally manufactured, but we need to transfer the remaining part to this country.
Pascal Soriot. Watch mining stocks this morning. The precious metals complex in focus. Silver hitting its highest level in decades as a historic short squeeze in London reinforced the powerful year-to-date rally that we've seen in the metal. Spot silver climbed as much as 3% to near $52 an ounce, exceeding last week's intraday high. This as gold surpassed $400 an ounce, building on a run of 8 weekly gains. Platinum and palladium are also on the move as well. And watch European defence stocks also at the open after President Trump said he may warn Russia that he's considering arming Ukraine with long-range missiles. Speaking on Air Force One, Donald Trump says he was thinking about sending Tomahawks to Ukraine if the war continues. Trump was speaking after calls with the Ukrainian president on both Saturday and, we now understand, Sunday. Volodymyr Zelensky described those calls as very productive, Lizzie.
Coming up on the programme, we're going to keep an eye on Europe's pharma sector at the open following the White House announcement of the Astra deal. Plus, we're going to talk oil and how geopolitics and trade tensions could impact prices for the liquid gold. But up next, we'll talk markets as stock futures rebound after Friday's sell-off. And if you've got any questions of your own for our guests, please do send them in to us on IB plus BBTV Go. This is Bloomberg.
Used to be one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Let's see what happens. For me, you know what November 1st is? An eternity. November 1st is an eternity for me. For somebody else, it's right around the corner. For me, when I hear November 1st, it's an eternity.
President Trump on Air Force One there looking to leave the door open for easing of trade tensions with China. On Truth Social, the president said that markets shouldn't worry about China. It'll all be fine. And you can see the relief in the US futures this morning. NASDAQ futures up 1.7%. S&P E-mini Sky up 1.2%. The taco trade very much on this morning.
Absolutely. Remember, it is a bond market holiday in the United States today. That we need to factor into our thinking as we watch maybe the reaction that we are going to get around the world. But yeah, we're bouncing back, but it was a violent move Friday. You need to see the moves this morning in the context of the big moves that we saw to the downside. Let's talk about how this is going to impact the FX story. It's interesting that we are actually seeing the dollar actually fairly flat this morning. Jane Foley, our next guest, thinks that actually volatility should probably be higher generally anyway, and it is moving higher as a result of this story, but maybe not enough. Jane Foley, head of FX strategy at Rabobank, joining us around the table. Good morning.
Good morning.
So you're surprised the volatility isn't higher anyway. So what's your reaction to this kind of last 24 hours, 48 hours, depending on your kind of market timing? What do you think about what's just happened?
To be honest, I think a lot of it can be explained by positioning. So I think if we go back to the spring, the market was getting, very short dollars, very long euro. And I think that's part of the equation that maybe gets a little bit overlooked here because, we all talk about the dollar. We've been talking about the dollar all year. But if we think about the euro, we go back to the spring, that was strong in its own right. And that was related to Germany's debt brake, and the momentum or the expected momentum about the German economy that was expected to come from the fiscal spending. But, we look at what economists are thinking for German growth this year. It's 0.3%. It's close to stagnation. We look at some of the German economic data that we've had recently. A lot of it is pretty disappointing. And we look at the headwinds still. Well, now, if you like, they've got the additional headwinds. They've got tariffs from the US. They've got a stronger euro than where it was at the start of the year. And they've still got, the competition from China. They've still got relatively higher energy prices, although they have come down. And in some sectors still, labour shortages too. So there's a lot of headwinds there. The data hasn't been great, and I think there's some disappointment coming through. If we look at the criticism recently from the IFO, they were saying, look, where is the structural reform we need in Germany? And yet the market is going into this really long euro. And I think right now what we're seeing is a little bit of correction, not just in the dollar positions, and I think the market had got too short. There's a lot of Fed easing in the price, for instance, but I think the market had got too long euro. And I think that's what we've been seeing in the last few weeks. The news flow has been the trigger points, the catalyst, but it's, I think, all about positioning.
Just putting the euro aside, what about some of these other carry trades? You know, we've seen the Brazilian real real weakening off the back of this move on Friday. Do you think that that continues this week? Do we have to rethink some of those carry trades because of the shock that has been seen on Friday?
To be honest, I think if you're into the carry trades, I think you have to be pretty nimble anyway, because of the news flow, because we don't, you know, because of the unpredictability around President Trump, because we don't know in 2 months where those trade tariffs are going to be with China. And we perhaps have a better feel now than maybe we did in April, but we still don't really know. But I think the one that people really do have to be careful with is that dollar-yen carry trade, because again, you know, that became, you know, very much, you know, the news of the day, you know, last week. And actually, I think I'd be very careful about that now. I think there is a risk that the yen could snap back.
Why? You said that. You said, I'm surprised the volatility has been as low as it has been for quite a long period of time. Why is that? And do you think we're coming out of that phase now?
I don't know if we're going to come out of it. I think there's various different factors, and I know that people have been writing, you know, reports about the impact of, you know, technology on foreign exchange. I mean, I don't know. I'm not well positioned to have a view on that, but I do think in terms of the news flow, that there's almost the news flow is so rapid and so quick fire. It's almost pretty difficult to react to a piece of news when actually the news could be completely different that afternoon or, you know, the next day. So I think there is a degree of sort of lack of reaction to some of the news flow because of that.
But we have this kind of orbit of stories that we're watching at the moment. French politics, government shutdown, what's happening with the China trade story, the AI narrative.
Japanese politics.
Japanese politics. All kind of orbiting around. Are they just cancelling each other out? So are they all so volatile that actually they're not volatile because they change so much, to your point, that you can't actually kind of understand what happens next, and there's so many of these kind of known unknowns.
Or even if you did understand, you know, you're reluctant to take a position because the news flow could be different tomorrow. So I think there is an element of that, because I've read reports, as you say, no, the market's getting very complacent about this, that and the other. And I actually think it's not necessarily complacency, it's, you know, it's sort of wait until you're really, really sure, because otherwise you could get your fingers burnt. So I think markets are having to adjust differently to the news flow just because of the pace of it.
But what about the debasement trade and this whole debate about whether gold is the new dollar? Do we kind of forget about that now that we've had the shock of Friday and we're kind of back to thinking that we've seen before?
Well, probably not, because I think perhaps part of this issue and part of maybe a reaction to all of this news flow is still the diversification trade. Now, clearly, you know, that was perhaps called at the start of the year, you know, the roll away from America, you know, trade. People were moving away from the US. But actually, I think we need to step back and look at this in a bigger context. Since the global financial crisis, there's been a lot more money around the world going into portfolio flows, and an awful lot of it has gone into US. So US stocks, for instance, you know, have certainly been a beneficiary of that. And I think this year, perhaps triggered by some of Donald Trump's policy, the market started to rethink that. And I think the diversification trade is still very much something that people are interested in. So, you know, look at the performance of the Nikkei, for instance. Look at the performance of the Hang Seng. They've both done extremely well this year. And I think gold is part of that diversification trade. And I think perhaps you can wrap this up with the amount of debt and the deficits that we have, not just perhaps in the US, but in various parts of the developed world. And people are saying, well, look, you know what? You look at these huge amounts of debts. Are these governments doing anything? Are they able, in an aging population, to do much about this? Why don't we just diversify and follow some of these central banks into gold as well? So I think that's part of an issue.
What are you watching this week? I'm just trying to think about the kind of things that could be near-term catalysts. Got French politics, which I think we haven't talked about yet. You've got the US government shutdown, which we haven't talked about yet. These are massive kind of stories that we don't know yet how they're going to play out. What are you looking at in terms of the week ahead in the absence of US data?
Well, I mean, we do have Powell, but I think also Japan. You know, I think this is a really interesting story. And we've got to remember that in the Japanese press, certainly, they're talking about a potential visit by Trump to Japan, you know, at the end of October, which would be linked to his visit to Asia. And, you know, I got to ask myself, whoever is the Prime Minister of Japan, hopefully they'll get one next week, why would you want to potentially visit or meet Trump with association with a weaker yen policy and when you're worried about imported inflation? And that, to me, whoever you are as the new Prime Minister, that to me suggests that there could be a snapback in the value of
When you're a
yen.
self-styled Iron Lady of Japan, why would you want a weaker yen? But still, stuck around 151 per dollar right now, Jane.
Yeah.
Good to see you. Jane Foley, Head of FX Strategy at Rabobank. We thank you so much for joining us around the desk this morning. We've got plenty more to discuss. We're going to keep our focus on the markets and the renewed trade tensions between the US and China. We'll be speaking to Alberto Gallo from Andromeda Capital Management. He'll join us next as we're looking at futures higher stateside, up 1.7% for Nasdaq futures, also higher here for European futures, up 0.4% for Euro Stoxx 50 as we head towards the cash open. Remember, the bond market, at least for treasuries, closed today for cash treasuries. We've had Japan on holiday, Columbus Day stateside, so much more focus on these other classic classes, but the taco trade out in force this morning. Stay with us. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Where are we? 30 minutes to go until the start of equity trading here in Europe. Futures look a little bit like this. It's been a turbulent weekend. A lot of people are waking up this morning probably feeling a little bit more relieved that they've got more positive futures on the screen. US futures are sharply positive this morning. We will continue to show you those. And what we're watching here in Europe is Euro Stoxx futures up by around 0.5%, Lizzie.
Yeah, in European bond space, not a whole lot of movement at the moment along the curve, really. And we're looking at the German 10-year yield up up 1 basis point at 265. We haven't got cash trade in treasuries today because, as I say, of the Columbus Day holiday, also Japan on holiday. But if you were looking for a reaction to the renaming of Sébastien Lecornu as the French Prime Minister and the announcement of a new cabinet, you're not really seeing it much on the French 10-year yield. But as I say, Emmanuel Macron announcing this new cabinet as pressure builds for him and his reappointed Prime Minister to head off France's growing political crisis and pass a budget. We can get more now with Bloomberg's Caroline Conin out of Paris. Caroline, good morning. We have Lecornu reappointed, a cabinet named. What's new here?
I'm just like you, Lizzie. I feel like I'm living the same day over and over again. And we're kind of back where we were just 1 week ago after Lecornu appointed his cabinet on Sunday night. Lecornu reappointed by President Macron on Friday night at 10 p.m. He tried this time to change a little bit the ministers because he said he wants this new government to be totally disconnected from any presidential ambition. So out Bruno Retailleau, the former interior minister who slammed the door last week and created this whole crisis. Out as well Bruno Le Maire, who angered the Republicans. Out as well Elisabeth Borne, who suggested last week that we could suspend the pension reform. You have a few new faces, as you can see, with Mr. Farandou, some civil society figures from the head of the railway company SNCF, also the prefect of police of Paris. And clearly what Lecornu is trying to do here is some absence of heavyweights, no one who really wants to have another mission than just passing a budget. Roland Lescure remains as finance minister, and he actually said in Luxembourg on Friday that he was optimistic about France passing a budget. We'll see over the next few days. Next episode will be tomorrow after President Macron is back from Egypt with a first cabinet meeting followed by a general policy speech, and we'll see how long this government can last.
OK, so give me the timeline. What are the chances of the government being here by the end of the week?
Well, it seems like the tone has slightly shifted over the past few days because clearly the resignation of Lecornu a week ago was a shock for everyone. And then, of course, you had this saga with Macron asking Lecornu to stay another 48 hours discussing with all the opposition parties. And he came out with this idea that there is some sort of majority who does not want a dissolution of parliament, who does not want new snap election. So perhaps that's kind of a way of calming down the socialists. The Socialist First Secretary Olivier Faure last night on X after the nomination of this cabinet said just no comment. So pretty strong no statement there. But it seems like if the socialists get their way with this suspension of the pension reform back on the table and all the subjects, including taxing the wealthy, back in parliament this week, we could see some sort of pact of non-aggression from the center-left and the center-right. And of course, I've said this before, but the parliament in France is still fragmented. So again, it does feel like another last chance for President Macron before calling snap elections.
All right, well, I hope not to see you again too soon in Paris. Bloomberg's Caroline Conin, as we hope that this government can get this budget through. But let's come back to the tariff story now. Donald Trump's administration has signalled an openness to a deal with China to quell these fresh trade tensions. In a post on Truth Social, the president posted a statement that hinted at a possible off-ramp for the Chinese President Xi Jinping, while issuing a veiled threat that a full trade war would hurt China. Joining us now to discuss more the market perspective is Alberto Gallo, CIO and co-founder of Andromeda Capital Management. Good to have you around the table, Alberto.
Thank you. Good morning.
Was it all a blip? Is that how we can treat it as investors?
Well, there is a broader theme here that is of a theme of excess spending. In an environment where Western countries don't really have all the resources they need and they cannot take them from emerging markets anymore, what they're doing is spending. So excess fiscal deficit, it's going higher next year. And on top of that, monetary policy and an implicit level of control of the yield curve from central banks. So we are still in this, what you call a debasement trade as a result of trade tensions and geopolitical risk. And what's surprising is the low level of volatility in FX markets, in rates markets, and in credit markets. They're all under this monetary anesthetic, and that creates misallocation of capital.
We were just discussing that with Jane Foley, the volatility. But just in terms of the Treasury reaction into Friday's close, it was completely the opposite to what we saw with Liberation Day, right? You saw a rally on Friday, a sell-off after Liberation Day. Do you read that as the market saying that tariffs are going to hit growth more than they're going to boost inflation? Is that the lesson we've learned since April?
I mean, look, there's definitely more growth concerns now. We're probably in the weakest spot for growth in the U.S. This quarter. But next year we have more stimulus coming and the Fed will keep cutting. But I think the real key point here is that normally in a sell-off like this, you will also see gold coming down. But actually gold is getting bought because investors are worried about the purchasing power of all DM currencies. Now, the dollar is probably the least bad because they can make other people pay for their problems. But typically, in this situation, that's a warning sign, what we are seeing.
Yeah. Just picking up on Lizzie's point about the market maybe started to signal a growth slowdown. And that's maybe what we got here. And that's the concern that maybe is growing, certainly in the Treasury market, in government bond markets more broadly. Let's talk about credit, your space. We're already starting to see cracks appear. You're already starting to appear in the chemical sector, in the auto sector. We're starting to get defaults. We're starting to get the kind of bottom end of the market cracking in the way that it normally would at the beginning of the kind of the rollover process. How much further does this go? How isolated is it? If we are seeing a growth slowdown, how much further into the credit space does this reach?
So it could be a soft patch, but regardless, so no one has a crystal ball for recessions, right? But I would say credit is the most overvalued asset class in the world here, because it's priced for perfection. It doesn't give investors any upside at 50 basis points in investment grade, like 30-year low in spreads. There is crowding out from governments. Governments have to borrow more, and France and German spreads, France and Italy spreads will at some point grow. And you're starting to see lending going to low-quality credits. But on top of all this, we've seen structures that delete mark-to-market, private credit, for example. So when you have this kind of behavior, not only valuations are very tight, the technicals, the positioning of investors is extremely long, and then you have fundamentals that are flat to slightly worse. Then, things like First Brands or Tricolor or some of the automakers and chemicals in Europe are things that were already starting to crack before the tariff announcement. So we have to be really careful here on the one hand. On the other hand, there is very good opportunities that can open once the credit markets go back to more real pricing and not just compressed by liquidity.
So what are you doing? How do you? Okay, sounds like that was a pitch for a trade. What is the trade here?
So look, first of all, we wanna be able to monetize the coming dislocations. There's a lot of things that could go wrong here. There's geopolitical risk. There's a lot of Fed cuts are priced in. Inflation could be higher, or simply a slowdown in growth. So you want to have the right hedges in place.
How are you doing that?
Well, the most overvalued part of the credit market is U.S. Credit, particularly U.S. high yield. It's record long positioning. Everyone is long U.S. assets to try to beat inflation, and that creates a lot of mispricing. So that's what we're very worried about. That's what we are.
So you short U.S.
against.
credit?
Yeah.
By how much?
We're very hedged. We're as hedged as we've been. There are some interesting situations that you can buy, but we're starting to see some apples falling from the tree. Typically, the first apples that fall are not the best ones. You've seen Thames Water. That story was very well bought by credit investors, but it hasn't evolved very well. So we need to wait for the tree to be shaken a little bit more, for a bit more volatility.
And just in terms of the ramifications of those cracks in credit, do you see it holding back the AI build-out, for example?
No, it's totally different universes, because in credit you have really, the Russell companies or the companies that are not tech companies. So you can actually have the tech sector, which are essentially our monopolies, and gold and defense, which are the same trade, doing well, and at the same time you have high inflation. Unfortunately, the bottom end of the consumer is going to be weaker, and then you can have credit underperforming. So you can have a crunch in the real economy, and then tech monopolies, gold and defense, which are essentially the fiscal trade, the geopolitical trade, doing well. Those two universes can coexist. When credit cracks, obviously, we do look for upside in real assets because we continue to see fiscal and monetary spending driving debasement of DM currencies. So we want to buy things that are not just surviving, but also recovering. Think about convertible bonds. You can buy equity. You can buy companies that have commodity-linked upside or can have bargaining power to price things with inflation.
And just coming back to, Caroline was giving us the latest on French politics. You were talking about how Western governments are running out of funding options. I mean, what's the breaking point here? We keep going round and round in circles when it comes to France. Is there a point where the market says, enough's enough?
So normally you have bond vigilantes kicking in, right? And this is always a fun point of discussions because no one looks at bond markets, 9-10 months out of the year, and then there's one or 2 weeks where bond investors actually are important. But the reality is that bond vigilantes are on the bench here because central banks have intervened every time there is some volatility. We saw it in the first week of September, but then the Bank of England intervened very quickly, saying they would reduce QT. So actually, this is an FX situation. If you cap where yields can go, then it's the currency that takes the hit. And I would say it's not really gold that's going up. It's every other asset that's going down. Investors are buying risk assets for capital preservation here because they want something that gives them more than inflation. That has created a huge misallocation of capital and risk.
Alberto, we're going to leave it there. Thank you very much indeed. Alberto Gallo joining us from Andromeda Capital Management. I want to take you to Ben Gurion Airport. Air Force One is on final approach into Israel. You can see the live pictures coming to you from Israel as the President of the United States touches down in Israel. The hostage handover is underway. We continue to monitor what is happening there. We will see the President obviously meeting the hostages' families, hopefully meeting some of the hostages, also addressing the Knesset. He will then follow on that trip with a further trip to Egypt, which will take place later as we put the final stages to this peace deal that Trump has forced through. What happens next remains to be seen as Air Force One touches down in Israel. A historic day in that country as we see the hostages being released by Hamas and the prisoner swap taking place, Lizzie.
Yeah, of course, there are lots of questions now when it comes to the implementation, how long this can last beyond the hostage swap, now that seemingly Hamas has given up its leverage. So do we see an escalation again from Israel in this situation? Questions particularly as well for Europe. We have the likes of Macron, Starmer and Merz going to join the president in Egypt. I mean, what role did Europe actually play in this? The president, we joke, taking all the credit.
20-point plan,
not getting his Nobel Prize. But did Starmer, for example, and Macron hold back this progress by recognising the Palestinian state? It's going to be awkward in Egypt.
There's a lot of difficult conversations that need to be had. In some ways, where we are now is the easy phase. Phase one. I know this is hard, and there are so many hurdles that have needed to be got across in order to get to phase one, and this 20-point plan that has been pushed forward. But the further down you go down the peace plan, it becomes more and more tricky. Phase two is clearly a much more difficult process. What happens in Gaza? How does it get policed? What kind of security forces are going to be there? Does Hamas have any kind of a role? What happens at that junction, I think, is very difficult to determine. So phase one, yes, hostages released, prisoner swap taking place. Phase two, I think there's a lot of open questions at this point, and whether or not we know more post the Egypt meetings, I think remains to be seen. But I think at this point in time, we just celebrate the fact that at least there's some positive progress.
Of course, and a human story of jubilation on this day. But to that point, what the questions that remain: what role will, for example, former Prime Minister, UK Prime Minister Tony Blair play in this board of peace that's going to be there? Who's going to fund the reconstruction? How do you hold it up? How do you incentivise making this peace last? Really difficult question.
And are we at the back end of the 20-point plan as well? It talks about a two-state solution. There is movement towards it at the back. Getting this current administration in Israel to proceed down that road still looks incredibly difficult to many of the experts that are writing, talking and speaking about this.
When again and again Netanyahu has said that he wants to wipe out Hamas. When he's got the hostages back, will he be able to resist wanting to fulfill, to please the right wing of his cabinet there. Look, we can get more details now. We can see the Air Force One landing here in Tel Aviv. And
the Ben Gurion, yeah.
Yeah, excuse me. And so the president aboard, we're awaiting his arrival.
Yeah, we are. He will deplane fairly quickly. As we've already noted, he has got a fairly packed schedule as we work through the rest of today. We are going to be seeing Trump obviously wanting to be part of the narrative around the hostage release. Israel on tenterhooks, waiting to see what happens with that hostage release and the state of some of these hostages that are going to be released. But it's going to be interesting to see exactly what he does for the rest of the day, how that speech in the Knesset goes, what he does as he maybe moves down as well to talk about what happens in Egypt and the further development of this plan. Our correspondent, Oliver Crook, is in Jerusalem. Oliver, walk us through what we're watching and what happens for the rest of the day.
Yeah, absolutely. What we're watching right now is, in fact, the Prime Minister of Israel, who is awaiting President Donald Trump at the tarmac there at Ben Gurion Airport outside of Tel Aviv, where he's meeting President Trump, who was really the instrument. Really, I think that you speak to anybody in Israel here, universally, the gratitude is still stunning to see how profound it is for what Donald Trump has achieved here over the last few days, really out of the blue. And that is what the Prime Minister of Israel will be expressing to Donald Trump as he welcomes him on the tarmac in Tel Aviv. They will then in short order come here to Jerusalem, where the Knesset, the parliament is, where Trump will speak before the parliament. He is also expected to speak with some of the hostages' families, maybe even some of the hostages that were released today or some of the hostages that had been released in the past, and be addressing the Knesset. And I believe the first time since an American president has done that since George Bush did so. In the past, short order after that, he will get back on the plane. He will go to Egypt for the signing ceremony of this sort of peace deal. But I think, guys, just for the moment here, marking this moment and its significance for not only the people in Israel and a few days ago, the people in Gaza, really sort of for the first time not hearing bombardments and the shots fired. And today, expecting those hostages to be released after more than 2 years in captivity is an absolutely momentous moment here for the Israelis. And I should say, you notice it even before you land in Israel. Before I landed a couple of days ago, you can see buildings that are lit up with the Israeli flag, the American flag. Underneath it, it reads, "Thank you." On that highway between Tel Aviv to Jerusalem, usually lined with Israeli flags, every third flag has been replaced by an American flag. And that is very much the sentiment that you can feel speaking to anybody here in Israel. Donald Trump is the most popular person in this country at this moment, without the shadow of a doubt.
So, Ollie, we understand the jubilation that this moment is here. We understand the hard work that it took to get here. But how do we make sure that this peace lasts?
And I think that's really the concern, Lizzie, is that with all the jubilation and all the sort of happiness and all the optimism that you hear on the streets of Israel, and you heard some of it in some of the reporting that was happening also within the Gaza Strip, where there's some sort of at least day-to-day peace, the much longer story, I think all of that sort of happiness masks a bitter complexity that is still not worked up to this point. And that is precisely the work that will begin after the hostage release today, after the release of the Palestinian prisoners that number in almost 1,700 of whom were sort of captured or taken since the invasion of October 6th, and 250 of them are convicted people who are serving life sentences, who have committed, in some cases, acts of terrorism and killed a number of Israelis. This was one of the most bitter pills to swallow within the arrangement for the Israelis, but it is the day after, and we knew this from October 7th, from October 8th. The conversation about what the day after would look like is immensely complicated. There is a broad outline of what that should look like according to the Trump plan, that 20 points that will eventually, if everything were to go sort of perfectly, could lead something towards something close to Palestinian statehood. That being said, there are so many steps on the way, and it is not clear how to achieve them. The first is a question of governance, this technocratic Palestinian-led governance system that will be put into place, that will be overseen by this so-called Board of Peace chaired by Donald Trump. Tony Blair will be involved. A number of other leaders will be involved. But then in order to have that sort of governance, you need to have a security apparatus that is, A, acceptable to the Palestinians, Palestinians and B, acceptable to the Israelis, what nation is going to be willing to put forward their own defense forces and security forces to guarantee that? Will it be the Arab states? What will the involvement of the United States be? The idea is, of course, to withdraw the IDF ultimately from the Gaza Strip, and certainly less and less over the next coming months. But the big question, before any of those can be answered, is what is the future of Hamas? This is a question that is entirely unanswered. And another question I think that is going to be the big one before everybody, a very simple question. The answer is extremely complex. Is the war over today? If you ask President Donald Trump, he says, yes, the war is over. You ask Benjamin Netanyahu, you ask some of the other commentators here in Israel, that is not such an easy question to answer. And the answer to that question for them is not necessarily yes.
So what happens in Egypt once we move on to that next phase, once we start talking about phase 2? What are the key discussions that need to take place towards the back end of this week? Ollie?
So I think that the most important thing, I think, with this entire process will be keeping people engaged, getting people committed on the front, in the first sort of steps of it, and then keeping momentum throughout the process. I think from the very beginning, the difficulty with the Palestinian question, particularly in Gaza, is that many of the Arab states have found themselves very supportive of the Palestinian people. They've been, it's sort of naturally how they feel, also the pressure from their own people, but they've been very sort of reticent to get involved very intimately with, say, the security apparatus. So for the Trump administration, who has put this through, is going to be a conversation with many of these Arab leaders to figure out what exactly the role is going to be going forward. And that's to say nothing of the fact this sort of security, which is the preconditions for doing anything else. The main issue here is also going to be a question of reconstruction and disarming Hamas. It is some of the Arab allies and Muslim country allies, such as Qatar and the Turks, who put immense pressure on Hamas to come to the negotiating table. What is the future of Hamas in the enclave? That will be the fundamental question. And to what degree are they going to be willing to disarm? We've already had reports over the last couple of days of them reasserting their authority within Gaza and also, setting checkpoints. And there have been some reports of also retribution towards Palestinians who were seen to have cooperated with the IDF. So this is really, despite all the jubilation, all the optimism, some of the chaos that is certainly going to be ensuing within the Gaza Strip.
So, Ollie, if this is the biggest foreign policy achievement of President Trump's second term, and the Abraham Accords were the biggest achievement of his first term in terms of foreign policy, do we expect the talks on Israel-Arab relations, normalising those relations, to pick up after what we see in Egypt?
I think very clearly for the Trump administration, that is the sort of ultimate goal. And I think it just we should just take a moment here to note the achievement of sort of foreign policy for the Trump administration. I think even the greatest detractors of Donald Trump, the greatest critics of Donald Trump, have to give Trump a huge amount of credit for what he managed to achieve here. And I think many of the critics of Donald Trump will say many of the crises that Trump so-called solves are ones that he manufactures. This is a crisis that predated Donald Trump and that he has, through his foreign policy, managed to bring everybody to the negotiating table. I've been talking to a number of different people and thinking myself quite a bit about, could this have happened under Joe Biden? Could this have happened under a President Kamala Harris? And I think the answer is, potentially, but it could not have happened in the way that it happened here. And that is largely due to the way that Donald Trump has gone about negotiations and the ways that he's held relationships and brought people into the conversation that I don't think the Biden administration had the same kind of leverage with and the same kind of conversations with. So I think that certainly the long-term goal for the Trump administration is a total normalization of the Arab world with Israel. But I also think this is a sort of coup in the method of Trumpian foreign policy, and a sort of almost ideologically agnostic, almost sort of unprincipled, almost sort of improvised, but really getting some kind of results. And I wonder what this will mean for, say, maybe Trump's attention moving more closely and more completely towards Ukraine in the ways in which he will be able to put leverage on Russia and Vladimir Putin. And that'll be certainly part of the side conversation today when we'll be seeing in Sharm el-Sheikh, because there are going to be a number of European leaders there, including Emmanuel Macron, Pedro Sanchez, Giorgia Meloni, Keir Starmer, and Antonio Costa from the EU Council as well.
Ollie, as we see the president exiting the plane, as we see Trump on Israeli soil, in terms of the impact that this is going to have, in terms of his standing within this region, you've highlighted how important he is and the adulation that he is receiving right now. Can this translate into something sort of more? Can this sort of translate into how much influence does he have over Bibi right now, Benjamin Netanyahu, the government in Israel, how much more can he use that adulation that, as you say, he's getting to leverage serious change in this country?
I mean, I will say this, this is sort of anecdotal observation. I mean, he's certainly much more popular within Israel than Benjamin Netanyahu. And I think that we've learned from the Trump administration, I think, through a number of different things. I remember when Trump was elected, you spoke to Israelis, everyone was ecstatic about it. And they really, I think that what we've seen over the last few months is a real vindication of that position. I do think that President Trump has a huge amount of influence over Benjamin Netanyahu and what comes next. There are a lot of questions about domestic Israeli politics in terms of what comes next. Will there be an election that will have to be called? Will this coalition with the sort of far right continue to hold? Will something else sort of shift? These are questions that are still fully open, or ones that we're going to be posing for the next couple of weeks. But I think that, to your point, Guy, Donald Trump is, and I think this is a deliberate effort by Donald Trump, positioning himself in the very center, the fulcrum, the linchpin of basically policy, and basically trying to force things forward. And there are a number of guarantees that will be required from the Israelis that really only Trump can push forward. And that, I think, is what the Palestinians and much of the Arab world will be relying upon.
So we see the president exiting Air Force One, walking down the staircase at Ben Gurion Airport, touching down on Israeli soil, meeting, obviously, Benjamin Netanyahu, the Prime Minister, the ambassador, also his son-in-law Jared Kushner is there as well, instrumental in much of this process. His fingerprints, many have argued, are all over the deal that has been pushed by Trump, and his influence has been hugely significant. But a major moment in terms of Israeli politics, a major moment in terms of Middle East politics, as we see Trump arrive in Israel. Hostages are being released. The Part 1 peace plan being put into place. This is a significant moment as we watch this event unfold. But what is interesting from a market perspective is that this is a geopolitical event that is in some ways divorced from what we are seeing elsewhere in markets. Trump roiling markets over the last 24, 48 hours. His ability to switch from one area of influence to another, immense, and have a significant impact on each of these different theatres. The fact that we saw trade being such a market massive moment on Friday, Trump was at the centre of that. Now he finds himself at the centre of this Middle Eastern story. But they are, Lizzie, in some ways so different. But they represent this orbiting risk that we currently have around markets at the moment, with politics, with geopolitics present, but the trade narrative runs through it all. What we see in terms of the slowdown of the US economy, Trump's influence on the Fed, at the centre of this story sits the US president. But we don't know which way the narrative is going to turn next.
We don't. And, of course, as you say, we had the tariff story dominating the markets on Friday. This morning, we have futures pointing higher stateside. NASDAQ futures up 1.9% now. Yep. S&P EME's up 1.4%. We are inching towards the European cash open. We have Euro Stoxx 50 futures up 0.6%. As we look across the European continent, we have the CAC 40 futures up 0.4%. And really, it looks, again, like French politics could be battered away. We have a new old Prime Minister, Le Cornu, reappointed. But the optimism that maybe that Trump will chicken out when it comes to 100% extra tariffs on China, seeming to flood around the world, reversing some of the moves that we saw on Friday.
So here we go. We're a minute away from the market open here in Europe. We're trying to understand the implications of all of this. A lot of people will have spent the weekend looking at their positions, trying to understand how the narrative has changed. I suspect it's been a very nervous weekend for an awful lot of people with big positions out there as they try and understand the implications of the trade war coming roaring back. Donald Trump sending it back to the centre of attention. How does that change this Monday morning? Yes, there's a little bit of taco on the menu. Yes, there's been a backtracking, maybe from the Trump administration, from the president, from the vice president. But what happens next remains to be seen. Volatility is higher. Does that change the narrative around some of the trades that we're going to be watching? We need to fold in some of the individual stories. What happens with defence stocks this Monday morning? There's a Ukraine element to that. What happens with pharmaceutical stocks this morning? There is an AstraZeneca element to that as well. Platinum, gold, silver, the squeeze on in silver, significant this morning. That's going to ripple into the mining sector as well. So here we go. European equity markets are about to open as we watch Jared and Ivanka speaking to President Trump. They are significant in terms of the influence they have had. But we're watching two events simultaneously. European equities are now opening. Donald Trump has arrived in Tel Aviv. Geopolitics and markets meeting. I suspect the markets may be not focused as much on what is happening in terms of the Israeli story, but very much focused on the tariff narrative. European stocks open and pop positive. We're up by 0.1% as we watch the trade unwind from Friday. Europe was always seen as maybe as an alternative asset class to what we were going to be watching over in the United States. But as you can see, we're flipping from a very red screen to a very green screen on many of these. That DAX story that you're looking at on the screen right now is not live. That's Friday's price. That's not an intraday price. That's Friday's price you are looking at on the screen there. The Stoxx 600 is, though, open, and it is up by 0.3%. So we are seeing a bounce back this morning. The dip is being bought, Lizzie, but not by much. Look at Europe. We're only up by 0.3% after those 1.5% losses that we saw Friday.
Yeah, look, the FTSE 100 only up 0.2%. Same for the FTSE 250. We had expected big gains for the miners, but not lifting the FTSE as a whole that much. Fresnillo, it has to be said, up 3.9% as we see gold and silver rallying on this relief. But break it down by sector across the continent, and as you say, it is green across the screen. Tech leading the gains at more than 1%. Basic resources not far behind, up 0.7%. Autos as well. Bottom of the basket, healthcare, but it's only flat. We're not seeing losses for any of the sectors across the continent this morning.
I turn at this point to the two-day chart that we get, and maybe we'll bring this up for you once we've finished watching what is happening at Ben Gurion. The two-day chart, so you see a big gap lower, obviously, back end of the session Friday. This morning we're filling a little bit of that gap, but we're not completely filling it. So on a two-day basis, the Stoxx 600 is still down by 0.9% from the beginning of trade Friday through the initial opening trades coming through here on Monday. So we're watching this morning, stocks bouncing a little bit. But how do you reevaluate your position as a result of the volatility we've seen? We've been in this period of immense calm. Stocks have been pushed higher. The story around the AI narrative has been a huge part of that. But low volatility, the ability of systematic traders to take on more and more risk has been a big part of that narrative as well. Retail traders have continued to sort of bound into the market with glee. Are they going to be rethinking their position as well?
With naivety, as John Authers puts it in his column.
Maybe, but maybe not. Retail traders have been very good in terms of picking their moments and knowing when to continue with risk when maybe institutional traders have not. And maybe actually they've done better than we would have thought they would have done in this position. But the two-day story on the Stoxx 600, yes, we're up by 0.3% this morning, but we are down by 1% on a two-day basis. And as you can see, we are getting a bounce. But this isn't a significant bounce that we are watching. We will spend a lot more time, I think, analysing the details of what happened Friday. And we still don't understand kind of what the off-ramp China is going to take, or whether or not it will take an off-ramp, given the olive branch that was maybe posted on Truth Social by the President of the United States.
And we should note the difference between the moves that we're seeing in Europe, mild as you note, compared to what we're seeing, expecting for Wall Street. US futures up 1.9% for Nasdaq futures, and what we've already seen in Asia. China absolutely hammered this morning. The CSI 300 down 0.5%, but the Hang Seng down 2.4%. So perhaps traders thinking that maybe that is a market that was overheated and it's time to get out of it. But look, we have in the Middle East these images on the screen of Benjamin Netanyahu, the Israeli Prime Minister, greeting President Trump, as Oliver Crook put it, the new hero in the Middle East, off the back of this peace deal. Hostages returned, and we see that this morning. Can this peace last is the big question. We shall monitor the talks that are ongoing today in Egypt. President Trump meeting European leaders there as well. But let's get back to the market story. We can get some analysis now with Patrick Armstrong, Chief Investment Officer of Plurimi Wealth. Really good to have you around the desk, Patrick, as always. We've been discussing whether it's time to rethink your strategy after what we saw in Friday. Do we just treat it all as a bit of a blip and accept that maybe Trump is going to chicken out of that tariff threat?
I'm treating it as a blip. I've not made any changes to my portfolio positioning. You've got a Fed that's going to be cutting this month. You've got earnings that are likely going to be very strong in tech. And if you're Xi going into the negotiation with Trump, in the back of your mind, you know you've got to give something to Trump, so he can come out with a soundbite that I've won something. And if you take rare earths off the table and then give them back, that can be viewed as a win for Trump, and then maybe you negotiate something else. So I do think there's a lot of... Everyone's got a playbook when you're discussing with Trump. You've got to compliment him, you've got to flatter him, and you've got to give him a headline. And I think Xi may be just setting that up.
So Guy talks about the wisdom of retail investors. Is it unwise not to buy the dip at this point?
If you're fully invested, I wouldn't take leverage to buy more. If you're not invested, any dip probably does make sense because we've got monetary conditions that are going to ease, and for financial markets, monetary conditions are probably already too easy. For the real market, maybe they're not too easy, but for financial markets, there's just trillions of liquidity flushing around. You see gold at all-time highs, Bitcoin prices are up and down, but they've got a strong trend, and all of equity prices are at all-time highs. So dips are something that makes sense to buy when the Fed is cutting. And that's the playbook for right now.
Volatility looks like it's higher. Well, it is higher. The VIX is up.
Yeah.
Does that, if we do see a more volatile environment, if it stays up, does that change anything?
I don't know if it does. The Fed cutting, it just mutes volatility. That's the main thing it does. Yep. I think it suppresses volatility, and retail traders buying the dip also suppresses volatility. So there's going to be a lot of geopolitical headlines. Not all of them are going to be bad. I do think we're probably into a year-end where nobody's incentivized to rock the boat, and that probably does give us relatively strong markets going into year-end.
There's an immense amount of risk, though, kind of orbiting this market at the moment. Are we just going to? Do we just need to get used to the fact that periodically some of that risk is just going to insert itself into the narrative? This time it was trade, could be something else next time, but it's kind of, that's the world we live in.
When markets are at record multiples, it doesn't take much to set them down. Yeah. And that's where we're at right now. So you are walking a tightrope that most likely things are going to be good. If they're not good, it's probably asymmetric to the downside is what I'm thinking right now. So about 75% sure equity markets go up, but if they don't go up, the downside's bigger than the upside.
Does the Fed's already priced a cut, though?
Yeah. 2 cuts.
2 cuts. Yeah. So is that enough to keep the kind of the trains on the track? Because we're starting to see risks of a slowdown.
Yeah, in the labor market, there's definitely a slowdown, and that's why the Fed is cutting. That's really what they're hanging their hat on. Despite inflation being above their targets, despite growth being pretty strong, it is the labor market where you are seeing weakness, and consumption being 70% of U.S. GDP. When the labor market weakens, consumption is going to weaken. So it's a precarious position when you've got record multiples, but the path of least resistance is probably higher equity prices.
You mentioned Bitcoin going up and down. It went really down on Friday. Yes. Is that something that we should take as a bigger signal, and that could leave scarring, that it could infect other asset classes?
That could impact the retail. We talk about the retail trade. That's where the overlap maybe.
Yeah, I look at it not as an investment personally. I'm looking at it just to gauge where market sentiment is. And it does show that when things sour the mood, things can change quite quickly. So gold prices, tech stocks, meme stocks, all of those things being near record highs. And you did see Friday that they're not risk-free trades, obviously.
And are you surprised that China's been such an exception to the taco resurgence this morning? Or is it that you thought it was overheated anyway?
I think it's overheated. I've been reducing China, actually. China's had an incredible run.
Yeah.
And we sold Alibaba a couple of weeks ago. It looked like I made a terrible decision. But on Friday, it was looking like a good decision. I'd much rather own a U.S. company trading at 23 times earnings, like a Meta or an Alphabet, than an Alibaba. I just see more structural growth, more innovation. Alibaba was great for me at 14 times earnings, 22 times earnings. It's starting to look fully priced.
What is your latest thinking on the AI trade? This is the thing that everything hangs around.
Everybody's priced as a winner. That's the one thing I worry about, that if you just announce you're going to spend, and that's why we sold Alibaba. It had a real jump up after it announced it was going to invest in AI and chips, and everyone's priced as they're going to win. And some companies are going to win. It's going to be an oligopoly where there's a few winners, maybe some country winners, but not everyone's going to win. And the market's
How painful is that process of going from everybody's going to be a winner to we worked our way to the bottom of the funnel, we now know who. How quickly does that happen? How painful is that process?
Slowly and then all at once. I do think we're going to see who the winners are going to be, and then the market's really going to reward those stocks, and the other stocks are just going to be forgotten and laggards for a long time.
But does everything come down until as we try and work out, we know that not everybody's going to be the winner, right? Yep. So at the moment we're priced up, we're priced everybody being winners. But as we start to kind of edge our way down towards the bottom of the funnel, that
takes a lot of the froth off of things, because right now the market just rewards you. Just say I'm spending billions and billions on processors, on NVIDIA chips, and then NVIDIA will buy your stock.
Is that an economic event as well? Because at the moment, the U.S. consumer looks like the upper end of the U.S. consumer looks like it's being supported by high stock valuations.
Probably. There will be a wealth effect as well. So you probably will have an impact. If there is a significant leg down, you will have a wealth impact, and that'll impact consumption as well.
Patrick, I just want to ask you about gold, because last time you were on, you said you like gold equities, and indeed we're seeing a great day for Fresnillo this morning. Do you see much more upside for the yellow metal?
I don't. There could be upside. It's an incredible backdrop for gold. But the equities, I just think gold's a speculative asset at this point. It's hard for me to see how it's going to be a safe haven when there is a liquidity event. The equities, I think, will do incredibly well if gold stays at 4,000 an ounce. Just their cash flow and their earnings will be very strong. So if for 2 years gold does nothing, you get no return. But the equities, I think, will deliver very good returns in that environment.
Okay.
Does it feel like silver's kind of there's a squeeze on? That always feels like a blow off top moment, kind of.
When gold is a safe haven, silver doesn't work. When gold's a speculative asset, silver works way better. And that's where we're at right now, is gold. Silver's just a geared play on gold. So I like equities as a geared play on gold, but silver, if we do have a speculative run up in gold, silver gets that. It's much
just
less
a very quick question from somebody writing in. Is it not dangerous to cut Chinese AI plays with now 5 models in the top 15 top AI models worldwide? Isn't it safer to hedge the bets and have a foot in both camps?
Could be. I just, when we get to that oligopoly model, I do think the U.S. companies are going to be there. China may be there as well. I don't think I'm missing out by the exact same multiples on both stocks.
Interesting. Patrick, great to see you. Thanks for stopping by to see us. We always appreciate Patrick's time. Patrick Armstrong, the CIO of Plurimi Wealth. Let's take a look at the Core 6 and see what is happening this morning in European equities, which are higher, as you can see, and a range of stocks are higher this morning, from luxury to defence to some of the chip stocks definitely bouncing back. ASML, maybe one of the biggest winners, as we saw it battered Friday. We see it bounce this Monday morning. Let's get some more details on what we're watching. Let's start with these mining stocks, these gold and silver stocks. Chloe Melly has more.
Good morning, guys. So, let's start with Fresnillo. That is up 5.4% this morning on the back of a couple of positive developments. So, first of all, it was upgraded to a buy at HSBC, but then also we've seen some positive movement in silver and in gold. So, gold, after a little bit of weakness last week, surged to another record, and then silver also hit the highest in decades. So, obviously, Fresnillo, a miner of both gold and silver, is up on those positive movements. So we are up 5.4% this morning for Fresnillo. Moving on to ASML, which is also in the green this morning. That is because it's the earnings that are coming through in just a couple of days. There seems to be quite a lot of investor enthusiasm, a lot of AI bullishness that is driving this forward, and investors seem to be quite positive going into the earnings later on this week. We're up almost 3% this morning for ASML. Moving on to Legrand, where we've got also some positive movement there. So Legrand is a French company making electrical equipment for data centers, and it was upgraded to a buy by Jefferies analysts. So we're up 2.7% on the back of that for Legrand, which has really benefited from this AI spending boom as well. Moving on and going to a little bit more of a more negative story for Nexans, which is down 7.4% this morning. It makes power transmission cables, and it replaced its CEO effective immediately today. So this management shake-up seems to have been welcomed quite negatively by the market, and we are down quite a bit for Nexans this morning. And finally, let's move on to Exosense, which is a French maker of night vision goggles, and Theon International, which is another company within that sector, acquired almost 10% stake in that company, and that is really driving the shares. Both of those companies have been benefiting from this defense spending boom, and we can see this deal being welcomed very warmly by the market. Today we're up almost 16% for this French company.
All right, Chloe Melly, we thank you so much for those stocks on the move at the open. Coming up, we're going to look at another one that is up. AstraZeneca shares up 0.8%. We'll dive into the pharma space after the White House struck a deal with Astra to lower the price of drugs in the US. Green across the screen when it comes to European equities at the open. The stock 600 up 0.5%. Stay with us. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We're 17 minutes into today's session. As you can see, it's green across the screen when it comes to European stocks this morning. The relief that President Trump has seemed to be dialing back his tariff threats on China. On Friday, we saw such negativity in these markets. The sell-off sparked by President Trump saying that he would add another 100% tariff on China. But we have US futures up and indeed the Stock 600 up 0.5%. But in terms of one individual mover this morning, perhaps not as big a mover as we might have expected. AstraZeneca shares up 0.8%. This after late on Friday, President Trump announced a deal with AstraZeneca to slash consumer prices on some of the company's drugs in exchange for tariff relief. Take a listen.
Today, AstraZeneca is committing to offer all of their prescription medications to Medicaid at most favored nations prices. In other words, the lowest price anywhere in the world, that's what we get. A move that will save American taxpayers hundreds of millions of dollars each year.
For more, we're joined by Bloomberg Health reporter Ashley Furlong. And Ashley, this sounds like good news to me. Are you surprised the stock's not up more?
I'm somewhat surprised, but I think this has already been taken into account by the market. This is almost a replica of the Pfizer deal, cutting prices for Medicaid, cutting prices for direct-to-consumer drug pricing, so that's sort of selling chronic medications direct to patients, not sort of having these middlemen in the way, and then promising to launch new drugs at the same prices as the rest of the world.
As with any Trump deal, kind of big picture, no detail. What's the detail that we still need to know about in terms of kind of figuring out exactly what this is going to mean, A, for patients, and B, for the pharma stocks?
So for the pharma stocks, the two aspects of the deal, we kind of know it's not going to impact AstraZeneca that much. So lowering prices for Medicaid, that's a very small percentage of their revenues.
Right.
And chronic medications, direct-to-consumer sales, again, it's not going to be a really big part of the of overall revenues. What's really uncertain is obviously launching new drugs at the same prices as Europe, really. And that is potentially going to impact Europe the most. So the question is whether drug launches are delayed in Europe. Do you launch in the US and then you just never launch in Europe because you're worried about those lower prices?
Is Europe going to have to pay more?
Europe's definitely going to have to pay more. That's if we want to get drugs, we're going to have to pay more. That's That's the bottom line. Yeah.
But is this, going back to the broad strokes, the start of a broader sentiment uplift for pharma as a sector?
I think definitely. This is showing that AstraZeneca can do it, a European pharma company can do it, Pfizer can do it. The administration has said that they're in discussions with other drug makers. We expect to see very similar deals announced across the board. And I think investors are kind of hoping that this is the moment that, the threat of tariffs for pharmaceutical companies kind of dwindles.
Ashley, we're going to watch this space very carefully. As Ashley says, a reaction, not much of a reaction, maybe because we already know some of the details of this, but a sector story, structural change, looks like it's on the way. Ashley Furlong covering the pharma sector for us this morning. Just want to talk a little bit about what is happening with the futures picture right now over in the United States and kind of what we are getting. We are getting more momentum starting to come in terms of the overall narrative. We're starting to see it creeping a little bit higher. US futures are now getting pretty punchy and are approaching session highs. We have not, though, filled the gap left from Friday afternoon. So just kind of be aware of that when you see what is happening. NASDAQ futures are up by just over 2% now. You've got E-minis up by 1.5%. The Dow actually breaking below some key levels Friday, up by 1% this morning. We don't often talk about the Dow, but I thought I'd just mention it for a moment. Crypto is also bouncing back, but again, some massive losses delivered Friday, and one of the most brutal weekends I can certainly remember. Let's talk a little bit about what is happening here. Nora Melinda joining us now to talk a little bit more about what we're seeing here. That was brutal.
What a brutal session that we saw on Friday. I mean, if you look at the equity market in particular, we did see some massive losses. The worst day for the S&P 500 in 6 months. That's half a year here, of course. But in the crypto space, you're also seeing a massive pullback here. Of course, we know crypto being one of the more speculative parts of the market here for traders. But across the board, you were seeing massive losses. But a rebound here today on this morning. Starting to see a lot of green on the screen.
Yeah, so for crypto, for Bitcoin in particular, we're up 0.4%. Remember, we were below 105,000 on Friday. Now we're up above $115,000 a token. This is a huge reversal. What does it tell you about the state of Wall Street that you've got NASDAQ futures up more than 2% and crypto bouncing back as well?
Well, it definitely shows you the resilience of Wall Street. I mean, if you think about this on a broader scope, this year has been pretty intense here between geopolitical tensions. You've got tariff wars, so many things in focus during this time period. Of course, also economic concerns really underpinning a lot of the sentiment that we've been seeing this year. But nonetheless, you're still seeing the S&P 500 up about 11% year to date. Bitcoin trading at about $115,000 right now. So you are still seeing broad-based, we can call it a little bit of optimism here.
OK, so if gold is analog Bitcoin, i.e. they are related and one is synonymous with the other, we didn't get that Friday.
Right.
What we got was gold sticking, Bitcoin dropping. Are the two, is the connection there reality? Are they the same thing with different formats? Or are we beginning to learn that gold is different, that gold might actually be a safe haven in the way that maybe crypto isn't?
And that's the question that a lot of people have been discussing here, especially as you think about gold traditionally being a safe haven. People are really curious about whether or not there is some sort of bifurcation that we're seeing here between crypto and gold here. So it's going to be something that we have to continue to watch playing out. But that's definitely something I've been having conversations a lot with my sources.
And is it the same across the cryptocurrencies? I'm talking about this rebound in Bitcoin, but do you expect to see similar moves across crypto in general?
I mean, it seems to be pretty widespread. I mean, if you look at some of the data that we had out in the Bloomberg terminal today, I mean, we're looking at cryptocurrencies broad-based, rising about 6% this morning. So really adding lots of money here into the space.
OK. We're going to leave it there. Nice to see you. Nice to see you.
Happy to be here.
Nora Melinda joining us on the crypto story. Let's talk a little bit about what we're seeing in terms of the futures picture right now. So we are bouncing back, but I think what we need to take on board this morning is we're not completely filling the gap yet. So you got this you saw it in crypto, you're seeing it in futures as well. We're getting this drop. We're filling it a little bit. Do we continue to fill it for the rest of the week? Is the dip going to continue to be bought? There was certainly caution overnight in terms of the Chinese session, in terms of buying the dip in Asia. Are we going to see more of a robust performance when it comes to what we're going to see over in the United States.
Yeah, we've seen US stock futures hitting a session high. Nasdaq futures up more than 2.1% at this point. S&P E-minis, it has to be said, only up 1.6% only. Still a rebound from the misery of Friday, but not as major moves when you look at European equities this morning. The stock 600 up 0.6%, even if it is green across the screen for the European continent. You know, it was a moment where you could get out some of your worries about the AI rally. You know, there was so much else going on beyond the tariff story.
I just want to hopefully get the crew to pick up a VIX chart here. So the VIX spiked really sharply on Friday. We saw it popping north of 22. We're back down to 19 now, so we're back below 20. Now, we're not going back to the kind of sort of 16, 17 that we saw maybe earlier on, back end of last week. But now we've got we're down by nearly 20% on VIX this morning. So there's a really big move. Actually, I'm looking at it on a 5-day basis. On a 1-day basis, we're down by circa 10%. But volatility is coming down quite sharply as well. And what that will do is encourage as well some of the systematic traders maybe to come back in as well. So that will affect their risk tolerances and how we see some of this trade working through the rest of the session. So it's really interesting to see. We are coming down, so we've retraced half of the gain that we saw in volatility Friday in terms of where we're coming back down to.
OK, really interesting. Well, coming up on the programme, we're going to check in on the gold rally and some of the biggest stories in commodities. We're going to be speaking to Angelina Vallavina, head of EMEA Natural Resources and Commodities over at Fitch Ratings. We've seen gold hitting a record, silver hitting a record. How do the two interplay? Plenty of questions there. We're also seeing the likes of Fresnillo up 5.8% off the back of those gold moves. So that conversation next. This is Bloomberg.
In case you missed it on Bloomberg Surveillance.
We heard from Restoration Hardware, and the RH CEO was on the earnings call dropping F-bombs. And I imagine a lot of people are having similar issues at the moment trying to sell furniture. You're at a different price point. What's your experience this year?
People have less money. You can say still recovery from the pandemic when it comes to inflationary measures. But then again, our line of business is really about human basic needs. It's about the bunk bed when the kids grow up. It's about the chair and table and so on.
Anne-Marie had one final question.
How are the meatballs? And you're lowering the cost of meatballs,
so I am myself, I'm an intellectual vegetarian. I normally say down here I struggle. I love the meatballs. We actually are running today about 40% of our sales is actually vegetables and plant balls. And personally, I don't love the vegetables, but the plant balls is a great exception. But meatballs is part of our legacy, so there you go.
I love your honesty.
Don't miss Bloomberg Surveillance live every weekday.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
This is the opening trade. We are 30 minutes into today's session, and as you can see, the taco trade is back on. The expectation in markets that President Trump's threat of 100% extra tariffs on China is not going to materialise. You should see US futures this morning. We're up over 2.1% on NASDAQ futures, so reversing the moves from Friday, but it is green across this screen when it comes to the European Open. We're about half an hour into that already, Guy. What's under the hood?
Let's take a look at what is happening below the surface. Taco comes in but one colour, and that is green. As you can see, stock 600 members higher, 489. In terms of the lows, we're down only 100. There's only 100 stocks, so it's a 4-to-1 ratio in terms of what we are seeing. You've got higher than anticipated volume. We're up by, as you can see, 28%. US futures are roaring back. We've not completely filled the gap, but we are certainly seeing a big trade stateside taking place right now as everybody starts to warm up for the session in the United States a little bit later on this Columbus Day. Let's talk about 52-week highs and 52-week lows. We should not forget what is happening in the metals space. We are seeing the miners, the precious metals miners, again having another solid session. I feel like I'm a stuck record at the moment in terms of what we're seeing with Fresnillo, but I bring it up again. Valerie Teitel, I hope you're watching. The 52-week high on Fresnillo, we are now up by 282%. That stock hitting a fresh record high this morning. We're up 2,510 on that trade. But are we seeing the blow-off top beginning to emerge in silver? Is that this short squeeze? Is that what we're watching? Remember, it is also LME week this week. The metals community is in London to celebrate what is happening with copper, gold, silver, platinum, palladium, and that is represented in this stock trade here today. Let's talk about where we are seeing the other end of that trade. Maybe if they have a good week, maybe they'll be buying a few more of these, but certainly Ferrari is on the back foot once again in reverse. That stock down by 21%. It's not been a straight line from there to there, but we have certainly seen the latest strategic plan not going down well with investors. This is a stock that on a one-year basis is now down by 21% and has just hit a fresh 52-week low. We're now trading at 345. Racing lower on that stock, Lizzie.
Well, here's what else you need to know this morning. Data this morning showing that Chinese shipments overseas grew at their fastest pace in 6 months in September. Shipments to the US plunging 27%. Now, Chinese equities have reversed steep losses earlier, and US equity futures gaining, as we say, after President Trump played down his latest tariff threats in a Truth Social post. Elsewhere, French President Emmanuel Macron has announced a new cabinet as pressure mounts for the government to pass a budget. On Friday, Macron reappointed Prime Minister Sébastien Lecornu just days after he resigned. Now, Lecornu will need to tamp down defections from the political groups that have propped up Macron's centrist alliance to avoid another government collapse. And in the Middle East, Hamas has started releasing Israeli hostages this morning, marking the moment of truth for President Trump's fragile peace deal. President Trump has arrived in Israel to herald the agreement, ending the 2-year Israel-Hamas war.
The war is over, okay? Do you understand that? I think people are a lot of reasons why it's going to hold, but I think people are tired of it. It's been centuries, okay? Not just recent, it's been centuries. I think people are tired of it. Yeah, the ceasefire is going to hold.
The President of the United States on board Air Force One heading for Israel. He has now touched down. I can see it on the screen to the right of my monitor. What I'm watching there is the preparation for his Knesset speech a little bit later on today. That is the next major event that we're going to be watching out for. Bloomberg's Horizons Middle East and Africa anchor Jumana Basechi joins us on this story. Jumana, run us through what we can expect for the rest of the day. What is Donald Trump's agenda going to look like as we see the first pieces of his peace plan being put in place?
Yep, absolutely that. It's difficult to overstate the magnitude of emotion that is surrounding this day. Guy, earlier on, a couple of hours ago, Hamas released the names of the 20 hostages that are going to be released today. And now we know that 7 of them are with the Red Cross. That has been confirmed by the IDF. And a short while ago, the IDF also confirmed that Red Cross are on their way to receive the next batch as well. That was met with a huge amount of jubilation. Hundreds of thousands of Israeli families, Israeli public, are congregated at Hashd Square in Tel Aviv in anticipation of that news. And at the same time, you're also seeing these images of Palestinians themselves congregating in Khan Yunis in anticipation of the release of these Palestinian prisoners and detainees, up to about 2,000 of them. That was one of the trickier aspects of the negotiations last week, because Israel had to sign off on the names of some of those prisoners that would be deemed to be acceptable. So this hostage for prisoner exchange seems to be underway. President Trump landed a short while ago, and you just showed images there of him landing in Ben Gurion Airport, Tel Aviv. He was greeted by the Israeli Prime Minister, the President, alongside Ivanka Trump, Jared Kushner, and Steve Witkoff. All of them had been in Israel over the course of the last weekend. He's now making his way over to Jerusalem, so he should be arriving there in about half an hour, 45 minutes time to make that speech to the Knesset, after which he's making his way onto Egypt, to Sharm el-Sheikh, which of course was central to all of the discussions that took place last week and where we eventually saw that breakthrough. But the interesting thing about this summit is the participation not just of Arab leaders, but European leaders as well, the likes of UK Prime Minister Keir Starmer, President Macron, and the focus then will really be about what happens now that this ceasefire is implemented. Questions about the scale of the humanitarian aid that is needed. President Macron just saying now that they need to organize a humanitarian gathering with Egypt to discuss what is going to happen vis-a-vis humanitarian aid distribution. Then, of course, the bigger questions around reconstruction and the reconstruction costs are, per the latest World Bank estimates, and this was back in February, are close to $60 billion. Who is going to fund that? Some big questions still remaining.
And Jumana, how has the Arab world reacted to these events? Is there a sense that the Abraham Accords of Trump's first administration can be now built upon, that the normalization of Israeli-Arab relations can continue?
Well, President Trump is receiving a hero's welcome, not just in Israel, as we just saw, but across the Middle East. And let me just give you, one data point that I thought was really interesting. He's being granted the highest awards, honors by both Israel and by Egypt. Today, President Sisi saying that he will be honoring him with the Order of the Nile. That's the nation's highest state order, similar to the Presidential Medal of Honor that's going to be awarded to him by Israel. So it tells you that he's really got buy-in, not just from Israel, but also from the Arab states as well. And you will recall the reason that this 20-point Gaza plan came into fruition was because of the participation of those Arab leaders on the sidelines of the UN General Assembly. They have their fingerprints on this deal. They are vested in it being successful. And I think that perhaps constitutes a major difference in terms of how President Trump has approached the end of this war versus predecessors or other failed attempts in the past to secure the release of hostages. But again, some of these questions are major. And I mentioned the humanitarian needs and the humanitarian aid, that the scale of aid that is necessary. But beyond that, you also have questions about the future of Hamas leadership. And Hamas officials are saying that while they're happy to accept that they won't have a governing role in the future governance of Gaza, they're not so eager to put down their arms. And indeed, there are reports of the weekend of Hamas officials looking to reassert security control over various parts of the enclave. In addition to questions around the ultimate withdrawal of IDF forces, where that buffer line eventually ends up, and then, the reconstruction costs. It's not going to be easy to rebuild and reconstitute an area that has been 90% devastated. The civilian infrastructure is mostly devastated, and President Trump said it himself. But President Trump seems to think that this is the end of war and beginning of peace. Of course, the coming months will tell.
Joanna, great stuff. Thank you very much indeed for running through all of the issues surrounding this narrative. Joanna Basecci joining us out of Dubai. What we now need to do is kind of fold all of the various narratives that we're watching this morning into the various asset classes that we're watching so carefully. What is happening in the Middle East clearly having an impact on these asset classes. Look at maybe with the story around oil this morning, which is also being affected by what is happening with the trade narrative as well. There was a really interesting development Friday as we saw Bitcoin rolling off really aggressively, and yet gold sticking around at levels. Maybe we are starting to see gold emerging as the safe haven asset. Maybe it's being driven by other narratives. You've got a squeeze on in the silver market this morning, which is fascinating to watch as well. You've got London Metal Week starting off as well. That's going to be a huge focus of attention over the next few days. Angelina Valavina, Head EMEA, Natural Resources and Commodities at Fitch Rating, joining us now. Angelina, great to see you on the show. Thank you very much indeed for taking some time to join us. Let's start off in the precious metals commodity. I've got Fresnillo hitting 52-week highs. I've got gold and silver on the move. Silver definitely looking like a short squeeze. Are we getting towards the end of the process of this massive run-up we've seen in precious metals? Is the short squeeze in silver an indication maybe that we're getting near a top? What's your latest thinking?
Good morning, and thank you for having me on the program. So, look, gold definitely outshined other precious metals in terms of the price performance. It is around $4,000 per ounce now, and we do expect the gold prices to remain elevated. All the commodities prices will be volatile, precious metals, other metals, but the gold is definitely a strong performer. If we look at the fundamentals and the investment demand, fundamentally gold market is oversupplied. And we expect that gold production will exceed the industrial demand by around 1,800 tons this year. And by industrial demand, I mean industrial fabrication demand, including jewelry, electronics, coins, and dentistry. However, gold prices are driven by investment perception and by its safe haven status. So demand from central banks, from investors will continue supporting the gold prices. And these are the key drivers behind the bullish momentum in the gold market.
When I saw, when the sell-off started on Friday, gold was one of the first places I looked. I've been doing this a long time, and often when you start to see big sell-offs gaining momentum, people sell what they can. And gold has always been maybe near the top of the list. That didn't happen on Friday. It happened in Bitcoin. It didn't happen in gold. How significant is that?
Well, the commodities are generally quite volatile. Gold is not an exception, but there is a difference in terms of the gold performance because there are fundamentals there, but then there is also investor-driven demand. And that side of the demand drives the gold prices and provides support to them. So it's effectively safe haven status. So first, the resumption of the monetary easing by the major central banks is providing support to the gold prices and also to the investment demand. But also gold is seen currently as a hedge against major risks and uncertainty. And we've seen plenty of uncertainty, be it trade policy or economic uncertainty. And we've seen plenty of risks in the market as well, geopolitical risks, volatility. So that effectively underpins investment-driven demand, and that provides support to the gold prices. If you look at the central banks, for example, they will remain the net buyers of gold. And this is a way of diversification for them in terms of their holdings. So the volumes purchased by the central banks this year are likely to be around 400 tons. We do expect some moderation in the volumes, but they're likely to remain steady.
Can you just expand, good morning, Angelina, Lizzie here, on the difference between silver and gold at this point? We've got a fantastic chart made by our colleague Valerie Titel showing how, yes, they're both roaring higher, but silver actually surpassing gold when it comes to year-to-date returns. What do you read into that?
I think the relative positioning of different metals really depends on their fundamentals and also where the kind of the starting point in terms of the price rally is. So we've seen some dips, we've seen some increases in the prices. It's just the general volatility in the commodities markets.
And just when it comes to copper, if we put the tariff story to the side, if we can, you've had all these accidents at copper mines, investors looking at metals as an alternative to the dollar, the electrification story as well. When you see dips, should we buy them?
So in terms of the copper market, it's very tightly supplied. And the surplus or the deficit in the market is usually very small. This year, we do expect the market to be in deficit, but compared to the overall size of the market, it's well below 1%. As you correctly pointed out, it is a demand story on the one hand, because there is demand from the standpoint of electrification, from the standpoint of the energy transition. But it is also the supply side because of the various interruptions in the mines in the short term, but also there aren't too many new projects coming on stream in the medium term. That's why the market remains very tightly supplied, and this is what supports the copper prices.
Angela, can I talk about your thoughts on oil? what we got on Friday was the market amping up its concern about what is happening with the growth narrative and what we are going to see in terms of growth going forward. Oil reacted to that. It's popping back a little bit today, and we're seeing a nice little bounce in the crude price. But how susceptible is crude right now to a slowdown in growth? How much is in the price already, and how much could potentially be there still to come?
So oil is a different story to copper or gold because the market is structurally oversupplied. And I do believe that the fundamentals will eventually have an impact on the price, and they are having an impact on the price. So if you look at the significant geopolitical risk, the risk premium baked into the oil price was limited. It's between $5 to $10, despite all the escalations and de-escalations in various regions. So that means that the market is structurally oversupplied. This year, we do expect the demand to grow by less than 1 million barrels per day, which is below the historical average. So we do expect it to grow by 700 or 800,000 barrels per day. At the same time, the supply is growing much faster. So it's likely to grow by over 2 million barrels per day. So there is already the oversupply even this year. So next year, the story is likely to repeat. On top of it, there is a significant spare production capacity at OPEC Plus, which is over 4.5 million barrels per day. So there is a lot of supply in the market. And the other point we need to bear in mind is that there is a shifting paradigm in terms of the OPEC Plus. We see a shift in terms of the focus from the value towards volume and regaining the market share. That's why OPEC is releasing the voluntary cuts to the market, and that adds to the oversupply and to the downward pressure on the prices. Hence, for this year, we have average Brent forecast of 70. For next year, we have 65.
Can I just ask you a question related to today's events as well? Is there a relationship between what is happening in Gaza and what we are seeing with the President of the United States in Israel today and the oil price? Is today a broader de-escalation in concerns around what we are seeing in the Middle East? Does it make it less likely that we see maybe conflict involving Iran? Does it change the calculation related to the Middle East geopolitical premium maybe priced into the crude?
I think it will remain volatile, both the geopolitical risk premium and the oil price itself. Obviously, the risk premium might go down given that there is resolution on the table. But also it remains to be seen what will be the wider impact across the Middle East. And as I mentioned before, given that the market is structurally oversupplied, the geopolitical risk premium in the oil price was relatively moderate compared to what we have seen before.
Angelina, thank you very much indeed for your thoughts this morning. We really appreciate you joining us on the show. Angelina Velovina, Head of EMEA Natural Resources and Commodities at Fitch Ratings. Let's take a quick look at where we sit in terms of the US futures picture. We are definitely casting our eye stateside as we work towards the Wall Street session a little later on today. We're bouncing back. Look, we are bouncing back. This is a strong reaction. Taco trade on this morning, definitely. But we're not completely filling the gap. Does it get filled a little bit later on when we saw a really dismal session Friday? Equities getting dragged lower really sharply. NASDAQ futures are up a little bit more. We're up by 2.1, but that was the epicenter of the action Friday. Some of the big AI trades were under significant pressure. We're climbing our way out of that hole. We're not completely out of it yet, Lizzie.
In terms of what's happening right now in the Middle East, we do have the latest news from Israel Channel 13. 13 more hostages have been handed over to the Red Cross. This is at the centre of what President Trump is there for. Of course, crucial to Israel. It is the moment that they have been waiting for. But what happens beyond this? Once those hostages are handed over, do we see a resumption of the war, the attacks from Israel, is the question. How long can this peace hold up?
We will watch that event. We will certainly watch that throughout this week. There's a kind of long tail on that story. We're also watching very carefully what is happening with Japanese politics this week. US politics, the shutdown is on. And, of course, French politics. The French president has reappointed Sébastien Lecornu as his prime minister. We'll explore whether he's going to get a budget passed by the end of this week, really, I think is the timeline we're looking at. We'll focus on that next. This is Bloomberg.
Asia's not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, well, you know, Trump's been, sort of saying, well, we shouldn't be focused on this, but yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachian Zahran, and this is Bloomberg.
Welcome back to the opening trade. We're 52 minutes into today's session. As you can see, it's green across the screen when it comes to European stocks. The Stoxx 600 up 0.5%, but that's nothing on the expectations from Wall Street. Nasdaq futures and S&P E-minis both up at the moment. Nasdaq futures up 2% as things stand. But here in Europe, we are keeping one eye on French politics. The President Emmanuel Macron announcing a new cabinet as pressure builds for him and his reappointed Prime Minister Sébastien Lecornu to head off France's growing political crisis. Of course, pass a budget. Well, let's get more now with Bloomberg's Caroline Conan in Paris. And Caroline, I have to ask you, is there not a sense of disappointment, anger among the French people that you've got the same Prime Minister, pretty much the same cabinet? I wonder what's going on in Emmanuel Macron's head, do you think?
There was clearly a sense of stupefaction and disappointment again on Friday night at 10 p.m. French time when Lecornu was reappointed just a few days after he resigned last Monday. And we had another cabinet last night, just 1 week after the initial cabinet of Lecornu last Sunday. In this cabinet, a few new faces, prefect of police, former head of the railway company SNCF. These are the figures from civil society, but he kept Roland Lescure as finance minister, who's obviously going to have the huge task of trying to pass a budget over the next few weeks and months, and Jean-Noël Barrot as foreign minister. And in fact, the foreign affairs is on the table today because President Macron is in Egypt, of course, and he actually just spoke a few minutes ago, talking also about the domestic situation, which is quite rare for a president when he's traveling abroad. And he said that now he hopes the country can finally move forward, and there is a duty to guarantee stability, and everyone who's an elected official in a French parliament should respect their mandate to serve the country. And this is actually the first time that President Macron has been speaking about this whole political crisis that's been unfolding over the past week. He's been radio silent over the past few days. So we'll see how long this government survives. The first reaction from the socialists last night, no comment.
Caroline, we're going to watch this one throughout the week. It's going to be a nail-biter. Caroline Conan in Paris. So we all spent our weekend trying to figure out exactly what the trade story was going to be looking like. I know Valerie Teitel did because she messaged me constantly throughout the weekend about what was happening. We saw, obviously, huge volatility Friday. We thought it was going to carry on into Monday. We've moved on from that. US futures are sharply higher. So Valerie Teitel joining us around the desk this morning. Oh, have we moved on from the trade story already?
I mean, it feels like we moved on quite quickly after spending all weekend
worried we're about to see some massive deleveraging event that maybe
Futures were down 3.5% at one point.
It was a very nasty Friday session, and we closed essentially at the lows with that second Trump tweet. So that was the real worry of the weekend. But honestly, the dip is being bought in NASDAQ, and you have to start thinking if NASDAQ is essentially impenetrable to these threats, that perhaps I'm going to become more bullish the AI trade if this dip is bought in that kind of manner. I know you are raising an eyebrow to that.
Is that possible?
Put that finger away. Just think about how there was a lot of anxiety about this AI trade going into Friday already, and we are coming back pretty decently on NASDAQ, and you're not seeing, the deleveraging that we saw in carry trades and FX, the deleveraging, the biggest in history that we saw in crypto. It's not necessarily having any ripple effects to any other markets, and I think it's very interesting that Treasuries are holding on to their rally on Friday. Even though we're looking at bond futures today, they're still holding on to that decent rally from Friday.
Valerie getting more bullish. Who'd have
got
thought it? I know. She tells me constantly. Don't worry. Okay, that is it. We're done Monday morning. That is it. I hope you enjoyed the show. It's been a really busy session. The Pulse is coming up next. There's plenty more to come. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Hamas frees Israeli hostages from the Gaza Strip in the wake of a U.S.-led truce deal. President Trump is set to address Israel's parliament shortly before traveling to Egypt for a signing ceremony on the Gaza peace plan. Plus, the U.S. keeps hopes alive for a China deal after President Trump vowed 100% tariffs and export controls on critical software. Beijing says Washington should stop the threats. So first thing is first, of course, it's a big geopolitical day, especially for everything that's going on in the Middle East. U.S. stocks did go actually quite low on Friday, but they're expected now to recoup some of the losses. This is after President Trump signaled that another tit-for-tat escalation, trade tensions with China, is not inevitable. Now, I'm also looking at the French 10-year yield. Unclear what happens there next. We have a new prime minister, which looks like exactly the old prime minister, Mr. Sébastien Lecornu. He now has to come up with a plan to have a government. Euro dollar 116.03, and then gold you can see at 4,071 at another record high. The picture for European markets is one actually of wait and see. Overall, the CAC 40 is gaining some 0.8%, a bit of more of a modest gain with the FTSE gaining 0.3%. There is, again, quite a lot of news. We also wait for the U.S. It is Columbus Day in the U.S., so a lot of cash treasuries will reopen tomorrow. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump soon arriving at the Knesset in Jerusalem. We did see pictures just moments ago where we understood that President Trump was in a car with the Prime Minister of Israel, of course, Mr. Netanyahu, as they then arrive at the Knesset. I think we're looking at live pictures of one of the corridors that leads into the main room of the Knesset. The U.S. president then set to address the Israeli parliament. I think we're getting a little bit of movement, of course, on that corridor. The latest is, as you know, extremely fluid. There you go. You see the Prime Minister of Israel arriving with Donald Trump. Donald Trump arriving in Israel as Hamas has freed 7 Israeli living hostages from the Gaza Strip in the wake of a U.S.-led truce. More hostages are then expected to be released later in the day. So President Trump's fragile peace deal, local media reports that 13 more have also been handed over, more hostages. Trump has arrived in Tel Aviv to herald the agreement ending the 2-year Israeli-Hamas war. Now, he's scheduled to address Israel Knesset and greet hostages at the parliament. So let's go live now to Bloomberg's Oliver Crook in Jerusalem. So, Ollie, what exactly is the latest on the hostages?
Yeah, so what we had earlier this morning was the IDF and the Israelis taking possession of those first 7 hostages, the first phase of that hostage release. That really was the deal that was brokered by the United States and by Donald Trump, more specifically, that has really been welcomed with adulation, joy, and optimism, obviously across Israel, but also across the Palestinian territory in Gaza, starting on Friday when a ceasefire went into force, and the sort of for the first time in many, many months, hearing the sounds of gunfire and explosions, now ultimately culminating today with the final release of the living hostages. They count 20 in total, and we understand that that will happen in very short order, and they will all be once again on Israeli territory. That will then, Francine, be followed by the release of a number of Palestinian prisoners that have been held by the Israelis, 1,700 of them that have been detained or taken since the attacks of October 7th, but of course also 250 of them that are serving life sentences in Israel for having committed various acts of terrorism. And this was probably one of the more bitter pills to swallow for the Israelis in this whole agreement. And you'll remember that Yahya Sinwar, the former leader of Hamas and really the architect of the October 7th attack, was one such prisoner back a long while back that had been kept by the Israelis, had been released in such a situation, and then was the author of this October 7th attack. So these are some of these sort of tensions and some of the difficulties that are running through what is otherwise a very sort of joyous day here in Israel and also over in the Gaza Strip, hopefully heralding the end of the war. We should say that you really feel it even before you arrive in Israel. As I was coming down in the plane to Tel Aviv just the other day, you could see a building lit up with the Israeli flag, the American flag, underneath it, "Thank you." In that road that Donald Trump just took from Tel Aviv here to Jerusalem, it is a road that is usually lined with Israeli flags. Every third flag has been replaced from an Israeli flag to an American flag, which really shows, I think, the depth of gratitude, the depth of awe, and the depth of friendship that the Israelis feel towards Donald Trump as he arrives here, as he was welcomed by Benjamin Netanyahu, the prime minister, on the tarmac in Tel Aviv. And here, I'm heading over to the Knesset very soon to give a speech there to address the Knesset, which I believe is the first time a sitting American president has spoken to the Knesset Knesset since George W. Bush did back in 2008. So obviously a very momentous day here for the Israelis, for the Palestinians, and of course for Donald Trump, who's sort of validated his foreign policy attempts here. And it's very hard to imagine how anybody else could have really brought this to the table. His very unique style of foreign policy, one that is potentially less ideological, less principled, but willing to bring people to the table.
So we're looking at live pictures. We see, of course, the Prime Minister of Israel, Benjamin Netanyahu, flanked also by his wife, possibly waiting for the president. Do we know what President Trump will say at the Knesset?
Well, I think this will just be really a day to sort of mark the moment for Donald Trump and to mark the efforts of the last more than 2 years since this conflict erupted. He will be also meeting with a number of the hostage families, some of the hostages potentially that were released earlier as well. So that is going to be part of the agenda today. But I think for the Israelis and for Donald Trump, I mean, this is a moment that the Israelis have been waiting for such a long period of time. I think that for many that had despaired that anything could really happen, and then for kind of suddenly, almost out of the blue, a couple of weeks ago, you had the beginnings of the form of this 20-point plan. It was presented and then finally being adopted by all of the parties here, bringing to bear pressure not just on Benjamin Netanyahu to agree to some of the more difficult aspects of it from the Israeli side, but also bringing Hamas to bear, the pressure to bear on Hamas, which was, involved the Qataris, it involved the Turks, it involved also the Egyptians. So bringing this all together for Donald Trump, really, he is the man of the moment. He is the most popular man in Israel, without a doubt. And just a couple of days ago in Hostage Square, you had speeches given by Steve Witkoff, by Jared Kushner, by Ivanka Trump. Every time Trump's name was mentioned in a crowd of hundreds of thousands of people, there were the chants, "Thank you, Trump, thank you, Trump." And when Benjamin Netanyahu, we should say, his name was mentioned, it was booed very widely. So it was at a moment where the American president is the most popular politician, certainly in the world, as far as the Israelis are concerned.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, from the ground. We also understand that the president then traveled to Egypt for a signing ceremony in the Gaza plan. And, of course, as Ollie was saying, the ceasefire deal was really secured after days of these indirect negotiations brokered by the U.S., Egypt, Qatar and Turkey on the terms of the 20-point plan put forward by Donald Trump. Now, terminal subscribers can follow all of the latest developments from the Middle East on our T-Live blog. It's truly excellent, so I urge everyone to go and look at it. Now, Chinese exports rose 8.3% in September from a year earlier, the fastest pace in 6 months, giving Beijing a stronger hand in the latest trade war with the U.S. Meanwhile, President Trump has signaled openness to a deal with China. Well, Bloomberg's chief Asia correspondent Rosalind Matheson joins us now. Ros, thank you so much for being here. So Chinese exports rose to their biggest monthly total so far this year. How much leverage does that give the U.S.?
Well, it gives leverage to China, arguably, because they've been diversifying their exports in the run-up to these trade tensions, but arguably for years. And what's that showing up is they're selling more stuff just to other parts of the world. Obviously, they do rely on the US, but, there is an issue here around leverage.
Roz, I'm just going to also mention to everyone watching at home or from the office that we do see there the arrival of Donald Trump, just being greeted by the Prime Minister of Israel, Benjamin Netanyahu. President Donald Trump arrived in Israel a short while ago. He then addresses the parliament. I mean, the current state is that Hamas has freed 7 Israeli living hostages from the Gaza Strip in the wake of this U.S.-led truce deal. More hostages, we understand, are expected to be released later in the day, and Israel is slated to release almost 2,000 jailed Palestinians and boost aid to Gaza. Now, there is a live blog, of course, put together by our wonderful team on the ground and here in London. Unlike, we understand, previous swaps, these hostage releases are actually being conducted away from public view, with Hamas eschewing some of the pageantry and triumphalism that has been condemned by Israel and others as exploitative. So you can see President Trump there signing, of course, the book, being flanked by the Prime Minister, Benjamin Netanyahu, and his wife. For Israeli authorities, actually, on the hostage and the prisoner swap, this discretion also provides more time to assess the ex-hostages' physical but also emotional condition before they rejoin society. Now, look, the latest, let's listen in if there's any words spoken, and then we're expecting the President Trump, to talk to the Knesset in a short while.
Amen to that.
We'll be here and then everyone should
Okay? I'm perfect. Yes, sir. Amen to that, Mr. President. Thank you. Thank you very much. Move this way. I have one move. Movies. Thank you. Sorry. You're all good. Cameras.
Let the first lady.
Daniel.
Yeah.
White House
That was President Trump, of course, filled with emotion, that room just moments ago as he arrived then in Israel. He also expressed confidence that the ceasefire in Gaza will hold. Let's get back to Roz Matheson. But Roz, I wanted just to pause a second before we get back to China. I mean, this is a hugely emotional moment for many families, but everyone, of course, watching this. What happens next?
Well, obviously he's going to address the parliament, but then he goes on to Egypt, and we have a meeting there involving a whole lot of countries around the world. And this is about also bedding down the longer part of this deal. I mean, the hostage release today is hugely important for Israel. The Palestinian prisoners being released also, that's something that's been negotiated and stalled for many, many months. But after that comes the really hard work, which is what does Gaza look like after this conflict? For a start, Israeli troops have been pulling back. We've seen that start to work, the ceasefire begin. But what are the longer-term arrangements around that? And particularly, what are the longer-term arrangements around the governance of Gaza? I mean, there are some parameters there that Benjamin Netanyahu says are his red lines in terms of the disarmament of Hamas. Doesn't really want the role of the PA in Gaza in the longer term, but what is the role of the Palestinians in, Gaza going forward? And then beyond that, even in the longer term, what does it mean for the Middle East? Because, of course, this war has caused tensions across the Middle East, including with Iran. And Saudi Arabia has kind of pulled back from thinking about joining the Abraham Accords, which is really what Donald Trump wants in the longer term, this idea of trade and investment business across this region, and saying, for them, a part of that's going to have to be talk about a Palestinian state. So you've got a lot of complexities here that are going to go on in the longer term. And so we've got this agreement now. It is a big moment, of course, for Israel and certainly also for Donald Trump. There's a lot of hard work to come.
Yeah, Roz, I mean, going back to China, Donald Trump is, of course, seen now as someone that can broker peace deals, that has done for a lot of people the unthinkable. What does it mean for his relationship with China?
Well, it's interesting because in the immediate term, he's saying that he might, in Egypt, start to come in on the tensions we're seeing now between Pakistan and Afghanistan on their border. There have been deadly clashes there. And then, as you say, really for him, a key relationship is the one with Xi Jinping. And what is the China-US relationship that goes forward? I mean, possibly, are they going to meet still at the end of the month? Are they not? Is this all negotiating tactics and positioning that's going on? It's a very delicate dance, if so, because there are lots of threats flying, and each country does have that leverage, as we're talking about economically. China trying to diversify. The US does have some levers to pull with China at the same time. But will it come down to that personal relationship that you see between Xi Jinping and Donald Trump?
Let's also get into the conversation. Callum Pickering, Chief Economist at Peel